This content is for informational purposes only. You should not construe any such information or other material as legal, tax, investment, financial, or other advice. Nothing contained on here constitutes a solicitation, recommendation, endorsement, or offer by Draper Goren Holm or any third-party service provider to buy or sell any securities or other financial instruments whatsoever.
What is the future of decentralized finance? Affordable, decentralized, and sustainable. Experience the power of DeFi in ways you've never experienced before. Plenty allows you to use DeFi tools that you've grown to love and adore, but without the crazy fees associated with proof of work. Enjoy sustainable yield farming programs that are cost-effective, liquid, and built on the powerful Tezos blockchain. Visit plentydefi.com now to get started.
Hello everyone, and a very warm welcome to our global audience joining us today for the second annual Global DeFi Summit. My name is Jessica Walker and I'll be hosting you through this jam-packed day, and we have an amazing lineup of things in store for you all. So with one stage we have dedicated solely to decentralized finance, the hot topic of 2021, and the team have really thoughtfully crafted content that has not been seen anywhere else, with speakers who are masters of DeFi in their own respect. So I really hope that you enjoy your time here and get the most out of the industry's largest decentralized finance conference. And also, furthermore, I want to give a huge special shout out to our title sponsors of Plenty DeFi, and a thank you to all of our sponsors that actually made this event possible. We also have our gold sponsors, Circle and Ranger Protocol, and then we have our silver sponsors who are ScaleSwap and Lunar Crush, and of course our bronze sponsors as well. So we have Prime DAO, Stable Tech, Casper Labs, Cello, Dylan DAO, Rivet, Bainbridge, IBG, and Maverick. Okay, so to start off our morning, I do want to bring on the team at Draper Goren Holm, who helped produce and really built this entire event. So guys, please help me in giving a very warm welcome to Joseph Holm, Alan Goren, and Alan Levy.
Boom. What's going on, guys? Good morning.
Hey.
How we feeling?
Great. Going good.
We need more energy over here. This is there we go. Boom. Guys, we've been preparing this thing for what feels like 2-3 months. Over 80 speakers, 22 sessions, and hours and hours and hours of content. I'm very excited. I don't know how you guys are feeling, but I'm stoked.
I'm super pumped about the whole day, jam-packed, like you said, and a big shout out to you, Adam, as always. You've done a great job. You put these events together for us like a master. Always make us look good. I'm joining you guys from Dubai tonight with some amazing updates from Draper Goren Holm. Tim will join us later. My friend Saeed Al-Maghdari will join us later. And we have a lot of really cool updates for you guys.
Yeah, we got, we've been putting this event for so long, and the first one we put together, what was it, August 2020? This is when DeFi Summer first came out. We had the Aves of the world, the compounds of the world, just starting to make waves, and everybody aping into all this different stuff. And we've come such a long way since then. A ton of rug pulls, obviously, but also a ton of amazing projects that are joining us here today, from Stani of Aave, from Sergey's Chainlink, or Chainlink Sergey. We have, the list goes on and on and on, and I'm stoked. But without further ado, Alon, I want to hand you the mic because you got some fun stuff planned for us.
All right, boys, I'll see you on stage a little later. Thank you. All right, everyone. Oh, sweet. I see that my screen is being shared already. Everyone, thanks again for coming. We're really excited about this. I always want to start the event. The main real start of the event is when we bring Lunar Crush on and they give us the market updates. But I realized after one of these events that we jump in, we do all this stuff, and a lot of people watching don't necessarily know who we are. So I just wanted to do a super quick version, not one of those boring conference things where we sit here for an hour and you hear about a company you didn't want to hear about. This will be less than 5 minutes, I promise. We're Draper Goren Holm. We're an early stage blockchain venture fund. Our full-time jobs are to invest in the best, blockchain startups in the world. And I think we're doing a pretty good job at it. We host, a ton of events all year long. We're startup entrepreneurs ourselves, and we use these events to help promote the industry, but to find, like I said, the best startups in the world. And it's really important, especially when we're talking about DeFi, to clarify that we're not the typical crypto traders where you buy at one price, sell at another price the next day. We have a really hyper-focused long-term vision. We invest in startups we believe will be big 10 years from now, not just from day to day. And that's our business, right? We invest in companies early. We're the first investors in a lot of the companies that we invest in, a lot of the DAOs we invest in and groups like that. We use our platform, we use the events, we personally participate, we amplify everything that they do, and then our fund doubles down on those groups when they grow. And it's pretty darn simple. And we've done what I feel is a kick-ass job so far. We're at about 23 portfolio companies, so this is even some of these numbers are even bigger today. Everybody knows Tim Draper, legend in the space. We don't need to go into everyone in this version of the deck. I'm Alon. Joseph, who you just met, is my partner. We started this together. And we've got some of the best team in the world. You guys already met Adam. We're a part of the Draper Venture Network, which is the most active VC network in the world. And our sort of unfair advantage as a group is really, really simple. We invest in the best teams in the world early, and then we used our increased resources. We use our fund. We use everything, the conferences, everything we do to amplify all the opportunities for them. And I think we're like I said, we've done a great job so far. And these are our portfolio companies, or some of the portfolio companies so far. I think there's one or two that didn't make it onto this quite yet. So thank you guys. Shout out to our portfolio because they really are the reason we're here. I always joke that we get to be judged by them. We get to use them as our front face, and we put ourselves in the room with the smartest people in the industry. And so, thank you so much for joining today. This is going to be really fun. One of our first portfolio companies, and one of the greatest examples of that are our boys at Lunar Crush, our friends at Lunar Crush, and I think Joe is next on stage, but Jessica will probably introduce her much better than that.
Time is ticking away. Ditch the banks and join the DeFi movement on Tezos blockchain. What if we told you there was an affordable, fast, and sustainable way to leverage the power of decentralized finance, all the while empowering the next generation of finance. A proof-of-stake implementation into decentralized finance, taking up to 2 million times less energy than proof-of-work networks. It's time to start caring about your impact. It's time to care about the future. Visit plentydefi.com to get started. What is the future of decentralized finance? Affordable, decentralized, and sustainable. Experience the power of DeFi in ways you've never experienced before. Plenty allows you to use DeFi tools that you've grown to love and adore, but without the crazy fees associated with proof of work. Enjoy sustainable yield farming programs that are cost-effective, liquid, and built on the powerful Tezos blockchain. Visit plentydefi.com now to get started.
Before we bring on the wonderful Joe Vazani from Lunar Crush, really quick, Jessica, how are you? I feel like you just kicked off the show with no forgiveness. How you doing?
I'm very good, thank you. How's everything with you? Adam, it's been a long time since the last conference.
I know. Last time was Security Token Summit, but I just wanted to give you a shout out and give you some love. You're going to be hosting this event. You've been in the DeFi space for who knows how long. You're with Being Crypto. You're doing all sorts of things. I wanted to ask you, like, what are you excited for to see at this conference? Like, what's like keeping you awake?
Well, this is really interesting. So I kind of am a little bit biased because I have a panel in a few hours that I'll be moderating with some amazing speakers, JD Salvega, a few other great guys. And that will be on NFTs in the DeFi space and how that will be achievable. So that's something that I'm really excited about because that's bringing together two huge trends. But overall, I cannot believe how much the DeFi space has grown in the past 2 years. I know Alex Mashinsky from Celsius was talking about the concept of DeFi maybe 3 or 4 years ago, but he didn't use the term DeFi. If you go back to some of his previous interviews, he kind of gave this yield farming and making your money work for you element. And it's amazing to see people actually adopting it. I use DeFi and I love it. For me, I think it's a no-brainer. I'm telling my non-crypto friends about it. Adam, you're based in the US. I'm not sure how it is with you and your social network, if you guys are using DeFi yet.
You know, it's funny because unless you're like still very crypto native, it's still hard to use DeFi. But I think what I'm excited for this year's conference is a lot of the conversations that we had last year during the peak or the entry of DeFi summer was a lot of these new projects that were just launching off the ground. They didn't have the best UX UI, but they were usable to an extent, right? And I think after a year of going through that, you're seeing a lot of projects improve the usability, really thinking about mass adoption. And a lot of the conversations that are going to be happening today will consist of that exactly, right? So we'll see what people have cooked up and we'll let it go from there. But let's bring up the next guest. I'm really excited. He's going to be doing like an entire like health analysis of the market and telling us what exactly people are talking about. So without further ado, let's bring up Joe Vazani from Lunar Crush.
Amazing.
Hello, everyone, and welcome. There it is. What an honor it is to kick off this year's summit. My name is Joe Vazani. I'm the CEO of Lunar Crush, and I have the privilege of kicking things off with an update at what will be the very bottom of the bear market. Yes, you heard it here first. But don't panic. Love him or hate him. Elon's been sending cryptic messages since the day he's been in the public eye. So fasten your seatbelt. Enjoy the ride. Crypto and DeFi are not going anywhere. And here's why not. Life for all of us began simply. Buy a little Bitcoin. If you joined a little later, possibly you dabbled in Litecoin or Ethereum. Or if you were really wild, who knows, maybe you grabbed some Dogecoin before the rest of us. So congrats on that. All in all, though, life was simple. Public blockchains were here and the double spend problem was solved. Then here comes DeFi. And true to our ability to make everything impossible to understand in our industry, DeFi began before we even explained what decentralized meant to software. But I shall not digress. So what's next after DeFi? In short, the disruption of everything. And why? Because money does not create innovation alone. It's a pivotal building block, yes, but it does not fund the next generation of entrepreneurs, does not create liquidity. It simply exists. It's there, ready to be built on. So what does disrupt everything is lending. And here's just an example of that, and one of them. Today in the US, we have over $10 trillion in mortgage debt. This is the amount of money in total homeowners owe on their homes. And on average, the loan to value ratio of someone getting a new loan today is close to 90%. That means that we're all borrowing 90% of the money needed to buy a house, and from a bank, of course, right? So when you combine the amount of debt refinanced a year plus the number of new loans, that means each year there's almost $2.5 trillion up for grabs. And right now, DeFi does not touch any of it. And to reiterate, this is the US alone. So the enormity of the market cannot be understated at all. So what other industries require lending? This list goes off of the page on purpose, but it's everything else. The DeFi train that disrupts everything has left the station, and it's coming for your industry too. And so when I gave this update last year, we were just finishing DeFi summer, not too dissimilar from the endless summer, a picturesque vacation that seemingly goes on forever, but in reality there were sharks everywhere and you paddled out without a leash. But here's what DeFi summer looked like, and this is October of 2020, and here come the charts. But total value locked reached around 11 billion. And that chart looks ominous and unsustainable, right? Even with one of the largest price retracements in crypto history, we're still 5 times higher in the Ethereum DeFi community than we were just 9 months ago. Community, that word, it would not be a Lunar Crush update without one. And so what are we looking at here? At Lunar Crush, we coined the term, without a community, there is no crypto. And it's one thing to look at the total value locked in DeFi, and it's another to look at the total number of individuals who are talking about it. Because as we know, nothing attracts a crowd like a crowd. And on the blue line, you can see last October, we had roughly 38,000 unique individuals posting across social media networks about cryptocurrency. And 2 days ago, on literally one of the worst days that we've seen, we had over 400,000 unique individuals talking about crypto online. And we call them contributors. So that is 11 times more people joining the conversation on a day when no one wanted to even look at their portfolio. So the lesson here, and I stole this from my co-founder, John, yesterday, and he might not even know it, is for every one person back in October 2020 who wanted to buy that Bitcoin you were thinking about selling, there are now at a very minimum 11 more people trying to buy that. So a way bigger market. And why does total people mean more than total value locked? Here's an example. Another layer one who had joined the mix is Polygon. And in February of 2020, the community started talking. The crowd began asking questions, posting responses, and trying to figure out together online what was happening with Matic Network. Sure enough, with their new launch, TVL started to fly in April, and so did price. And on average, there are over 8,000 people a day posting about the network now. We're back in February, it was less than 500. So the lesson here is community begets value and not the other way around. And I couldn't leave you without sharing, a shout out to our DeFi for Boomers platform, which I wanted to touch on, which is someone like a BlockFi. Even though most folks in our space are probably yelling at their screen right now, you cannot dismiss the fact that CeFi platforms like BlockFi have paved the way for a different generation to join and become fully decentralized. Because like I said at the beginning, we have a long way to go when it comes to branding in our industry. And the CeFi tools are just doing it better today, plain and simple. So let's work together and let's change that because as you can see, it's still called AUM, which is assets under management and not total value locked. So thank you all for listening today. Give us a follow at Lunar Crush on Twitter. where you'll find all of the social metrics I mentioned today. And back to you guys. Thank you very much.
Time is ticking away. Ditch the banks and join the DeFi movement on Tezos blockchain. What if we told you there is an affordable, fast, and sustainable way to leverage the power of decentralized finance, all the while empowering the next generation of finance? A proof-of-stake implementation into decentralized finance, taking up to 2 million times less energy than proof-of-work networks. It's time to start caring about your impact. It's time to care about the future. Visit plentydefi.com to get started.
An amazing keynote there from Joe. And one point that he said, in case any of you missed it, just to highlight, that was for every one person speaking about crypto last year, there's now 11 speaking about crypto this year. So he made some amazing points. Head over to Lunar Crush if you do want to see more about what the guys are doing there. They're doing some amazing industry work. Now it's time for our first panel discussion of the day. And it's on the current state of DeFi and where we're at when it comes to the current progression, and also what we can expect for this DeFi summer. It's moderated by Alex Faisal from Swissborg. We're going to take it away and take a look at our first panel of the day.
Hello, everybody watching out there. Hope everyone is well. Mic is working. Audio, everyone can hear me?
All good, Alex. Yeah, we can hear you.
Awesome, guys. So as you know, we have some amazing guests today. And if we can start off quickly with an intro, just maybe 30 seconds each for you to tell us who you are, for those who do not know you. And for those who do not know you, you're in for a ride today. This is going to be really, really exciting. So Vance, if you can kick off, let's go for it.
Certainly. I'm Vance Spencer. I'm one of the partners at Framework. We're a DeFi-focused seed fund.
Hi, I'm David Blesnek. I'm the founder and CEO of Total, and at Total, we're a DEX aggregator.
Hi, everyone. I'm DeFi Dad. I am a DeFi super user, educator, and investor, and I'm also a part of the core team at Zapper.
Hi, everyone. Partner at Parify Capital. We're a DeFi-focused fund, and happy to be here.
Super excited, guys. It's going to be really, really hot today. My name is Alex Faisal. I work at Swissborg, and I'm also the host at Kryptonize TV on YouTube. So please have a look there. And first question, gentlemen, I think it's a really important question. One of the most meaningful conversations that I have this year was with Eric Vouris. And Vouris was telling me, when I asked him the question about what was the definition of Bitcoin, because there have been so many changes in defining Bitcoin, from electronic peer-to-peer cash, digital gold, gold 2.0, the absolute store of value, et cetera, et cetera. I would love to hear from you guys, and maybe kicking off with you, DeFi Dad. What is the definition of DeFi in 2021? And I know you're really good at making things super simple and digestible for the newbies as well. So if you could kick off on what is the definition of DeFi in 2021 and what matters the most to you?
Yeah, one of the hard parts about defining DeFi is you normally have to talk with someone about their experience with finance. But I think more generally speaking, for those of us that are already in crypto, I like to think of DeFi as it's peer-to-peer digital finance. And what really is the linchpin here is it has to be using cryptographically provable, scarce digital assets. So this is all pretty standard stuff for us if you're into Bitcoin already, or if you're into Ether. But where DeFi sort of launches off of, I think what Ether and Bitcoin established with a digital store of value is you start to build parallel use cases to what's in finance. And so TLDR is you can do everything from trading to lending and borrowing, insurance options. Basically, it's every financial use case and then new digitally native use cases that are built with DeFi. So Oh, and one last thing, no KYC, no AML, no sign up, just hook up your wallet, your self-custody Web3 wallet like a MetaMask, and you're good to go.
Beautifully put, DeFi Dad. That was a great definition. Santiago, how do you feel about this? Do you agree with DeFi Dad's definition? And just speaking of which, no KYC is one of the big topics like these days. Is that a really critical component for you as well, Santiago, when it comes to DeFi?
To some extent it is. I mean, I think it's this idea that it's a open, permissionless system that anyone can come with. Basically, anyone with an internet connection can just take advantage of financial services that otherwise are pretty siloed or hard to access for most of the world's population. So there's certainly an element of that. I would extend that for, say, a big part of why I think DeFi is super powerful is this idea that the programmability of money and minimizing counterparty risk. Like, generally speaking, like, humans are really bad. At some point, they make mistakes. And there are very high stakes in finance. And so that creates a lot of fragility in the financial system where no one really knows when you deposit your money in a bank, you don't know how that money is being used. And so you need all this regulation to make sure that someone is policing bankers. But time and time again, we learned that those bankers make mistakes or do really stupid stuff with your money, i.e. the 2008 financial crisis. And the whole idea of DeFi is to create a more resilient, open, like where code is law and you program if-then statements to money where you don't need a banker and you're in control of your money and you minimize counterparty risk. And that inherently creates a much more resilient, strong, anti-fragile system. And that's really what's so powerful about DeFi, more so than just anyone can come in here. It's a combination of both things that make DeFi, I think, the future of France, as we call it.
Awesome. Dave, I'd love to hear your comments on that. Is there anything missing into that definition to make it the perfect one? Obviously, you mentioned no KYC. A lot of people are talking about their own definitions. How do you define it? Is there anything else that really, really matters when understanding DeFi?
Yeah, I think these guys have started off pretty good with the definition here. I would agree with most of what's been said. To me, it's permissionless finance. It's open finance, as some people have even tried to rebrand the space. And I would agree with that. It's, the killer application or the killer feature of DeFi is the permissionless aspect. Anyone being able to access it without the permission of a custodian or of an intermediary really is that killer feature for all the reasons that Santiago pointed out and DeFi Dad started on there. I would say one other piece that's that's really important to DeFi and to Total specifically is the composability of these different applications that run on Ethereum and other open blockchains. At Total, we do aggregation of decentralized exchanges. We focus on getting the best price for your, swapping your assets on decentralized exchanges. And the composability of the applications allows us to be that aggregator without asking permission of any of the venues. We simply integrate with each of the decentralized exchanges that exist and live on Ethereum. And then we provide the best execution by routing orders, to the best venue or maybe to multiple venues in one trade. So the composability aspect of the space, I would say, in addition, is another part of the definition.
Thank you so much, David. Obviously, Vance, you have probably the most difficult part because a lot has been said, but we just had non-custodial as well, as in control and ownership, on top of being open, permissionless, accessible, no KYC. Anything else that, Vance, really matters to you?
I think the rest of the panelists did a pretty good job describing kind of what DeFi is. Blockchains are built for a trustless transfer of value, and any logic on top of that is DeFi. So it could be an escrow contract, an insurance contract, borrow, lend, trading, derivatives. But really the whole point is that these things are open developer platforms that are built for trustless value transfer, and you can code on top of them, which is DeFi. So that's kind of, I think the rest of the definition, but the other panelists did a pretty good job.
Awesome, Vance. We'll stick with you because you had the hardest part to answer. So question number 2, I'd love to ask you guys, as you know, there have been many loopholes recently, hacks, exploits with Titan, Belt Finance, Visor, et cetera, et cetera. What are the biggest risks and what are the lessons that we've learned up to now? Vance, if we can kick off with you.
So I think the Ethereum community has gotten pretty good at building robust smart contract auditing, formal verification, even kind of like peer-to-peer code reviews where things are kind of reviewed in a tournament style, to the extent that, a lot of the hacks that were happening on Ethereum, a year ago, aren't really happening today, or at least they're happening in much smaller size. And you've seen these hacks shift to different ecosystems that don't have the same kind of level of developer quality of code, BSC, even some things on Matic. And I think that these problems will continue to spread across, the multiple layer ones as they're different code execution environments. It's written in different languages. Like things on Solana, for instance. I don't know if there's a security auditing firm that works on those projects quite yet. So I think that a lot of kind of the standards and the tooling have been built out for Ethereum, and these other ecosystems will have that in the near future. But I think it's just been kind of a general maturation of the space and the standards that we have. And ultimately, it was good to get those out of the way at a smaller, TVL AUM size, because the ones that you see on modern day scaled blockchains like BSC are 150 million plus in a single fell swoop. So hopefully that doesn't continue to happen, but there's always a chance that things don't kind of evolve.
Awesome. And Santiago, I know that you are quite vocal about Ethereum as well. Do you agree with what Vance had to say here?
Yeah, I definitely agree with that. Like, I think a lot of the development that we see is in Ethereum, but there's certainly a lot of other interesting ecosystems cropping up. It's important to realize that this space is very, very early and nascent, and so I don't really know if you're investing in AOL or MySpace or Facebook or Google. So generally, I think there's a lot of experimentation. The nice thing about crypto and DeFi relative to the internet is that everything is open source, and so it moves much the than what you saw in the internet. And so there's going to be a lot of experimentation. There's going to be a lot the side effects of experimentation, of course, as you alluded to, are hacks, unfortunately, are failures, and of course we know failures in crypto can be pretty devastating. So it's important for everyone to realize that it is to some extent a very risky adversarial environment, and so you just need to come into this thinking that is a very real possibility and sort of manage risk accordingly.
Awesome. Thank you so much, Santiago. DeFi Dad, you're really good at breaking down things very simply for people following you. In terms of the risk and sides of things, obviously we just heard from Vance and Santiago that Ethereum has more tooling, has more auditing. It's just happens to be more experienced, right, in offering these applications, these decentralized applications. But what are the risks here, and how do you communicate them with your crowd?
Yeah, see, this is something I think that we've done a much better job of this bull run as a community. I think that the conversation around risk has been very upfront, this time around. So, I can speak personally to every tutorial I've ever made, whether it's through a Zapper Learn, or whether it's through my own YouTube. We talk openly about the fact that there's smart contract bug risk. We talk about the fact that there can be Oracle failures. There's systemic risk just in the fact that everything is so composable. There's even I think more outlier risk of what happens if pegged assets like tokenized Bitcoin or stable coins depeg. But at the end of the day, I think the reason the community obviously keeps growing is people learn about those risks and then they see what the returns are, or what the potential returns are. And so at the end of the day, DeFi is about letting you be an adult and make your own decisions. And so as long as people are well informed, I sleep well at night. I think what's sad is when you see newcomers who probably have a tougher time differentiating between what's more of a blue chip project versus one that is a sloppy or copy and paste. Some of the ones you mentioned there, I would definitely classify as sloppy copy and paste. And anyways, long story short, anyone can get burned. So, risk management, just knowing how to size your position in DeFi, it's one of the most useful tools you can learn. Just understanding, I'm not going to put 50% of my portfolio into a DeFi farm. I need to think about what happens if I lose it all, and again, size that position appropriately.
Thank you so much for that answer, DeFi Dad. And anything to add, Dave, on what DeFi Dad was saying about sizing your risk, understanding risk management? What are some lessons that you've learned up until now, until 2021, with regards to DeFi?
Yeah, all that's really important. I think there's an onus on the individual, even more in DeFi than in the traditional finance world without protections that exist. You really need to be, pragmatic. You need to be conservative. You need to really understand your risks. I mean, generally speaking on the topic, I think it's awesome. I think the greatest parts of DeFi, and as we're talking about, can also be its greatest drawbacks, which is, I mean, it's similar to the concept of America, right? Freedom of choice, freedom of decision-making, and then people make bad decisions. So then they have to live with those bad decisions. So similarly, in an open free market, we're seeing creative destruction in real time. And seeing that happen, you're going to see some things you don't want to see. But again, that's what we fought for. That's what we want to see. Is we want to see this open, permissionless system that doesn't have interference, doesn't have, it's a real free market. And when you have a real free market, you're going to have these instances, you're going to have these drawbacks where the onus is on the individual to be more, take more responsibility for themselves. And that's hard for people to do because they're used to a system where there are a lot of levers that are put in place to protect them, but that also creates the deadweight loss in the economics of the traditional system. So that's core to the entire value proposition and also the drawback. And I would say that the biggest threat really isn't these components, these risks of, I think the free market will figure it out a lot faster than a non-free market. You'll see things, and we've already seen it, flashes of it. There's insurance, there's mutuals, there's things coming about, there's audit groups, there's ways to reinsure. There's all these types of cool free market things that are coming about as part of this, as I mentioned, creative destruction in real time. To me, the biggest threat is regulation, is the government. Them coming in and really trying to put a KYC AML, trying to make a permission system within DeFi, trying to squash innovation. Maybe not even on purpose because they think they're doing the right thing. So to me, that's even bigger risk than what we see going on right now.
A lot of people are talking about those risks. Thank you so much, gentlemen, for sharing. So far, guys, have you seen, we've talked about the definition of DeFi. We've talked about what are the lessons learned and the risks up until 2021. So I'd love to ask you about the current state of the market. Santiago, this is something that seems to interest you a lot. Obviously, a lot of people are freaking out. Oh, are we in a bear market? What's going on? How does this impact DeFi specifically? What are the pros and cons? There's always two facets to every story. So if you can kick off by sharing a more macro perspective on where we are right now, Santiago, that'd be amazing.
Yeah, there's a lot to unpack there, but I'll start from first principles. You either believe or you don't believe it's just going to transform finance, full stop, right? I mean, if you take if you have a low time preference and you take a 2, 3, 5, 10-year view, then it's hard for me to believe that this is not going to materially change finance. Why even by themselves? You look at PayPal, you look at Visa. I think the Pandora's box to some extent has been opened. And people realize that there's a better way to do things. And banks themselves are even motivated. Why? Because they can do things faster, better, cheaper. And any technology that gives you not a marginal improvement, but a step in improvement to your current workflow, even to traditional financial institutions, is going to get adopted, right? And so I think it's a matter of time where where you start seeing real mainstream adoption of this stuff. And most people might not even realize that all their current apps on their phone, whether it's JP Morgan or Wells Fargo or Robinhood, a lot of those applications might be powered by DeFi in a not too distant future. They might not even care about it. They might not even know what DeFi is, but what they'll see is a lower interest rate, a more competitive interest rate. They can issue mortgages in seconds, not days, without having to constantly share all this information, across banks. They might get access to cheaper credit, better rates. And so generally speaking, I think that's where DeFi is going. Of course, there's a discussion around, are we in a current pullback? And of course, the markets have rallied quite a bit over the last year. It's hard for me to comment on that because I'm not here. I can't time these markets. It's impossible. I haven't met anyone that can do that systematically. If there's someone out there, I'd love for him to reach out to me because I can't think of any investor throughout history that has been able to predict markets and market cycles. They can draw lines and charts, which is funny, But I think like if you stay true and close to the metal, to the founders, I think there's a lot of innovation happening. There's a lot of on the human capital side of things. To me, that's a leading indicator. You see more developers. To Van's point, these are top quality developers. Like 5 years ago, you would have gotten crappy developers interested in this stuff. Now you get to see people have really high opportunity costs. People at Facebook, at Brex, and some of these like tier 1 startups in Silicon Valley and elsewhere, really interested in DeFi because it's a hard problem to solve and there's a lot of innovation. So I think developers naturally gravitate towards open source communities. And so the combination of all that leads me to believe that this is going to be explosive. Of course, don't get too excited. Don't play around too much with leverage. Don't do dumb stuff, right? I mean, the what I like to focus on is, and the last thing I'll say is, if you're patient and you just stay close to founders and help them and join communities and be helpful to projects that you affiliate yourself with, I think you'll realize that there's a lot of true innovation here. And to me, that's most exciting.
I'd love a comment on that. Thank you so much, Santiago. So Vance, obviously we went through close to $100 billion of total value locked in DeFi to 50 today. Are you on the same wavelength as Santiago, where this is just a flash in the pan and fundamentally what it represents, it's much bigger and it's not a big deal of what's happening currently in the markets?
Yeah, I'm on that same wavelength in terms of belief in DeFi and the idea that it will transform finance in the next 10 years. I think it'll happen faster than that. I do think it's worth noting that this isn't a dip. Some of these coins are down 80-90%. And so now it's kind of about, all right, which ones will emerge, which ones will die. And if you use 2017 as heuristic, and I think it's a bad heuristic, but basically all we have to go off of is that 95% of these things will be worthless. And the 5% that are worth something will be worth a lot. And so, now is the time for people to kind of do some soul searching, do some more research into the things that they may have invested in without fully understanding, and get a good grok on who's going to deliver and who's just going to kind of fade into obscurity. And I think a lot of these teams will kind of fade into obscurity because they either don't have the right team, they don't have the right product, they've raised too much, the incentives are misaligned. And so I'm looking forward to seeing a lot of that exit the market. And I think it's totally fine to acknowledge that these things are down so far. I think it's a healthy part of the process. When, the thing that worries me the most is, your 18th developer on your protocol that joined 2 months ago, say this was at the peak, he's now, worth 20, 30, $40 million. And there's really no reason for him to work on the protocol. He's already rich, he can do it out of the goodness of his heart and the desire to deliver a product, but the incentives are fundamentally misaligned relative to the amount of progress that they've made on this product. And so for those people, for the people that are now getting into the space, these Web 2 developers that need to be properly incentivized, that's kind of the thing that this dip means to me, or whatever this is. And I'm happy to see it. I think it's a good investment opportunity. We're certainly buying stuff. We're as optimistic as ever. We think there's a lot of catalysts and it doesn't really, perturb us too much.
Amazing, Vance. I felt like I was a bit of a negative Nancy today, so it's good that you bring a little bit of positivity there as well. David, any comments? Are you also seeing this extremely positively where, it's time for people to do some fundamental research, try to find that 5% of projects? What are some other things that you're looking at in terms of the current market conditions?
Yeah, I mean, we know specifically for Total, the approach that we've taken and the area of the industry that we focus on being exchange, being decentralized exchange. Obviously, we're involved with a lot of the volume and of these long tail assets. And, the thesis behind our approach being that we, personally, a reason I've gotten into that part of the space is because I could, just like as Santiago had pointed out, not going to pick which of these are going to go, up or down. And it's almost impossible to do that, especially as you go even further on the long tail. It gets even harder to pick out that, those winners. So by being, an enabler of the process, right, being part of that exchange process, peer to peer, and facilitating that part of the business, that part of the industry, we think that that's going to continue, right? Like there's going to be more and more assets. There's going to be more and more individuals involved in the space. There'll be more and more users. So as long as the entire space grows, and as long as the interest in the user base grows, and we're very early on in the life cycle or the lifetime of this industry, and so that's we're making a leverage bet on the entire industry itself. So yeah, I think we definitely take a long-term view. I think projects that continue to take a long-term view are going to be winners, are going to setting themselves up to grow in an organic way, and really follow the growth of the actual growth of the space, not get caught up in the hype cycles, not get caught up in the short-term blips, but really position themselves to grow organically with the size of the market and where we are in the space.
It's funny, Dave, because some people actually say that where the real money is made is during bear markets, through that research, for really understanding, what's going on. And then it happens through asymmetrical returns eventually. But DeFi Dad, any comments, man? So far, this has been really awesome. Would love to hear your take on all this.
Yeah, I mean, I'm as confused as anyone about where we are in this cycle. But because my time horizon is so much longer, because I'm thinking my view of DeFi is 10, 20 years out. So I think about a lot of the things that everyone mentioned here. Most importantly, I'd say it's been one of the few inflection points in my life with technology where once I saw what DeFi allowed me to do, I was like, I cannot ever unsee what DeFi can do for me. And so it went from an alternative investment to my default investment. I keep less than 1% of any money in a bank now. I rely almost entirely on DeFi. So that's something different this cycle. Is most DeFi investors' money isn't going back into fiat. It'll just go into stable coins. And by going back into stable coins, they're likely to try to lend that or earn some sort of yield on it. So there's going to be lots of opportunities, regardless of whether this is a dip in a larger bull run or whether this is the start of an actual bear cycle. I only started in 2017, so I remember all the bullshit I got to hear from all the talking heads. I remember how many times I was told that we were going to continue another 18 months, and how none of those people are ever held accountable for that. So what I've tried to do instead, because of the nature of DeFi, is I am focused on holding those assets that I think are a great store of value. What assets are idle, I'm trying to put those to work. I'm trying to maximize what earnings I can get out of those without oversizing my position, without risking too much that I could lose it all in a smart contract hack. And I am focused on yield farming through tools like Zapper.fi/farm. I'm using that because I'm trying to earn tokens that I want to hold long term. And so it's not a matter of me farming and dumping. I'm earning stuff that I would like to earn. I'm in some of the Barn Bridge yield farming pools because I think Barn Bridge has a long-term vision that can succeed. And then lastly, by farming and earning that passive income, the last step of it is, what can I do to participate or to strengthen the community? And sometimes that's just people hopping in a Discord and asking some questions. For me, it's maybe making a DeFi tutorial or just trying to help other people understand, what vision they're trying to realize. So, this is so different than last cycle. Last cycle, it was buy something on an exchange, you traded if you knew how to trade, or you attempted to trade and lost most of your money. And then we all lamented, what's going to happen here? And meanwhile, some of us then chose to build. This time, you don't have to be a builder to be a crucial component of our ecosystem. You can simply be a liquidity provider or some sort of lender, and that's doing a lot of good for the greater DeFi community. Namely, I would say Ethereum, and I think Polygon's got a thriving community, and then I'm paying attention to other stuff being built on other blockchains.
Amazing, thank you so much. And I think there's some. Yeah, please go ahead, Santiago. Go ahead.
Yeah, just to add to that, which I think in 2012, 2014, 2017, throughout that time, when you try to explain crypto to someone, they didn't really get it. This time they can use it, and there's a lot of utility. And I think like once you send money using a stable coin, you don't want to use wire transfers, right? And I think that's a big difference between this time around. I don't want to say this cycle, just this time around. There's a lot of usability in the system, and anyone that is interacted with DeFi, as a lot of folks have said here, it's hard to unsee it. It's hard to not want to play around with it. It's hard not to be fascinated by it, whether you're a professional bond trader or an investment banker or hedge fund manager or just a regular person. There's a lot of utility. There's a lot of activity in this space. It's unique and inherent to DeFi. Now, not all of crypto has that. There's a lot of fluff out there. There's still a lot of fluff out there. There's stuff that should be worth anything that is worth billions. And to me, there's sort of a tale of two cities. You have a very productive ecosystem that is providing a lot of value that is non-speculatively driven, or to some extent does not rely on pure speculation. That's your true utility. And I think that's very different. That's very unique of this particular moment in crypto.
Amazing, Santiago. And I really think there's so many gems that have been shared throughout this conversation. Very, very meaningful. Before we end, guys, if we talked about, the definition, we talked about some very valuable tips, finding asymmetrical projects, that 5%, thinking long-term, researching if we go on a side or bear market, and really think long-term to continue to earn yields, to farm the right tokens that we believe have potential in the future. I would love to ask you guys a final question about the future, right? Because, and I believe, Santiago, you mentioned something that was really, really cool, which is applications like Robinhood and other centralized applications will be using DeFi without even knowing it. And I guess that's a little bit of a glance in the future. If you guys could just share about, just 30 to 60 seconds maximum on what is the development that excites you the most? What is the most beautiful picture that you see in a year, 2 years, 5 years from now? That'd be absolutely amazing. And Vance, if we can kick off with you, buddy.
The most beautiful picture I see of DeFi. So, I think vertically focused applications focused on, Latin America, Africa, Southeast Asia. These are just better, faster, cheaper financial services for those people specifically. In the US, it's kind of like, your bank is okay, it's not great, but there's still a fundamentally solid financial system under you. For those people, it's just, that's hundreds of millions, if not billions of people that are going to be on-roaded to this stuff. And that really forms the basis of this global interconnected financial system that, then we can build, more functionality, more interconnectedness. And with things like layer 2s and kind of more intricate and sophisticated financial products being built on top of those, that's really where I see the space going. And I think that's a big component of it. On the US side, I'm actually looking forward to, regulatory clarity. I think, it won't be as scary as people think. It probably won't be the exact version of DeFi that we would prefer, but it won't be too big of a deviation either. And so I welcome that stuff. I don't think it's going to be coming for another couple of years. So there's always the chance that DeFi can just, grow and get to a point where, we're demonstrating the benefits and why this should exist before we have to have that conversation. But overall, I'm really optimistic. I know it seems like a shitty couple weeks in the market, but that really doesn't matter over even a year, 2-year time frame.
Thank you so much, Vance. David?
I would say, my optimistic view, I would say I really like to see some of these other countries in the world who have the opportunity to take a leap forward, similar to how telecommunications in some of these countries leaped. Having landlines and other types of internet connections in home to straight to mobile. Similarly, and with finance, they have the opportunity to do that here by leaping over some of the other traditional finance, fintech, leap over fintech, if you will, straight to DeFi. And I think some of these countries, in Africa, in Southeast Asia, in South America, and Central America, have the opportunity to do, not having the shackles of the traditional finance system like the US or Europe or others.
Awesome. Thank you so much, David. So we have the regions that need mobile apps to make it more user-friendly and increase adoption. DeFi Dad.
I'm biased, but I always say the only thing that's holding us back is education. I think that the tech is actually ahead of where users are, and it's part of the reason. Like, I've been very grateful to work at Zapper. All we do is focus on allowing users to more easily find the right opportunities. So you can search like thousands of yield farming and liquidity provisions on zapper.fi. But once you get there, it's just a few clicks versus like all the other steps you'd follow on a lot of other websites. Anyways, long story short, though, I think in a few years, like we're going to all be transacting, for pennies per transaction. Speed will no longer be an issue. Speed works on other blockchains right now. Ethereum became like the hottest club in New York City, and there was too long a line out the door. And so we're catching up. We're scaling up to the demand that everyone wants to transact on Ethereum. I just say, like, it's impossible to unsee what you can do there, and we just need that many more people to learn about those opportunities, because many people in the world urgently need these financial services. I'm more excited for them, the way Vance was mentioning, versus like, hey, trust fund kid in New York, can I show you how to earn with your crypto? Like, I don't give a shit about that person. I want someone in Central America who has no access to any sort of banking services to be able to use DeFi.
That makes a lot of sense. Thank you so much, DeFi Dan. And last but not least, Santiago, last word before we wrap up.
Yeah, look, DeFi is not perfect. It's very early. We need better capital efficiency. We need a reputation layer to do under collateralized loans. We need better security, better standards. There continue to be a lot of hacks, but nonetheless, like I think over time there will be more liquidity to this space. I think from my vantage point, I think we'll start to see larger and larger financial institutions play in this space for the sheer reason that they can do things and streamline their operations. I think you'll start seeing a lot of loans being underwritten on chain and in Aave in a permission market or a compound chain. Why? Because they can increase order of magnitude or two the number of mortgages they can issue on chain. And so there's really no reason why you should be doing stuff in the real world when you can do it through a blockchain. When you know the rules of the game, where information's transparent, where rates are more competitive, and ultimately, the what I'm most excited about in all of this is, the people that are going to benefit the most out of everything in this system is the consumer. There's going to be much more consumer preference, and the second piece is, I think it's pretty fascinating that more and more you're meeting human capital with actual capital that moves at the speed of information. And so the innovation that you're seeing in DeFi is astounding in my mind. I can't think of any other industry that is seeing this level of innovation. And so I think like the compounding effects of that are really encouraging. I think we haven't figured it out all yet. This system is not perfect, but I think you can always bet on human creativity and ingenuity to build systems that are much better than exist today. So really exciting for the future of DeFi.
Vance, David, DeFi Dad, Santiago, thank you so much for your time today. Please, guys, remember that all of these gentlemen are very active on Twitter, so please follow them to get more information related to DeFi. People who have the DNA, the love, the passion, and the identity to follow what this movement is creating. Thank you so much for watching, guys.
Thanks, Alex.
The ambition to succeed starts with a vision. We have translated that vision into the capacity to create a world that could be very different from the one that is today. A question that we must ask ourselves: what's next for finance? It's only when you question the ordinary that the extraordinary is revealed. Once you catch a glimpse of it, it becomes your reality. A reality that pulsates with sustainability, affordability, and financial innovation. Visit plentydefi.com to get started.
What a great first panel to kickstart the day there. Now, what we're talking about now is the Middle East really being a forefront when it comes to blockchain, emerging tech, and of course, DeFi. So our next panel discussion is talking about the rise of DeFi in the Middle East. And we have some amazing guests for this panel. We have Saeed Al-Damaki from Shisha Finance, Joseph Holm, and of course the Bitcoin advocate himself, Tim Draper. I'm going to leave it with you guys to enjoy this 30-minute discussion.
Terrific. Thank you, Jessica. Joseph, I think you're muted.
Unmuting help. Hey, how are you guys?
Terrific. Great to be here. I'm sorry I'm not in Dubai in person, but exciting to be at this conference.
Well, we have a lot of really exciting updates and things going on here. I'm joining you from Dubai. Saeed is joining us from Abu Dhabi. And there is so much going on here in the not just the DeFi space, but in the blockchain space in general. I've been coming here for a few months now this year already. I've moved here with my family, attended a bunch of the conferences, really grown our network a lot with the help of Saeed, who is the managing director of Casper Labs, one of our portfolio companies, and also the CEO of Shisha Finance. Decentralized fund, but he will tell us about a little more about that later. I'm just really excited to have both of you here, two of my favorite people. And why don't we kick it off by Saeed telling a little bit about yourself, what you do, and welcome to the Global DeFi Summit.
Yeah, for sure. Firstly, Tim, really looking forward to seeing you again in Dubai. I guess you haven't been here for a couple of years, but I'm sure when you do visit, you'll notice a huge difference in the environment and the scene here as well, especially when it comes to blockchain and DeFi. But yeah, just a bit of background on myself. I've been in blockchain and crypto for the last 4.5 years. I co-founded Alphabet Digital Currency Fund 4 years ago. Previously, I used to work for Abu Dhabi Investment Authority, which is one of the largest global sovereign wealth funds. And then more recently, I've been appointed managing director of the MENA region for Casper Labs. And I've also launched Shisha Finance, which is a decentralized fund, which is aiming to disrupt the traditional mutual fund structure. And I'm super happy to be partnered with Draper Goren Holm. And I'll do my utmost to make sure that you guys, make a big success here in Dubai and in the Middle East. And I'll be supporting both your portfolio companies and your efforts here and your incubator, and making sure that we get you the right connections and the right introductions, and also at the government level, get you in touch with the right people in the government and the regulators here as well.
Terrific. Well, thank you, Saeed, and great to be on this panel with you. And I guess Saeed and Joseph have really stirred things up, because I've never heard so much activity about Bitcoin and decentralization and DeFi coming from Dubai before you guys arrived, and now you've really stirred the place up. So well done, and great to have a good base in the Middle East doing some of the great legwork that's going to lead us toward this new world.
Yeah, it's been really exciting, Tim. We've been coming here for a few months now. We won the Investor of the Year award a couple of weeks ago.
Yes, congratulations.
Put us on the map here. And Saeed has been very helpful. We're setting up the incubator at the DMCC, the Dubai Multi-Commodities Center. They have a new crypto center that just recently launched it, I think like a week ago. Since then, they've had over 400 companies apply to join that co-working space. We're also, we've partnered with CV Labs, that's the Crypto Valley venture arm. They're building an incubator here as well. So that's been very helpful. We're getting a lot of deal flow exposure, not just here in Dubai, but also in Switzerland now, which is very helpful. But the most exciting thing about Dubai is really that they've introduced this new crypto license that every startup can apply for, and it gives you regulatory clarity. So everyone who comes here and sets up a company here doesn't have to worry about the legal framework. It's pretty clear what they can do and cannot do. And I guess that's what's been attracting so many companies here, right, Saeed?
Yeah, absolutely. I think from the top down, I think the environment here has been very much supportive of blockchain technology and crypto startups coming here as well, with a lot of incubators and accelerators being set up by the government. And I think with the regulators and the central bank also kind of looking at ways to regulate this wonderful and new asset class. I think the infrastructure and ecosystem is definitely exploding here, and I think it's on a very upward trajectory. And I think with the likes of the names of Tim Draper and Joseph Holm and Alon Goren, I think that will just really make things much more exciting and encourage a lot of new startups and DeFi companies to come over here and set up shop here. I think with the tax structure here as well being very accommodating to companies setting up, that's a bonus as well. But the one thing that I'd say is most important is Dubai has always been kind of a tourist hub and a kind of middle spot for most countries, whether it's from the West or the East. So that's definitely helped a lot. And I think, it's definitely in the limelight when it comes to blockchain and crypto. So I think you guys are here at the right time. I think it's just accelerating now. And I think together we'll definitely do a lot of great things. And I'm super excited about the future.
I love seeing various governments compete for these new entrepreneurs that are doing great things and transforming the world. And I think the governments that do a good job, that do attract these entrepreneurs and do attract the entrepreneurs that are going to be active with Bitcoin and blockchain and smart contracts and decentralization, those governments are going to go way faster. They're going to grow way faster. They're going to create much more wealth, many, many more jobs than the governments that are resistant to it, trying to control everything. The control governments don't work. It's the governments that allow freedom, allow people to be free and to do interesting things. Those governments are going to be big beneficiaries of this next 40 years.
Yeah,
so
I couldn't agree more.
Congratulations, Dubai. And hopefully your own country, Abu Dhabi, is also competing for these people.
I think at an institutional level, it's definitely there's definitely regulation around crypto assets in Abu Dhabi, and at an institutional level, there is an incubator and accelerator here from the government. But Dubai, in terms of startups and new companies coming, is definitely a lot more active, and definitely a lot more active on the tourist side of things. But yeah, Abu Dhabi has an equally important role to play because there's several regulated crypto exchanges that are coming up as well in Abu Dhabi. And I think it's been the leader in that space and in terms of institutional money coming into crypto as well.
And I wouldn't be surprised if Saudi Arabia started to do a good job with this too, because they sent 150 students to Draper University. The MISC group sent and Moonshot sent 150 students to Draper University, and they learned they got an earful on cryptocurrency and Bitcoin and DeFi and all of these things, and so they've got 150 people all like spreading the word, building their new economy. And so I think the Middle East is going to be a really great hotspot for this new world that revolves around a decentralized, trusted, free cryptocurrency like Bitcoin and all these. I think you're going to start seeing the governments recognize that can bring more value to their country and build a better life for their people. And so I think this is fantastic. And I'm glad you somehow bumped into Joseph. I think you two are going to make a big difference out there.
It's been really exciting, and as you know, I've lived in California for 10 years, and I'm originally from Europe, so I'm intimately, I know about the red tape and the problems that come up when you try to do something new, and here it's been really mind-blowing to see the pace of adoption. Once the government decided that blockchain is good for the country, now let's do it. That was pretty much the end of the discussion. Right now, they're obviously still implementing some of the frameworks, and these things take time, but they have decided to do it. And one thing that Dubai is particularly good at is not to be second, right? So when they decide to do something, they want to be the best and the biggest, and you can
certainly have the tallest building.
Exactly.
Yeah, for sure.
So, that's been really exciting. It's also been exciting to see our portfolio Casper Labs here, with your support, Saeed. They have just given a grant to our other portfolio company, DLN, the Decentralized Lending Network. We talked to you about this a few months ago. They are moving here, and they are getting a great support from the government, setting up the framework and creating the foundation to bring micro loans to billions of people, not just in the region, but around the world. And it's been just fantastic to see how they're just moving forward with this. They just want to do it. They want to be first. So it's been very exciting to be here. Dubai is definitely the place to be right now.
Yeah, in terms of Casper Labs as well, I think Casper Labs was looking at the Middle East and North Africa region, and about 6 or 7 months ago, they asked me to be an advisor just so they could have somebody kind of talk about Casper Labs in the region. But then when the team came over to Dubai for the first time in the beginning of February, when they actually saw on the ground everything that was happening, the team was super excited, and they really wanted to actually set up a base here. And once I saw that the team was really excited about it and wanted to set up here, then for me it was natural to just tell them, hey, I really like Casper Labs, I really like the tech, I really like the team, and since you're really serious about moving over here, then I'd really, really want to be highly involved. And it was just a no-brainer for the guys to offer me to head up their efforts in the MENA region. And I think with DLN, it's a project that's really impactful. I think it's going to make a big impact on a lot of lives. I think there's a lot of people out there who sometimes struggle and they're on low income, and they find it very expensive to access loans. But I think what DLN is trying to do is disrupt the monopoly that's been with the banks that are just charging crazy high fees for these loans. And I think it's just going to change a lot of lives. So I'm really happy that I was able to help DLN in the right direction to get into in touch with the DevX DAO, which belongs to the Casper Association, to help build on Casper Network and get them the grant that they needed. So that's been amazing to see as well.
So I've been it's great, and I've been thinking about, well, what's next? What might possibly be a really interesting breakthrough for the world using this technology? And I think a universal earned income might be a really interesting thing that somebody can do with a cryptocurrency, and they can start it from just scratch and then slowly but surely build it. And if there are any entrepreneurs out there looking for that, I'm Tim at Draper.vc. I'm looking very closely at those. The other thing I'm very excited about is the idea that I have a vision that I can't wait for me to be able to raise money, put the whole thing into Bitcoin, and then have a walled garden of Bitcoin where I invest it into entrepreneurs in Bitcoin. They pay their employees and suppliers in Bitcoin, and the whole thing keeps perfect records on the blockchain. And then when there's a winner, it drops into the investors' pockets in a smart contract. It drops into their Bitcoin wallets. I think we are really close there, because now you can use what's it called, Cryptio, to do perfect accounting, and they do it all off the blockchain. And so all we need is to put together that smart contract, and then the U.S. is still struggling with whether the SEC will allow me to do this. I've been trying to do it for a long time, and they're still struggling with it. I'll bet I can do it in Dubai.
Well, believe it or not, Tim, what we're doing at Shisha Finance is pretty much similar to what you've said there, except that it's not on Bitcoin, but it's on Ethereum and Binance Smart Chain. So we've created a platform where you stake our token on the platform, and you actually get rewards in our tokens, and also the tokens of the projects that we invest in as a fund on our platform. So you actually get distributed the tokens of all these projects on our platform. And I think I can't announce the name yet, but one of your portfolio companies is actually, we've invested in it early stage in the token launch as well.
I think I know which one it is. Yeah.
But yeah, so that's an example there. But that's what we're trying to do at Shisha Finance. It's a decentralized fund. You can interact with it and get an LP exposure via smart contract, and everything is on chain. You can see the performance of the portfolio. You can see the tokens coming into your wallet, and it's all done through smart contract and on blockchain. But hopefully we can also get it on Bitcoin blockchain, but we're trying to get it on as many chains as possible in the future as well.
Yeah, and I think governments are recognize, or some of them are recognizing, that they can actually get taxes this way, and do it in an easier way. They don't even need to have the guys going around breaking kneecaps to collect the taxes.
I think Switzerland is doing a really good job of that, actually, and the Swiss government is taking tax in Bitcoin. So that's something great to see.
That's a big breakthrough. The other thing I'm thinking is, even this Bitcoin fund may be sort of a stopgap, because I actually think that we're going to go through a period where ownership changes. We're going to see ownership where ownership right now is all stock, and it's all tied to the banking system and the governments. I think you're going to be able to move off of the banking system, and where tokens are issued, and tokens are the only thing that has the value. I mean, right now I have to invest in the company and the token in order to get the value. I don't know which one is going to be the big success when people are just getting started. But I think long term, we're going to actually have a full tokenization. I think Bancor kind of led the charge here, but there have been a lot since that have thought in terms of a Saeed coin and a Joseph coin and a Tim coin, and these coins would have a certain value to them, and maybe we would say, in order to get my attention, you need to buy my coin. That can happen with businesses too, where it's like, hey, you want to buy this, you got to buy my coin first, and then my coin grows in value because it starts to spread and that kind of thing. I think we've got there's some major changes coming that are going to allow us to get this decentralized world where borders become less relevant, where governments are competing with each other for us, where they're, the best governments like Dubai are the ones who are the most open, the most free, and the most trustworthy. And I think that's going to make a big difference. The next 40 years are all going to be which government was the freest and which government was the most trustworthy. Which one allowed this amazing new technology to proliferate throughout their country, and which governments were the ones who allowed us to build trust on the blockchain through the algorithms, rather than having to all be tied to a banking system, an antiquated banking system and an antiquated governing system.
Yeah, and it's really exciting to see what happens when you're in a smaller country that doesn't have a global reserve currency, and the petrodollar to defend. That can be a lot more nimble and act quicker, and that's what's happening here.
Yeah, when I advised the Argentinian president to buy some Bitcoin for his national treasury, he kind of laughed it off. If he had done it, he could have paid back the IMF and had them out of his hair forever.
Imagine that.
I mean, that was just wild. All that debt would have been gone. But instead, they got some socialist dictator in there. And
didn't you have some kind of bet with him too?
Oh, I had a great bet. The bet was, well, I saw him 2 years before. And that was when Bitcoin hit 10,000 for the first time. So I was kind of celebrating because I had predicted that. Then it had dropped down between the time I was celebrating with him and when I saw him the next time. It had gone from 10,000 down to 4,000. And I said, okay, let's make a bet. The Argentinian peso during that time had gone from 75 cents to 25 cents. So I said, let's make a bet that Bitcoin, if the Argentinian peso outperforms Bitcoin in the next year, then I will double my investment in Argentina. And he goes, uh-huh. And then I said, but if Bitcoin outperforms the Argentinian peso, you've got to make Bitcoin a national currency. And he looks at me like this, and I said, the way Japan did. And then he said, oh, okay, we'll figure that out. If he had done it, it would have been fantastic. But during that year, Bitcoin went from, whatever it was, 4,000 up to 60,000. And the Argentinian peso went from 25 cents down to less than a penny.
Wow.
And so it would have been very good for him. He didn't get reelected. Some socialist came in there and sort of is in the process of destroying the country.
I think you'll be glad to hear, Tim, that there's just been a Bitcoin ETF that's launched on NASDAQ Dubai by 3iQ, the Canadian company. So I think you're going to see a lot of Middle East and North African institutions and governments actually get into Bitcoin. So if you haven't bought the dip, then now's probably a good time. Not financial advice.
I keep adding to my position. I haven't. It's weird. My position is it's very, if I were any kind of a fiduciary with my own position, people would say, "Wait, what are you doing?" It's so heavily weighted, but I'm weighting it more. I'm piling more in and more in, because I look and I say, the more I can do with my Bitcoin. Like the moment OpenNode has started to open it up so that retailers can accept Bitcoin, make it really easy and frictionless, and they don't have to pay the banks 2.5% to 4%, and it's a great thing. But since that has happened, it's pretty soon where I'm going to be able to buy my groceries, buy my clothes, buy my travel, all that stuff with Bitcoin. And once I do, what's my incentive to use any other currency? Why would I hold on to another currency? People ask me, well, when are you going to sell your Bitcoin? And I say, into what?
Into what, right?
It's like taking, euros and turning them into French francs or, the German marks. It's taking the future and putting it into the past. Why would I ever do that? So
that would be a step backward.
As long as I've got enough dollars to satisfy my capital calls and keep my family happy, I just pile it all into Bitcoin. It's a very simple investment strategy.
Very smart and very, very inspiring. Hey, Tim and Saeed, unfortunately, we're out of time. Thank you both so much for joining us today. This has been awesome. Tim, we can't wait to welcome you here.
I can't wait to get back there. I miss the Middle East. I feel like it's taken a piece of my heart. I love the Middle East.
Can't wait to see you there, Tim.
I'll look forward to meeting with you in person, Saeed. And Joseph, keep up the good work. It's great.
Thank you, sir.
All right.
See you on Saturday,
guys.
Joseph.
Thank you.
Time is ticking away. Ditch the banks and join the DeFi movement on Tezos blockchain. What if we told you there is an affordable, fast, and sustainable way to leverage the power of decentralized finance, all the while empowering the next generation of finance? A proof-of-stake implementation into decentralized finance, taking up to 2 million times less energy than proof-of-work networks. It's time to start caring about your impact. It's time to care about the future. Visit plentydefi.com to get started.
A great discussion there with the team and a fantastic story from Tim Draper himself referencing the president of Argentina. And who knows, maybe it actually had a role to play in what we've seen very recently with El Salvador. Maybe it planted a seed with the president there. Okay, so now moving on to our next discussion of the day, we actually have a keynote which is talking about bringing DeFi to institutions, which is, as we know, a very big hot topic at the present. I'm going to leave it to you to take a look at the next discussion.
Hi guys, I believe I'm live. Let me share the right window. Okay, I believe I'm live. If someone on the side in the chat can kind of confirm that, I'll start. Okay, cool. Thank you, everyone. My name is Ji Chuang. I'm a product manager on the API team at Circle. Today, I'm going to chat a little bit about how Circle hopes to play a role in bringing a lot of institutions into the DeFi space. So for those unfamiliar with Circle, we combine digital dollars with traditional finance. We are one of the founding members of the Center Consortium. We are behind USDC. We're essentially your bridge between traditional finance and the crypto ecosystem. So if you look on the right, we have all sorts of fiat on-ramp and off-ramp payment methods, whether it's bank wires, ACH, credit cards. We're well-regulated and licensed in the United States. And essentially, we're bringing all of the USD that you hold and bringing that into the blockchain space through USDC. So USDC, for those potentially unfamiliar, is one of the largest stable coins, reaching 25 billion this week. We're spread across 4 chains. As everyone knows, blockchain payments provide near instant settlement, dramatically lower cost. And with the programmability of smart contracts, it allows you to bring money online natively to plug into a robust ecosystem of decentralized protocols and applications. So on top of USDC, what Circles really wants to do is provide a comprehensive solution for companies to run their businesses on native crypto rails. So it's not just about depositing your own funds. It can be about building payments experiences, transacting with customers and partners, both on-chain and through traditional rails. We always settle everything in USDC. And so for a lot of our customers, that brings really unique benefits. Of course, other customers, want to make sure that they're always connected to fiat off ramps as well. So that's certainly a core part of our offering. Customers, trust the Circle brand. They trust USDC. They trust our technical solutions. And so our enterprise-ready custody and security services help companies, make sure that their funds are very secure. What we want to talk about a little bit more today, though, is this fourth pillar here, which is, our entry into the DeFi space, are wanting to support institutions in getting on board with all of the benefits that DeFi has to offer. So I'll get back to this shortly, but in a nutshell, for companies having idle working capital, giving them access to higher yield through open and fixed term maturities. So to just take a step back, I think everyone here is probably quite familiar. We had a great 2020, a lot of institutional backing, Square, MicroStrategy, and others. A lot of, on the regulation side, also kind of increased clarity about USDC and cryptocurrency as part of what a custodial service can provide. Beyond, everyday companies we know like Square and MicroStrategy, other institutions like MassMutual investing a lot into this crypto space as well. But going back into the DeFi item, are institutions participating in DeFi today? I think while many of you, myself included, might have participated in DeFi protocols as individuals, whether you are providing liquidity and yield farming, or if you're swapping tokens on Uniswap, or you've used decentralized exchanges to trade crypto, and leading into whether you've supplied USDC or borrowed USDC in a lending or borrowing protocol. Institutions have sort of been lagging in this space. We're all aware of the technical understanding required to participate with these protocols, be it having a hardware wallet, using MetaMask, something like that. But at the same time, this is not something that institutions are unaware of. Looking at a survey that Crypto.com ran in BCG, 86% of respondents are familiar and looking to potentially utilize these sorts of decentralized services. On top of that, specifically for DeFi, 58% said they could lose a competitive advantage by ignoring DeFi, and 67% said this could open new revenue streams for their business. New revenue streams could potentially be new protocols, creating services on top of these protocols, but a large part of that is also simply just participating in a lending or borrowing scenario where you can earn yield. And I think from Circle's point of view, and I think most of the audience here, it's really not about if, it's rather about when and in what form institutions will adopt DeFi. The benefits are just super clear to all of us. DeFi offers efficient financial services globally. It's 24/7. Again, for DeFi yield specifically, the interest rate movements and the fluctuation of the yield that you can get is sort of independent of other interest rate markets, and so it provides a nice kind of complementary investment opportunity, I think, for institutions and treasuries. It also increases the pace drastically. I mean, I think just through DeFi summer last year through this year, and just month by month, there's just a lot of protocols building on top of each other, just because of the sheer nature of smart contracts. The programmability and the composability of these things is leading to really, really rapid innovation. And so for us, and I think everyone else, DeFi is, as far as we've come in the last year, it's also just getting started. And so it's kind of dovetailing into an announcement we wanted to make today about how Circle is going to start providing DeFi access. And by DeFi access, I specifically mean like yield access to lending and borrowing protocols very soon. To start, we'll be deploying USDC to DeFi lending protocols, allowing our customers to use our APIs to interact with these protocols and earn interest alongside the governance token. So as many of you are probably aware, for some of these lending protocols, you can earn their governance token in addition to the yield. So these are new APIs that let you access these DeFi protocols. They're all built on top of our existing wallet infrastructure, that have very high levels of security and convenience. They work very natively with the rest of our APIs. So for example, you take a credit card payment, or you take an ACH payment or a wire. Those funds settle as USDC. You take that USDC and you put it into Compound to start, and you start earning interest. It's not meant for just your own personal treasury use case, because of the very very fluid nature of our accounts infrastructure. Companies can certainly kind of use these APIs and build out platforms and services for end users as well. So it's not just limited to the company's own funds. So I mean, why use Circle's DeFi APIs? I think for individuals who are familiar with the ins and outs of interacting directly with protocols, that works just fine. For a lot of the customers that we've talked to, and a lot of the research that we've done, institutions are just a little hesitant to get their hands dirty with touching the crypto directly. So by interacting through our APIs, there's just a lot of benefits. You reduce the likelihood of human error by using your own wallets. For companies and institutions and treasuries, working with a trusted company and a service like Circle is a much more approachable method of participating with DeFi. And just the programmability and the security that we offer lets you build very complex flows should you want to. All of the deposits and withdrawals, or minting and redeeming with Compound and other protocols, are all programmatic. So if you want a simple use case, you can build that. If you want a complicated use case that ties into other actions, it's all programmatic. And so I can imagine a lot of interesting use cases being built. Lastly, and I've touched on it a couple of times, but all of this is integrated with the rest of our APIs. So it's integrated with the ability to move USD in through ACH wires and other payment methods. So yeah, I mean, the product is launching over the next month or two. Today, we've kind of just started to make that announcement. There's a wait list that you can join to be on our radar, and then we'll reach out to you and learn more about your use case and share more details about the service with you. For anyone from a more developer mindset, you can sign up for a free Circle account today. Get API keys at mysandbox.circle.com. We hope to hear from you soon. Thank you.
What is the future of decentralized finance? Affordable, decentralized, and sustainable. Experience the power of DeFi in ways you've never experienced before. Plenty allows you to use DeFi tools that you've grown to love and adore, but without the crazy fees associated with proof of work. Enjoy sustainable yield farming programs that are cost-effective, liquid, and built on the powerful Tezos blockchain. Visit plentydefi.com now to get started.
A huge thank you to G there for his presentation on helping to bridge the gap for DeFi to institutions, and also a huge congratulations to Circle on the exciting news that they announced today. Okay, so it's time for our next panel discussion of the day, and this is moderated by Ali from Blockchain Founders Fund, and it's really discussing this evolving landscape that we are seeing of venture capital into decentralized finance. So I'm going to hand it over to Ali now to introduce the rest of the speakers.
Thank you so much for the intro, Jessica, and welcome to our panel here at the Global DeFi Summit. Our topic, as mentioned for this session, is the evolving landscape of venture capital in decentralized finance. And there are a lot of critical and unanswered questions that our panelists here will help to explore and provide answers to. So it's great to have so many friends and audience members tuned in from all around the world. I'll be your moderator for this session. My name is Ali Madavji, managing partner at Blockchain Founders Fund, which invests in and venture builds top-tier startups and consults organizations such as the United Nations. I serve on the board of 2 public companies in the blockchain space, including CryptoStar, which is a Toronto Stock Exchange venture company, and Mechanical Technologies, which is a NASDAQ-listed company, and serve as senior blockchain fellow at INSEAD. But more importantly, we have a phenomenal panel here with us today. First off, we have Min Teo, the managing partner and co-founder of Ethereal Ventures, a crypto-focused VC and advisor to Consensus. She most recently led the venture investments at Consensus AG, the investment arm of the global software company building decentralized infrastructure and applications. Next up, we have Haseeb Qureshi, the managing partner at Dragonfly Capital, a global venture capital fund. And previously he was a partner at Metastable Capital, and before that was a software engineer at Earn.com and Airbnb. And last but not least, we have Lunar Goren, who is a founding partner at Draper Goren Holm, a venture studio focused on accelerating and incubating early-stage blockchain startups. Alon is also a co-founder of LA Blockchain Summit, and he has been a pioneer in the crowdfunding space. Let's jump into it. So DeFi has been booming over the past year, but many traditional VCs aren't set up to take advantage of this trend. So I'd like to start off with Haseeb. Set the stage for us. What does it look like in terms of VCs in DeFi right now?
It's a great question. So if you rewind back to pre-DeFi summer, so DeFi summer, which was basically summer last year, DeFi really took off with the advent of Compound and Comp Token and its liquidity mining program. That's sort of the shot heard around the world that started all the craziness in DeFi. But of course, DeFi has been an investable category in crypto for a long time. I think that it really starts with Bancor. Probably the first thing you can think of as a true Ethereum-based DeFi protocol, although there were things before it. And then, MakerDAO and then DYDX and the generation of DeFi that we see today as being really successful, most of it was created in 2017, 2018. So back then, DeFi was a pretty weird corner of blockchain investing. Not a lot of people were really touching those protocols at the time. They were all pretty theoretical. I remember back when, Ether Delta was the only DEX that really, was worth speaking about. I remember when, MakerDAO initially it came out as called Psi. They changed it to DAI, and they had maybe 100 million in TVL, which at the time nobody called anything TVL. That was a term that really started becoming mainstream in 2020. But most of these things were seen as little toy experiments, and it was only a relatively small cohort of crypto native investors who were touching any of this stuff, and it was all very kind of far future and theoretical. After last year, the TVL and the volumes that we started seeing on DeFi just exploded, and it's become increasingly the case. You're seeing more and more mainstream investors starting to try their hand at DeFi investing. Now it's not going too far and wide. You're starting to see players like USV or Founders Fund getting into investing in crypto. It's not your average old. We're not seeing Kleiner Perkins or the average old school VC coming into DeFi native investing. But it's pretty clear that more and more people understand where the space is going. The difficult thing for traditional VCs investing into DeFi is that it's pretty hard to have really customized value add for a DeFi protocol if you're not very crypto native as a fund. And that's one of the reasons why most of the DeFi protocols that are getting funded to this day, primarily they look for crypto native investors. Because traditional VCs, although they can be sometimes useful for the branding or the prestige, they can't really add that much value in ways that crypto native protocols generally need.
I definitely agree with that, Haseeb, and I've seen a lot of that. Min, I'm curious on your thoughts of some of the challenges with traditional VCs, in this space, and we'll come to sort of crypto native VCs later on in the discussion.
Yeah, absolutely. I think in general, like, even for us, right, like there's just so many other ways of raising capital these days in non-dilutive, non-control driven ways. So I think really kind of ups the ante for VCs to add value. There were a lot of unfortunate things that happened from 2017 ICO boom, but, in a lot of ways also showed founders that there's another way. And I think that's really powerful. In addition, I think on the that's on the early side, and on the later stage, you also have a lot of traditional hedge funds, private equity funds also flooding in with a lot of capital, right? Like, Tiger's made a lot of investments, Code2's, like you see Point72 and Third Point also dipping their toe into the space with $100 million rounds, right? So I think it really just kind of ups the ante and raises the gauntlet for all of us. Like, how do we think about, co-building alongside founders in the early stages and adding value that's, a lot more than a pure capital allocator, such that, a lot of portfolio companies, they won't look back and think, why didn't I just take easier money from this guy as opposed to take very difficult money from this investor, ex post. I think in general, we work with a lot of traditional VCs because I think they do add quite a bit of value for certain companies, right? Like there's a category of crypto companies that maybe look more Web2 like, but have a lot of adjacencies to crypto assets. When they kind of get to Series B, C, are dealing with international expansion and regulation, I'll be the first to raise my hand that maybe that's not my direct area of expertise, and we'd love for them to get involved. But I think in the very early stages, it's quite challenging for them to sort of diligence companies, where we have a lot of unique insights that we get through from our own sources that they might not have access to, or the technical expertise to really sort of separate the wheat from the chaff. On the sourcing side, I think our sourcing looks quite different. Like, we spend inordinate amounts of time on Twitter, Telegram, Discord, which they might not be super used to, right? I think ultimately we work with a lot of great co-investors in the space like Dragonfly, but a lot of our sourcing also comes directly from founder relationships that we've cultivated over the last couple of years. So I do think these things maybe make it challenging for traditional VCs to really enter the space in a very, very meaningful way. And I think probably the biggest sticking point that I've seen as well is ownership. The space trends towards a lot of decentralization and distribution. We see that in cap tables too. So as a VC firm, we've also adapted and been flexible on that. So if a traditional VC comes in and says, I want to own 15, 20% of your protocol, that just doesn't work for anyone, right? And it's really difficult for us to sort of break it down why it doesn't.
Absolutely. And I've actually seen this, firsthand a number of times. I think what's been really interesting is on our side, we've just seen an influx of some of these larger, more traditional VCs starting to ask more questions, trying to get an understanding. I mean, I get sent, deals of just, from some of the biggest, traditional VCs. They're just asking for, how do I look at this company? What do you think? From a technical standpoint, what should we be looking at? And it's quite interesting because they're still having some challenges of trying to look at these. But we're hearing a little bit that some of the traditional VCs are a bit more conservative, trying to look at the space, but, maybe not fully ingrained. You're seeing a lot of token projects prefer, or, DeFi projects prefer crypto native VCs. But is there some merit, to the skepticism or some of that slow nature that these traditional VCs are taking? I mean, recently we all heard about Iron Finance. I'm sure many people know, with Mark Cuban involved and many other sort of high profile names. I mean, Alon, maybe you can share some thoughts, on this. Is there merit to traditional VCs, being a bit slower, being a bit more calculated, skepticist?
I mean, from my perspective of should they as a whole industry be skeptical or slow or anything like that, obviously I think they shouldn't be, because I'm all in on this industry and I'm biased in that I believe in it. And I think that every argument in relationship to bubbles or things like that are very minimal, because even if you look at any part of our industry and consider it a bubble, will it be orders of magnitude larger than it is today 10 years from now? 1,000%. When will the average exit happen from a deal that we do at the early stage today? 7 or so years from now? So it's a very short-term, uneducated thought, in my opinion, for them not to participate. But should they not participate in something that they don't understand and that they can't add value to? They shouldn't participate in that. So take a back seat. Let us lead the charge. I'm fine taking all the best deals with Haseeb and Min and with you, Ali, and you know, call us up when you need help with due diligence. Call us up when you want to invest in one of our companies. And you know, we're, for just using us as an example, right? DGH is the only 100% blockchain focused fund that's part of the Draper Venture Network. And the Draper Venture Network is 20-something funds around the world with billions under management, and most of them are much more traditional, even with Tim leading the charge, right? And Tim's fund does, of course, blockchain deals, but it's not 100% blockchain. And I've actually sat on the technical due diligence calls for some of the deals they're thinking about doing in the blockchain space, even with the people who do the normal tech due diligence for them, because the tech due diligence people for those funds don't understand blockchain. And I'm, you know, technical, but I wouldn't consider myself an engineer. I break things, and I'll go into people's GitHubs. I'll launch projects myself. I have my own, you know, Linode servers and goof around all the time. But I'm not as technical as probably the person who should be doing the real deep dive into technical due diligence. But that just shows how the rest of the VC community looks at the space. But just like Min said, there's certain things they're really, really good at. But they're not crypto natives. And sometimes the size of their deals and the size of their funds are so, you know, unnatural to the space or to the size they're participating in. We're a brand new industry. You don't need a, you know, Andreessen's $2.2 billion fund that they announced today to make an investment in the best early stage startups. In fact, by default, they have to go later stage because you can't deploy that kind of capital naturally in a seed stage startup. Like, they can't justify the time being spent on making a 300K investment or something. It just doesn't make sense. So people like us, I think, are very important to the whole ecosystem. And the crypto natives, again, it's an industry based on trust too, right? The DeFi groups don't really trust VCs, but they'll trust the ones who actually participate, the people who launch open source projects themselves, or at least are there with them along the way and cheering them on and understanding. So, you know, going back to your question, should they be skeptical? Yeah, if you don't understand it, you shouldn't ever invest in anything you don't understand. But they should be learning it and understanding it because we believe in it, obviously.
I agree, Alon. And so, you know, I think what we're hearing here is, you know, traditional VCs have been a little slow. I think they've been skeptical. They may not fully understand it, but I think we are starting to see more and more of them starting to enter the space as well and dip their toe into it, as we're seeing even with some of these, you know, bigger raises that are happening for capital coming into the space. I want to move over more to some of the emergence of sort of crypto VCs. And of course, this has mostly been over the last, you know, 5 or so years. But especially over the last couple of years, I think there's more and more, you know, perhaps each passing month. Min, I want to start with you. So you run Ethereal Ventures, a crypto native fund. How are you approaching DeFi, and how does this, you know, differ from traditional VCs?
Yeah, I think it could be, you know, when we talk about sort of a crypto native fund versus a traditional VC, I think there are differences in several areas. So, you know, approach, how we sort of select companies and due diligence, how we add value, also probably philosophy. So I guess part of it is the approach where, you know, perhaps a traditional VC needs to sort of see market readiness, which is, okay, this is happening, so I need to invest in it. Whereas I think crypto native VCs generally believe that the paradigm shift is here, and, you know, we're going to have one startup breakthrough at a time. We're going to make a real difference in traditional industries. So, you know, that belief system, I think, is like the defining factor there. And that really allows us to take the approach of, like, you know, working with founders at idea generation stage, super early, if they're building funky primitives that just enable them to do cool shit that they just dreamed up, we love that. Like, you know, whereas maybe other VCs might think like, okay, well, how are you going to make money on this? Like, you know, as like the first leading question. But, you know, it's because, you know, we're users of DeFi. Like a lot of us have built DeFi projects before. So, you know, we kind of understand why it's so exciting. And I think perhaps like, you know, in the earlier days, we maybe used the word decentralization a little bit too liberally, but, you know, that's really not the point. It's just a better product experience, better UX, and a lot more secure, you know, at the foundation of it. I think, you know, in terms of the value add as well, like we like other investors, like we might not do it through the fund for a bunch of reasons, but we have the ability to sort of help bootstrap liquidity through providing liquidity. You know, we can also stake tokens, but I think more meaningfully, just being very involved in governance, helping with a lot of sort of, you know, grant proposals, like token, like design, network distribution. These are all very like specific skill sets where it's quite experiential. Like, you know, you kind of can pattern match across like various projects. And each time we do it, we learn something new. And it's like really encouraging to see how far we've come from, say, like the days of SaaS where we're like, what are we going to do with this, right? I think the industry has just made so much progress since then. And if you're kind of still stuck in that, like, oh, SaaS are a bad thing, then, you know, you're many years behind of like, you know, where a crypto VC is today. I think looking like ahead, like, you know, a lot of say on-chain funds and DAOs, like they're the natural cousin of a lot of DeFi too. So, you know, thinking of like connecting all the dots and seeing where teams can go and monetize in very interesting ways. Like I think these are directions that perhaps a traditional VC might not be able to guide teams towards. And, you know, for us at least, like, and I know like the investors on this call also agree, like crypto is a global equalizer. So is global distribution and community building from day one. So really pushing teams that, you know, they're thinking not just about addressing one market, but like, you know, the global market, and having that appeal from the get-go, I think is also something that's very crypto native.
Absolutely. I think those are, you know, some quite interesting insights, you know, into some of the differences. Alana, I want to move to you because you run Draper Goren Holm and you've been leading a number of exciting DeFi and crypto solutions. But how is Draper Goren Holm supporting these startups in the DeFi space? I mean, you know, we heard that it's different from, you know, traditional companies. You know, how can Draper Goren Holm or funds in the crypto space actually add value to these startups?
I think, you know, it starts just like a startup with the people, right? So something we do when we're thinking about making an investment is we look at the company, we look at the founders, and one, do we love it? Do we want to participate? Do we want to be locked in a room with these people for the next 10 years? We make those thoughts, but then our first question we actually have with each other, and we say this out loud a lot when we're talking about deals, is what do we bring to the table here? Like, how can we add value? Because if we're the first investor, one of the first investors, we have to justify the amount of ownership we're going to have in something. Sometimes it's a protocol, sometimes it's equity in a startup, whatever it is, we have to justify that ourselves to justify the amount of time and effort we put into it. And sometimes we don't know, right? Like there've been a couple times where it's like, you know, in the medical space or something that we really don't understand at all. And then Joseph and I are like, I don't know what the first step would be here, right? And then there's other times where it's exactly in our sweet spot, the kind of technology Joseph and I have been working on for our whole careers, and we know exactly how we can help them. And the way we're different is that once we do write a check, once we do become a part of the team, we're crazy hands-on. So, you know, there's like the spectrum of investors. Some investors you don't want to be hands-on, you want them to write you a check and take a back seat, and that's sometimes the best investor for a company. And then there's the type of people like us where the day we sign the deal, we create, usually even before we sign the deal, once we verbally agree to doing a deal with somebody, we create a WhatsApp channel with the founders of the company, me and Joseph and our team, and we start working with them. And it's dependent on a company. Sometimes it's really hands-on at the beginning. It happens in waves sometimes. And sometimes on a daily basis, we're communicating with the founders of these companies. And we're at 22 portfolio companies now. So we're learning to scale that and do all these things. But we literally are, you know, sometimes it's me hopping in and putting on my like QA product person hat from when I worked at MySpace and Amazon back in the day. And I start beating up their product and giving them feedback pre-launch. Sometimes it's, marketing exposure through our conferences, things like that. And sometimes it's me launching a WordPress plugin using their technology to be able to showcase their product, right? It's really different per company, but we're crazy hands-on in that way. And that's what really makes us different probably than the average. And we try to be complementary, right? And usually someone on our team, between me and Joseph and our team, can complement that company. And the word we use the most when we're pitching to investors ourselves or when we're talking to companies is amplify. We try to we want to be there to amplify what the company can do, because there's no amount of work that we can do that will make them successful. But what we can do is, if they do the hard work, if they're doing it, we're there to amplify it. And we participate in the governance voting, and we participate on chain and on social media and online, right? We don't take a back seat, and we're all in, alongside the founders. That's what makes us kind of different.
I love that a lot. I mean, even on our side, we're super hands-on, across marketing, strategy, finance. But I've heard stories about, on really competitive deals where you've added a bunch of value even before signing that deal, which is, I think, fantastic to see in this space. Haseeb, I wanna move over to you, and you also lead a crypto native fund, Dragonfly Capital. I mean, how is Dragonfly doing things differently from traditional VCs? How are you guys supporting startups in the space as well?
Yeah, so Dragonfly, we're fairly unique in a couple of ways, even among crypto native VCs. One aspect of that is very global. So we have a footprint in Asia and a footprint, here in the US, and that allows us to bridge the gap between two ecosystems that otherwise don't really talk to each other very much. So we sort of think of ourselves as the gateway between these two worlds that allows founders who, especially in DeFi, DeFi is a global phenomenon. If you just live on crypto Twitter, you might get the impression that the only thing that matters is what green frogs on Twitter are saying about your protocol. But there's this whole other world that if you've never installed WeChat, you just have no idea is even going on. And is a huge part of your capital base, especially if you're a DeFi protocol, where it's become increasingly obvious how much of the volume, how much of the flow, how much of the TVL is not Western. And of course, the point of crypto, the point of DeFi, is that it's global, is that it's borderless, is that it's permissionless. And so, from the very, very early days back in, early MakerDAO, Compound, UIDX, 1inch, UMA, we've worked with a lot of the very earliest protocols and helping them figure out what does it mean to be a global protocol and how do you engage your user base and your community, whether or not they hang out in Discord, which is, again, only a subset of the world even has access to a lot of these products that people are using. So that's a big part of what we do that's quite different from most other VCs. But the other part of, I think, what makes us different is that we're just gigantic nerds. And so when we see like a cool new idea, like we just nerd out on it. Like that's, I'm a technologist, most of our team is technical. Like we just like to hang out with founders. If they have cool ideas, we like to jam on it with them. Be like, oh, can we break it this way? What if we do this? Have you thought about doing this different kind of token distribution, or this? You try to use a PID over here, or do this thing over there. We just love that stuff, and that's part of going back to your original question of like what's different from a crypto VC from a traditional VC, is that we just live in this stuff. We've been using DeFi since the very early days, back when there was no reason in hell to be using DeFi. It was so painful, but it was just cool. It was just cool. We just love to nerd out on what can be possible on smart contract. And now we're interested in a totally different place with the Polygons and the Layer 2s and the Binance Smart Chains of the world, making all this stuff much more approachable and usable. And we're an order of magnitude away from what I suspect is the next phase of coming of even more adoption than what we're seeing today. But all of that just gets us incredibly energized in a way that I think you'd be hard stressed to find that from a traditional VC. And that's a lot of, I think, what entrepreneurs in this day and age in crypto really respond to, is they want more than just capital, they want a partner. And that's what we try to be.
I love that. And I think you brought up something really insightful. I mean, a number of things, but one in particular is I think a lot of traditional VCs tend to be localized, geographically focused. And in the DeFi space, it's extremely global, and that makes it very different. And that's where a lot of value can get added. I mean, if you don't have a China strategy, for example, or an Asia strategy, and breaking down sort of the different countries, which, are very nuanced, it's difficult to access a lot of what's going on in this space. I mean, and it's almost like a totally different world. I actually did one of my masters at Tsinghua Daxue in Beijing and spent a lot of time with, early miners in the space, a lot of the largest, funds and exchanges and companies there. And it's just completely different as a way to sort of approach this entire market and even to access it. So I think that's very insightful. Keeping in mind, we are running short on time, but I do want to touch on, looking 5 or 10 years into the future. And this is going to be really short, but Alon, I know you've had a lot of very correct predictions, in the space over the years. So you got to reach into your crystal ball. What is, 1 or 2 things that you think we should be looking out for over the next 5 to 10 years, with DeFi and sort of blended with this VC world and what it'll look like?
Well, I'll say, exactly what Haseeb said was right, in that we're, by default, the fact that we've been here for multiple years, all 4 of us, means that we're such nerds for it, right? Because there wasn't, at least for, let's say, 2.5 or more of the last 3 years, but even before that, there wasn't like a huge incentive other than being obsessed with it to participate, right? Like, I don't know, we were doing it in spite of our own short-term, probably, health in terms of financial and mental and everything else, because we're all obsessed with this, right? So a lot of those original products, I think that we invested in, I think, our first investment was Total. And it was because I was using Ether Delta and stuff like that to participate, right? And we all were, and the product stunk. And the reason I invested in Total was because they created a product that made DeFi usable. And even the original version of their product, which has been copied about 1 million times, and most famously by, like, let's say 0x or 1inch, right, are still really early and not that great of products from a usability standpoint. So I think the next evolution will be all of these things that we as crypto natives consider like products, like Aave and things like that, are actually going to become the back-end systems for more traditional finance groups. And I think that we might not see it, or the consumer might not see it, and it'll depend on regulation certainty, and it's probably actually gives a huge advantage to international companies versus US-based companies, but I think that's the future. And I spoke too long. I want the other guys to talk.
So in a quick sort of sentence, Haseeb, what do you foresee as the biggest long-term risk you foresee in the space, and Min, the most exciting opportunity you see over the next 5 to 10 years?
You said the biggest long-term risk?
Yeah.
Wait, so I got to be the pessimistic one.
There you go.
All right, fine. Biggest long-term risk, I'd say, is probably regulation. I'd say if DeFi is naturally more subversive than I think most of the other stuff going on in crypto, because it has a collision course with the natural instinct for a financial regulator to control everything that is possible for people to do. And that means that it's very uncertain what's going to happen in the intersection of DeFi and regulation.
Yeah, I think, on a more optimistic note on the opportunities, I mean, the institutional card, I think, is one that we can't ignore. I think a lot of people talk about what if institutions start investing in DeFi. But, one conversation that we had recently with a global partner of ours that stuck with me is that, one of our partners wanted to figure out how to use smart contracts to deliver derivatives. And that move alone will save them, probably in excess of current DeFi market caps. And when you kind of extrapolate that across all the financial institutions, in the world, it becomes pretty much a no-brainer once one person does it. I kind of came into the space really because of frustration with fintech, frustration with the payment stack. So I'm very excited to see mainstream fintech applications with beautiful interfaces built on crypto real. So, and I don't think we haven't fully started that yet. It's really improved a lot, but that will happen, and I think it'll happen a lot quicker than we think.
Love it. So there you have it. So mainstream applications, PayPal, hope you're listening, and many others out there. But This has been a very insightful discussion from our incredible panel. And I can personally say I've learned a lot, and I'm sure our audience will agree as well. I'm encouraged by where DeFi is going in that intersection with VC. As you heard it, crypto VCs are clearly adding a lot more value. And that has been the preference of a lot of native projects in the space. Now, there's a lot of other incredible presentations and panels from experts all around the world remaining at the Global DeFi Summit. So what better time to learn from these individuals from the comfort of your own home? Be sure to check them out, as I know I will be. Thank you again to our incredible panelists for making the time to share your insights.
Thank you.
Thanks, Alex.
Thanks, everyone.
What is the future of decentralized finance? Affordable, decentralized, and sustainable. Experience the power of DeFi in ways you've never experienced before. Plenty allows you to use DeFi tools that you've grown to love and adore, but without the crazy fees associated with proof of work. Enjoy sustainable yield farming programs that are cost-effective, liquid, and built on the powerful Tezos blockchain. Visit plentydefi.com now to get started. The ambition to succeed starts with a vision. We have translated that vision into the capacity to create a world that could be very different from the one that is today. A question that we must ask ourselves: what's next for finance? It's only when you question the ordinary that the extraordinary is revealed. Once you catch a glimpse of it, it becomes your reality. A reality that pulsates with sustainability, affordability, and financial innovation. Visit plentydefi.com to get started. Time is ticking away. Ditch the banks and join the DeFi movement on Tezos blockchain. What if we told you there was an affordable, fast, and sustainable way to leverage the power of decentralized finance, all the while empowering the next generation of finance? A proof-of-stake implementation into decentralized finance, taking up to 2 million times less energy than proof-of-work networks. It's time to start caring about your impact. It's time to care about the future. Visit plentydefi.com to get started.
So welcome back to Global DeFi Summit. The day is very well underway. We've had some fantastic panels so far. Huge thank you to Ali for his previous moderation. Now, our next panel discussion is really talking about the disruption in the world of traditional finance that everyone knows very well, and how DeFi will really shake this up, and also how decentralized lending and borrowing will offer new opportunities to plenty of users around the world. So moderating this panel, we have Christina from Cointelegraph. I'm going to pass it over to Christina. And ladies and gentlemen, enjoy the next panel.
Thank you so much, Jessica, for the presentation. I'm really happy to be here at Global DeFi Summit with a royal flush of co-panelists with me. So I'm Christina Lucrezia-Conner, acting editor-in-chief at Cointelegraph, and I'm happy to present here Tyler Scott Ward from Barnbridge.
Yep, it's nice to meet everybody.
How are you doing?
Doing well.
Great. Scoopy Trupples from Alchemix. How are you doing today?
I'm good. How are you? It's great to be here.
Awesome. Thank you very much. And Dr. Adel Al-Masiri from DeLandeo.
It's an amazing to be here. Very interesting times, and I'm loving every minute.
Well, we will be talking today about how decentralized lending and borrowing will disrupt traditional finance forever. I like this word forever. I remember moderating a panel at the Global DeFi Summit a year ago, and I was checking my notes. So like in 1 year, the total value locked in DeFi markets has increased from like 300 million to over $5 billion. Where are we now today? At around 50 billion. So my first question to you is, how do we keep growing at the same pace? I mean, at least in the long term. I know that the volatile markets definitely something that we keep thinking about, but what should be happening in order for us to discuss in a year from now the same pace of development of the DeFi market?
So let me take a stab on it. I think there are a lot of good things that's happening in spite of us. I mean, look around us with all the monetary systems that just keep printing. So basically, the devaluation that's happening, the inflation that keeps popping its heads around that, makes everybody wonder. I mean, what's next? What should I do with my money? Where can I put it so that at least it can preserve its value? Because that's what the normal, typical person is looking at. Like, hey, my money is losing value in there. And then on top of all of that stuff, there is a free commercial running every year called 1040, because on it, there is a checkbox that says, have you invested in Bitcoin? Have you done any transactions? So like, wow, means like 30 million Americans at least will look at, hey, what is that Bitcoin they're talking about? And if the government is interested in it and asking me about it, shouldn't I try it? And then on top of it, you get all the people talking about what Tesla done with it, what Grayscale done with it, and all the investments going there. So I think that in itself will generate at least a curiosity from people to look at what are those new tools that exist over there. So I'm curious to know how the rest think about it.
I like the city of curiosity. And adding to the previous question, Tyler, well, we still have, like, despite the many benefits of the centralized protocol in terms of community, we still have like only a couple 100,000 users at most. So how are we supposed to incentivize this curiosity more and bring more people into the space?
Yeah, so I think that answering that question is kind of twofold. Like, you can look at it from like a volume perspective. So like, there's still the 80-20 principle that exists. Like 20% of the users are going to bring like 80% of the like actual volume in TVL. I think in DeFi, it's probably going to be closer to like 595. And the reason for that is the very large institutional players, they really have not come in a meaningful way in terms of actually like using DeFi protocols, right? Like, I've talked to $30-40 billion hedge funds that have like bought the governance tokens of DeFi protocols on like Coinbase custody and some of those places. But they're not essentially actively yield farming or depositing into Aave, even though, you know, there's not like really a better place that you can actually get yield in the markets, even though they're suppressed right now. They're still substantially higher than like traditional bond yields. So like, in order to get that across the finish line, we kind of need two things to come about. And the first one would be like institutional grade insurance. So like the largest like insurance like groups in the world that insure hedge funds and like their positions and strategies. Like maybe there's $20 million of like underwriting available. And that's not going to be sufficient for like the billions of dollars that are trying to come in. So like off-chain insurance that insures on-chain contracts is going to help. Like time in market and trust is going to help. And then I would also say that from a regulatory perspective, a lot of these larger funds are unsure if they even can like dabble in like DeFi, or if, you know, moving from USDC to like AUSDC or CUSDC, like what that means from like their reporting perspectives. So in that respect, I don't think that anything's needed other than more like regulatory clarity, as opposed to like, you know, just letting them know what they can and can't do. But that's on like the volume side. That's how you're going to get like the 5% that bring in 95%. I think that very likely will get pushed forward by just sheer numbers, right? Like if you have 10 million people around the world that are using DeFi, at that point, it starts to get more and more real. Like 100,000 users or even $50 billion isn't the same as 10 million users at $50 billion, right? And I think on that respect, probably the same from a regulatory perspective, where you're not now thinking about like institutional money managers, but even like fintech companies that could essentially plug into DeFi very easily and like onboard tons and tons and tons of users, like a PayPal, a Robinhood. Like they don't also know that they can just plug into a DeFi rail and essentially what that means and how they report it. So a lot of the actual users, by the time that we hit those tens of millions of users in DeFi, they're probably not even going to know they're using DeFi. Like they're not going to know that they're plugging into Barnbridge. They're not going to know they're plugging into Alchemix. They're not going to know they're plugging into Aave or Compound. They're going to be using them on other applications where they utilize them at the protocol level and they exist as the application interface.
That's an interesting observation. Scoopy, you really had a very interesting story this week, and I'm personally really impressed how empowered is your community, because in my opinion, well, no user of bank would ever do what your community did for the project if the bank lost its money. So my question to you is how do you think we could scale this empowerment for the community while it keeps growing?
Well, I think like as far as the Alchemix community goes, like shout out to our community. They're really awesome. You know, we had an unfortunate bug that led to erroneous debt repayments that led to our new synthetic asset, ALETH, being under collateralized. Luckily, our community has donated already more than half of this debt payment that happened. And it looks like we'll probably have enough to cover it and have plenty of runway left to spare for Alchemix. So we'll be going forward and we'll be going strong. So it was like a punch to the mouth, but it was okay. Thank God we have an amazing community. And I think the way we need to build it is like in our Discord. I'm really connected to our community. I go in there like all the time, talk to them, and they're really great in there. And there's a lot of people who feel like they're priced out in Ethereum. I know recently, like it's been 10 Gwei for transactions the last couple of weeks and stuff like that. But a lot of people were complaining like, when are you going to be on Matic? When are you going to be on BSC and things like that? There's this great crying out for all those people who want to be in DeFi and want to do these things, but they can't afford it. So I think the thing that we really need to focus on in Ethereum and DeFi is scalability. I'm really, really excited for ZK rollups and optimistic rollups as well. So things that Starkware, ZK Sync, Optimism, and Arbitrum are doing are all really, really cool. And our team at Alchemix has started researching these and playing around with some of the demo stuff that's out there. So it's definitely something we want to target. And I think that if we can bring DeFi to the masses, so it doesn't get gobbled up by some top level application that boomers use, that hooks into the DeFi rails. But if we can actually educate people to use these tools and stuff like that, then it'll be really empowering. And I think that's the future that I want to see. But I kind of do agree with Tyler that we probably will see these kind of DeFi super apps being built that harness all the DeFi rails, and people aren't even sure that they're even using DeFi. It's just some app on their phone that they don't really understand where all these yields are coming from, but they're getting them and they're happy with them. I definitely see that happening, but that's even really cool in and of itself, because that's these other people bringing you business, and you can capture that as a DeFi protocol.
What's the time horizon in your opinion, and what are the prerequisites? Like when we actually will see people using DeFi applications without knowing that it's based on blockchain, etc.
I mean, if they provide regulatory certainty, I think that it would start next month. Like that's the easiest answer. Like I think I mean, maybe not a month because it's going to take time to code it all. I agree with Scoopy that like in a perfect world, I'd love to see, like we have a super active Discord and they're very, very intelligent people. I think Alchemix and Barnbridge are probably at a CFA 2 level of finance understanding mixed with like also being relatively complicated from a tech perspective. So while I would love to see that, I still have to be kind of honest with myself that like the average person that's using like a certificate of deposit at a bank probably doesn't know where that yield's coming from either. And, you know, like even people that were buying mortgage-backed securities definitely didn't even, I mean, I don't think that they understand counterparty risk, and I don't necessarily think that they need to, right? So, I mean, I would love for the whole world to be as empowered as the people in both of our Discords to understand that degree of where things are coming from. I just don't know if the average person, like, you know, in America at least, is ever going to be on that level of financial understanding. But the yields are real. They're going to real places. And once you start to provide some of that certainty from a regulatory perspective, then we can start bringing real world assets on chain, real world loans on chain. And then, you know, the applications can plug into it. The big boys and girls can essentially come in at the institutional level. I think that's the end game probably. I mean, I don't even think the average person that uses Robinhood knows the difference between like a centralized order book and an automated market maker. I don't even know that they know what the margin is that they're using. They just kind of get on Robinhood and play around. And I think that's at the realist in me thinks that's going to be the outcome. But I just don't think it's going to. I think that we'll continue to slowly grow at the clip and rate that we've been growing at over the last couple months, as opposed to like the whole like past year and a half, until there's some questions answered that will bring down some of these guardrails. Even if it increases guardrails in some areas, it at least gives us something to work around.
But it's interesting that you mentioned average person in the US, because like average person in the US is much more above any average person in so many other countries. So like, in my opinion, the entrance barrier is still a big issue. And in terms of education, as Kupi mentioned, in terms of availability, and in terms of traditional finance legacy, of course. So those allow users of a protocol to own the protocol, but there's still uncertainty that DAOs can compete with traditional finance organization. How and why do you think will they remain competitive?
Because of the simple fact that in a traditional financial institutions, you have all this institution, all the people working in them, and they have competing interest. One is to produce the profits and the gains for their shareholders, and then for their own selves in terms of payment and so forth there. But in a DAO, the shareholders are the people usually using the system. So the interests are aligned in there. So imagine you and me and Tyler and Scoopy are basically managing something for our own benefit in it, and voting on it, participating in it. The example that Scoopy outlined in terms of, like, mistakes will happen and things will go wrong. But because you have the community around you and we make decisions together and we go the road together, you find the community just behind you, trying to build with you, supporting you in the system. Nobody will do that for something that is designed for gains of others in there. That's the big difference, that we have a community and the community builds. Blockchain is all about community. Without community, there is no such thing as blockchain. That's what I'm thinking.
Nice.
Yeah.
Oh yes, community is so important, and in my opinion, it's been so exciting to see that this decentralized year, where so many people just couldn't even meet, members of the team, colleagues, friends. Like so many exciting things are happening on like community platforms that even at some point you think, well, that's a great opportunity, and there is this positive impact, of course, by any negative thing that is happening. Scoopy, you and Tyler as well built your products on top of other DeFi protocols without asking permission, of course. How much faster do you think can DeFi move due to composability? Like how important it is for the community of developers to build a new reality for the DeFi space?
I mean, that's one of the reasons I'm so bullish on DeFi in general, is because of the composability and just how it's such an open system. You have all these contracts that can then call other contracts, and then these contracts can call other contracts, and they can all talk to each other. And and a lot of these things are fairly simple. So you deposit something and you get, somebody else can borrow it, and in return for borrowing it, they can get an interest rate and stuff like that. And there's like all these simple building blocks, but when you can mash them together, you get something like Yearn, which provides liquidity, and with that liquidity, it makes the markets a lot more liquid, and then they earn governance tokens that liquidate. Well, not all of them, but sometimes they keep them for strategies for long-term investments and stuff like that. But then they return that as yield to people, and it's like this really crazy machine that they've made that's automated a lot of the yield farming, and then we can build stuff on top of that. And then the cool thing is that in our Alchemix V2, which will be slated out for later this summer, we're going to then open up our contracts to let people build on top of us. So, it's gonna, we're gonna become a Lego brick in and of itself. So I think that's really cool. We're actually gonna build on top of ourselves using our core protocol as a Lego brick. And it's really cool because there's lots of protocols, like Barn Bridge over here with Tyler, and there's other ones out there that also could synergize with each other, and we can build new things with each other. And I think that space for collaboration and building together with other builders in the space is something that makes us it's DeFi's moat. It's what differentiates us more over CeFi, is because we can do these things. It's programmable. We can talk to each other. It's great. It's one API.
But isn't it also dependent on
the permission to do it, right? That's one of the best things about it is also one of the things that I think Scoopy clearly shares the same passion as me on how some of this stuff works from a composability perspective. And is it Dr. Adele? I'm sorry. Is it Adele or
Adele?
Adele. Okay. So, I mean, he was talking about his community too. So where I wasn't trying to be a buzzkill saying that most of the users aren't going to know they're using DeFi. Cause I'm more talking 10 million users, right? 100 million users. But what will be cool is when that happens, what we love about it is also going to grow. That's going to attract more passionate people into Discord. That's going to push more people to learn Solidity and Rust, if that is where a lot of the development's going, or Cairo if it's on ZKs. And even just the passionate communities that just love to nerd out and do want to talk about the more complex aspects of finance, that's going to grow too, right? Because a lot of those users are going to trickle in and become people that will build with us. And I think that some of what needs to happen there, we're working on as an industry. Scoopy was talking about all the same layer twos that we're looking at, right? And as a money Lego, we can only plug in. I mean, we're building primitives that we kind of control our own layer two destiny. But from a composability perspective, I plug into Compound, who's not on Polygon, or not me, but Barn Bridge, right? And basically, we can't just go put Compound on Polygon unless they build to it first, unless we were like going to go fork them or something, which we're not going to do. So like Aave, we can put on Polygon, right? And so as more groups move to like Optimism, to Arbitrum, to all of the ZK rollup solutions, there's more. I mean, I see exciting like scaling solutions all the time, and then even like Ethereum is working on ways that we could essentially scale with ETH2. That's going to make it a lot easier for like new developers to come in and even essentially just build an interface into like what we're building, where like there's like protocol layer, like permissionless integrations. There's like integrations that need to go through governance. And then there's just like an interface that you can essentially do cool things with. So as we grow and scale and get more users and the networks become more stable and scalable, that's going to increase everything, including a lot of what I think attracted us to the space in the first place. And that's why I don't think it's going to go anywhere, because it's a lot more fun to build in DeFi than CeFi, TradFi, or I mean, any other industry I've ever been in. But good luck to the investment bankers that are, you know, making those kids work 100-hour weeks, weekends right out of school, because you can get the same intellectual stimulation working in a DeFi Discord. Show your worth, get compensated, and start building with people that are very, very intelligent and very, very driven. And I agree with Scoopy. I think that is a very strong moat that is going to be tough to beat.
Awesome. That could be an awesome, ending of the panel, but we still have 5 minutes. So my last question to you guys is, how do you see the future of DeFi, let's say in the next year? Is it multi-asset? Is it multi-governance? Is it community centric? Is it whatever? Dr. Adel.
So that's a perfect opportunity to put a shameless plug in, because what I see in DeFi is it's a Lego, and it allows speed of innovation. So while in the normal world we have to go through a lot of hurdles, in DeFi we can just come up with an idea literally after this panel, work on it on the weekend, and on Monday it's up and running, and people can judge whether it is good or bad or how it will go from there. So experimentation like that, same thing that happened in Silicon Valley, but on steroids. It's global. Anybody, any couple kids, anywhere in the globe come up with the idea, and they basically can build it, and they will find the support from all the communities and the giants in the field to kind of like, hey, this is cool. Let's put it out there and push it forward there. And then things like Dylan there, which basically allows micro lending, something that could not be done within the banks globally, turns the globe into a really global village in there. That could not be done. So then this will come up there, and we'll see an acceleration of those new ideas to the point where the CFI can't even think straight around like what they are trying to do, and they will simply have to adopt it, just like what they have been starting to go there. And you go to your bank, it's like, do you want a checking account, saving account, or a DeFi account? And all right, that would be a wonderful day next year.
Awesome. I get to learn how many ideas will come after this panel. And I'm pretty sure that Stanley, who missed the panel, actually has been developing some idea right now. Scoopy, your last thoughts.
I mean, I think we're just going to continue to see innovation from new teams that we don't even know about, and from the existing teams as well that are out there. You know, it's an arms race, and everyone's out there trying to make the best DeFi protocols out there. You know, Uni's got V3, Bouncer's got V2. You know, like we're probably going to hear some more stuff from Sushi soon, and like, you know, Synthetics has got stuff. I know like Alchemist has a V2 we're coming out with, and I know, you know, everyone's just going to be pushing innovation, and you know, like it's going to be painfully obvious that DeFi is the superior option, and you know, I think we're just going to have more and more people join the system and join the ranks, and you know, our total addressable market's only going to continue to grow.
Awesome. Friendly and creative arms race. Yeah. Tyler.
Yeah. I mean, I think that we're still building like primitives right now, and like we just started getting into like derivatives and money Legos. I don't know if this happens in a year, but I do think that if you even look at the way that we are working right now, like the usability of DeFi versus even just, let's call it fintech and not like CeFi, it's drastically superior from like a UI perspective, and from a user experience perspective, it's getting better and better. And I think at like a really high level, we're gamifying finance. And I think that not only is that true from like the perspective of we're just making finance more fun, and like if it's not community driven, then I mean, I don't even know what I'm here for, because that's kind of the whole point is like you have this community of people that are like playing these games with you, and it feels like games, whether you're winning money or losing money. And I think that that will probably get amplified by additional derivatives built on top of the other derivatives, gaming coming into the ecosystem, like NFTs, media. I think at some point that stuff's going to start to converge at a rapid clip, in the same way that even like right now it's like primitive, and then like money Lego, and you've got like a couple money Legos, like Barnbridge and Alchemix being them. Then you're going to have money Legos that merge those, right? And then if you start adding in like the NFT innovation and a lot of the gaming innovation on top of that, well, then we're going to branch into those. And then it becomes this like mesh network of gamified experience mixing like literally games, finance, media, NFTs. And at that point, I think that you've fundamentally changed like what finance even is. But and again, I don't know if that's going to happen in a year, but that's where we're headed, with just how these dots are connecting.
Awesome. Thank you very much. Thank you, Global DeFi Summit, for organizing this wonderful discussion. I learned a lot, enjoyed a lot, and honestly, guys, like the community is what makes this space incredible. It's games, but it's also like making your dreams come true, and it's about building up a sustainable and bright future for as many people as they want to join the space. Thank you so much, and have a great day. Enjoy the following panels.
Bye, everybody.
The ambition to succeed starts with a vision. We have translated that vision into the capacity to create a world that could be very different from the one that is today. A question that we must ask ourselves: what's next for finance? It's only when you question the ordinary that the extraordinary is revealed. Once you catch a glimpse of it, it becomes your reality. A reality that pulsates with sustainability, affordability, and financial innovation. Visit plentydefi.com to get started. What is the future of decentralized finance? Affordable, decentralized, and sustainable. Experience the power of DeFi in ways you've never experienced before. Plenty allows you to use DeFi tools that you've grown to love and adore, but without the crazy fees associated with proof of work. Enjoy sustainable yield farming programs that are cost-effective, liquid, and built on the powerful Tezos blockchain. Visit plentydefi.com now to get started.
A huge thank you to Christina there for her moderation from Cointelegraph. Now it's time to take a look at one of the fastest growing niches in the world of cryptocurrency and emerging tech. We're talking NFTs and also how they're applicable into blockchain and onto DeFi in particular. So let's bring on our next set of panel guests. Okay, so we have a very full panel here. Fantastic. I think this has been the most populated panel that we have had so far, and it's a perfect conversation to be having. I was so excited to bring you all on for this talk. We're talking about the fact that NFTs have huge potential, from digital kittens to complex financial products, but how can they be used in DeFi? So what I'd like to do, first of all, is just ask each of you to give a short introduction in 2 sentences to yourself, your organization, and what brings you into this emerging tech space. Maybe we'll start with Ben and we'll work our way around.
Thanks, Jess, and thanks for having us on today. Ben Lakoff, business lead at Charged Particles. So we take NFTs and we enable you to put things inside of it, one of which can be DeFi assets. Zach, you can go next.
Hey everyone, Zach Burks, founder of Mintable.app. We are a NFT marketplace, started in 2018, been around in the NFT space for a while, and we got some pretty cool tech.
Oh, hi.
It's like
It's my
Rich family. We just go up and down. Who goes next?
Cool, awesome. Okay, my name is Mary, co-founder of Rangers Protocol, and we are the infrastructure for the metaverse in the future. So basically, we are the first one who can realize the NFT cross-chain with the historical data retaining, and also support for the complex such as games or other NFT-related applications. Thank you for having me.
Why don't you go, Jesse? I'll go last.
Awesome. All right. Hi, everybody. My name is Jesse, also known as Golden Cross on Twitter, and I'm the summoner of Avagachi. And what we do is DeFi staked cute little ghosts powered by the Aave protocol. So yeah, that's it in 2 sentences.
Thanks for having us, Jessica. It's like the good old days back in the ICO boom and many nights in Malta. So it's good to, we haven't joined one together in a while. My name is JD Salvego. I'm the founder, CEO of Anarchy X. We're an open social gaming economy based on DeFi. We have a what we call a GDEX protocol, which is decentralized finance gaming platform exchange. And we produce social NFT games based on DeFi, and then our protocol hosts a dev engine and some other stuff. And we like to make cool designs, as you can tell with my background. So we like to have fun. It's probably why we have the coolest panel, because we're all gaming people. No offense to the straight DeFi people.
You know what? I'm so pleased with the panel. Everyone seems so well expertised in NFTs as well. So I know we're going to have a very hot conversation. We've got 30 minutes to kick it off. So I'm going to jump straight in. Actually, I'm going to start with you, Ben. And I'm actually going to ask you for an example of an NFT use case into DeFi, because I think from an integration aspect, that is one that people may find quite challenging. There might be some hurdles to overcome there. So I'd love to get your impressions to start off with.
Yeah, sure. So I think, I'm not sure the listener base here, but it's important to note that NFTs are not just art. So NFT is a token that's non-fungible, which means it's a unique token. So when you think about NFTs as a unique token, it kind of broadens the perspective of what an NFT can be and then how that could be used in something like DeFi. So if you take a ticket to an event or a e-gift card, or more financially complex as like a bond, these could all be represented as NFTs. So the convergence of NFTs and DeFi become a lot more relevant versus when just thinking about, oh, like my piece of art connected to DeFi. Also, I mean, highly relevant within this group is in-game items can be represented as NFTs. So when injecting these things with DeFi, as many of us are doing, it provides a lot of flexibility. So I'll kick it off with that, more of a semantics to start it off.
Amazing. And as we do have kind of a gaming collective group there, I think one question that would naturally come then when it comes to NFTs turning into DeFi is when it comes to the market value, a market value of NFT, as we've mentioned there. How could that actually be put into perspective? And would there be any challenges that maybe comes from DeFi when it comes to traditional cryptocurrency tokens? And that's open to anyone in the panel.
Well, one thing that comes to mind and that I think has always captured my attention early on is you can use an NFT to not just be a token by itself, but this is one example of when it comes to valuations, is you can pull value from somewhere else on the chain. Maybe it's ERC20 tokens, and you can actually use an escrow contract to stake those inside of the NFT. And so that opens up a world of possibilities in terms of valuation, where you have a staked value plus the speculative value of this provably rare NFT on top. And there's all sorts of use cases with that. And that's just one of the many ways you could use DeFi and NFTs together.
Yes, I totally agree with Jesse. And actually, we believe that the DeFi will play a vital role in the discovery of NFT value. And there have been great examples, for example, Avagachi and also Engine, they are staking some FTs into the NFTs. And basically, actually, we've discussed this for a lot of times, and we believe that to build up a more sufficient mechanism, there should be 3 levels of assessment in the valuation system. And so the NFT value equals intrinsic value plus utility value plus premium. And actually, we have an application which is the cube to illustrate how we build up the whole system. And yeah, if you guys feel interested, I can explain more of what we are exactly doing in this application.
That's interesting, Mary, the way that you break it down with 3 different attributes, right? The intrinsic value is kind of what Jesse talks about with the staking of another token within the NFT. But because the liquidity of an NFT is just not there, and it's a single matched order to a buyer in and of itself, it's always really hard to appraise the value to an accurate level. And so when you look at providing like insurance or loans off of NFTs, you get into this really big headache of, well, maybe a buyer in New York will pay this, but it doesn't necessarily mean that it's liquid enough to get that in the event of, a liquidation on this loan, or an insurance claim is taken out and we need to pay it out. So that's always a really hard thing to deal with. But you mentioned the intrinsic value, which gives you this underlying kind of protection, where if there's 100 DAI staked in the NFT, then it's at least $100 worth of value to it, which is one way I think that people are probably going to be approaching those unique issues.
Yeah, that was actually one of our key things we were trying to solve with NFTs, because I always felt, from even back in the early days when it blew up with CryptoKitties, it's the price formation on NFTs is all baseless. So I think we're all in the same place in our minds of trying to solve that and understand that. And we ended up going after to create our own economic model, kind of a mechanized socioeconomics, where our user values that are instilled and generated are the ones that create the base value of our NFTs, and also our yield value, rewards value. So we actually had a price formation that was actually based on something, as opposed to just saying, well, I believe this in-game item is worth this. I think this prize NFT that derives this rewards is, is this. And what we found is, even if you look at a lot of the chat groups online, even on Facebook groups, people are talking about, well, how do you price this? Why do we think it's worth this and that? What we have now, because the tokenization, right, now allows assets, anything really, to become liquid, right? With this baseless price formation, it's actually deliquifying these potentialized liquid assets now, right? Because of this thing. And I think it's an interesting place where we're all going to go for. I mean, I believe only right now, the only place you can, without trying to say ours is really unique and we actually do have a real value, we actually really do what we believe is based on actually real economics of the user generated value. But unless you have Nike, right, or Reebok, like all their pricing is actually based on cost of goods and services, right, materials, everything. And then you have the fiat currency, then you have your margins. That's how they come out with their price. even on a secondary market when they're sold on, let's say, eBay. There's not friction there. You know why? Because the buyers and the traders, like in a stock market, there's a price instilled with that. And that's what I see now with all the secondary markets is they're not liquid because no one knows what the hell any of this shit is worth, excuse my French. So
fantastic French. But you've made a really good point.
I know a few more words in French. If you want to hear it. Just kidding.
Later on in the day. But when it does come to pricing as well, and maybe anyone else in the panel can also chime in on this, has there been any, because obviously we saw a huge surge in the NFT space throughout 2021 alone, let alone in the past few months individually, a price structure that needs to be implemented, or something that does need to have a little bit more of a structured substance, so that we can look at leveraging it a little bit more when it does migrate into DeFi? Is there things that need to be addressed before we make this full move? Because it sounds like it's in motion.
Things that need to be addressed. Mary, go ahead.
No problem. Well, okay. Actually, I think maybe Jesse, you want to, use some examples in your product, and I think Aavegotchi has really done a great job in this, because you have the instinct value, as I mentioned just now. And actually, to reply Zach's question just now, I think maybe I can explain more about the cube. So I think we are trying to solve this problem through many DeFi protocols, actually. Because you can see that during the whole process of the cube, actually it's a Lego on-chain. So all the resources, people are obtaining the cubes through mining, and they are staking cryptocurrencies to mine all these cubes. And in the editor, they can compose the cubes into different NFT artworks. And because the whole process is on-chain, and the NFTs, all the codes of the NFTs are on-chain, so actually the NFT can be adopted in different decentralized applications. So during the whole process, you can see that we are transferring the FT's value into the NFTs to form the instinct value. And also we have the copyright center, because people can quote others' works through buying their copyrights. So they have the utility value now. And in the end, because a lot of people, they are compose different artworks and they are quoting others' artworks, so you can see that some of the artworks have the premium value, because it has a larger scale of a community consensus, and maybe other people just appreciate what you have done. They think that 5,000 people, they have accomplished this artwork is really amazing, so they are willing to pay this in auction. So yeah, basically, I think if you want to use DeFi protocol to form the value of the particular NFTs, you should make this process before the NFT even formed. We don't think that the afterwards process is, make many sense, because if the NFT itself doesn't have value, even if you make it into, make it into more NFTs, that will be the value is not very stable, actually. So yeah, that's what we're thinking.
That's an interesting point. And Jessica, your question was related to a more sound pricing structure. But what Mary brought up, and what a lot of people, I think, we're kind of grouping NFTs into this general category. But for example, Mintable is a marketplace, and so we have someone selling like a Ford Mustang right now as an NFT, and so there's an inherent value to that, because it's like an actual tangible asset. And an insurance policy or copyrights or a full-length feature film are all different kind of inherent values that are coming into the NFT that's separated from like art, right, or a game item. And so when you look at a Ford Mustang or a house, like someone sold a house on Mintable or tried to sell a house, they ended up, no one bought it. They sold it privately. But the point is like when you look at something like that, you see, okay, this Ford Mustang, Kelly Blue Book says is 15,000, 20,000, whatever the value is. You look at the copyright and you say, well, this brand is, a global brand, and so maybe I'm going to value this copyright for this term period of, maybe $1 million. And when you look at an insurance policy, there's a market with step pricing based off of your insurance. So you can't really come up with a sound pricing structure for a vague asset class that can be applied to almost anything, right? There's no pricing structure for the intangible items, that like if you're using it for voting, like we do in our DAO, you can't, put a price on the ability to participate in governance, right? Especially with the NFT. Now, we're trying to do that with governance tokens that are ERC20s, right? We have an order book and we can say, well, the market, values this token at this price. But with NFTs, it's just not really possible to do that. And so I think this is where the problem of trying to solve issues like this comes into play, is because you have such a wide asset class. You really have to narrow your focus. Like, I'm going to set a sound pricing structure for insurance policies that are NFTs and only insurance policies. Or I'm going to set it for copyright and intellectual property rights as NFTs, and only IP rights as NFTs, right?
So,
or only artwork.
It's a really good point, Zach. I mean, there's so many types of NFTs. Is like, it's a technology, so it can be applied to so many points. And the last thing I was gonna add on here is, like, I kind of opened up maybe wrong, because not wrong, but we talk about, oh, it's hard to find the liquidity and it's hard to find the value of these NFTs. Now, the ones that Zach just mentioned, those kind of work because you know what the value is. You can point to something. But actually, I think one of the bigger things is that NFTs should be able to do something for DeFi that DeFi can't do without NFTs. And so that's where it gets really interesting, is like, yes, we're taking Aavegotchis and we're staking Aave yield generating tokens inside of them. That's cool. But again, we're kind of like, it sounds like we're having this discussion and using ERC20s as a crutch. And so another way to think about it is, another problem I think we're on the cusp of solving in the space is, okay, in the normal TradFi banking world, you have two kinds of loans. You have collateral-based loans or credit scores. And so you have two ways to access this loan. In our case, on DeFi, almost everything is, what is it based on? It's based on collateral, taking ERC20s and staking them and waiting, making deposits. And so where could we get this other credit score type of scenario coming in without giving up and KYCing and doing all of that? And that's where the NFT as an avatar becomes very, very powerful, because you could start to build a quote unquote credit score or a history pseudo-anonymously by having certain NFTs in your wallet for a certain amount of time. And one quick example of how we're trying to engage and experiment with this at Aavegotchi is, if you have that Aavegotchi, it uses the 998 standard, so you can attach other NFTs and deposit them in. And so we have non-transferable NFTs like Pope badges, the equivalent of a Pope badge, except they're issued by our team, and they go and they're non-transferable once they are deposited inside the Aavegotchi. So that particular Aavegotchi, for the rest of its life cycle, forever, is on-chain, and it could be something like competing in a tournament, winning a trophy, or it could be like, oh, I was an LP on, like we have one right now, liquidity providers for uniquely sharding of NFTs. And if you LP'd on that and you have an Aavegotchi, then you were able to get that. So there's a way to build reputation with NFTs that has a value that could make DeFi better than what DeFi is without NFTs involved.
And that's a really interesting ending sentence that I'd like to kind of latch onto and pass around to the rest of the panel, is it can make DeFi better. So I'd like to ask each of you individually, based on what you're working on and your participation in this industry, how do you think NFTs actually could not only work with DeFi, but actually complement DeFi even more? Maybe Ben, we can start with you.
Yeah, sure. No, I mean, these are all really good points, but I think the central theme that we keep going back to is NFTs are not just art. It's this gigantic, broad category. So when thinking of an NFT representing an insurance contract, obviously this interplays with DeFi much more than a piece of art would. But the on-chain credit scoring represented by NFTs is something very, very fascinating. So like in a pseudonymous way, you can verify that, hey, I'm a good DeFi participant. And this follows you through the internet and lets you interact with these DeFi protocols in a completely unique way based on that little NFT that follows you. So I think, I mean, that's a very broad question because NFTs are so broad and DeFi is so broad. Like both of these are gigantic. I think that the blending of the two will happen in a number of different ways that we can't even predict. I mean, we certainly are starting to point in different directions, but the speed and the velocity, the speed and the slope of these, the innovation that's happening within both of these and the convergence of the two, we're getting really far. But I think the on-chain credit scoring is super fascinating. I think DeFi and NFTs converging into more financial use cases is very, very fascinating. And these are all things that we're infinitely fascinated by as well.
Fantastic, thank you. Zach, I'd love to turn to you now and maybe ask you something, which is, as Ben mentioned there is such a broad element to this, maybe something a little bit more specific to your line of work in the gaming space.
Yeah, so, I mean, NFTs really have that reach that we've talked about. And with DeFi, you're only limited to the creativity of what you want to build because the NFTs allow for a tangibly digital commodity to be represented in a financial ecosystem. And this is something that you're not really able to do prior to NFTs in blockchain. But we've seen, well, maybe not publicly yet, but there are massive global payment systems, you know, some of the largest companies in the world that are utilizing NFTs and building systems to utilize NFTs for internal tools. And these are centralized finance, right, that they're utilizing it. And so when you have an old traditional financial system that can utilize some technology like NFTs and not have to worry about some of the issues that comes with using like ERC-20s, then it makes you realize that like whatever you want to do with DeFi, you really can do, and you don't run into the same kind of issues that you would run into with other types of asset classes. So I think there's no limit. Like we don't have a DeFi platform for trading insurance policies, right? We can do that with NFTs. And we don't have one for options that are utilizing NFTs. Actually, I take that back. I think there is one platform that uses NFTs as their option. So you open a a position and you'll get an NFT to represent that. And I'm not talking about the Uniswap one. I mean more of an actual leverage option trade. But that is something as well. It's really hard to pinpoint. With Mintable, we don't really focus on a financial aspect. We are that marketplace so that if you have a charged particle or an Aavegotchi, you can trade that on an open platform and be able to offer that to a wider audience. And we specialize in that specifically, right? We don't focus on providing any kind of game or DeFi protocol in and of itself. We just support the ecosystem by providing kind of cool technology and a platform to be able to facilitate that, right? You can think about it as if you have an insurance that you bought on a DeFi platform that's utilizing NFTs for their insurance policy, maybe you don't want to trade on that platform for whatever reason, and you want to take it elsewhere, right? That's the beauty of the blockchain, being able to have this open market of where do I want to use this, where do I want to trade this, what is the interoperability of this item. And so NFTs really power that. Jesse's got a really good point of using, I wouldn't necessarily go as far as to say a credit scoring based on, to get a loan, but you can use the NFT from Aavegotchi in another DeFi platform as some sort of interaction because it's got that interoperability, right? And this is something that is really unique to, again, you probably are not able to do this in a traditional finance situation.
Fantastic, Zach, thank you. And Jesse, I would love to turn to you now from an Aavegotchi perspective. You've highlighted some real aspects that we could expect to see implemented very soon. What are you actually expecting out of this convergence between NFTs and DeFi in the next 6 months? What are you expecting to see implemented and also used as well? We've got some of the Gotchi gang on the group chat listening in now. So what can we expect to see as the next move forward?
Yeah, so right now there's the first generation of Aavegotchis that are out. There's 10,000 portals, and it's almost like a deck of cards. You open the portal and the Chainlink random number generator oracle gets called, and then you get a few Aavegotchis to choose from, and you can only keep one. So about 7,000 of those have been summoned, And now the community that's been since March, and we're looking ahead now. In fact, just yesterday we announced and revealed our light paper for our metaverse. So this actually kind of is another canvas where DeFi and NFTs can blend together. And so it's a virtual world, right? In the vein of Decentraland or CryptoVoxels, except in this case, it's very DeFi. We're saying it's the first DeFi metaverse because each parcel, it's a 721. And the first kind of like use case of that years ago was, oh, I have a 721 real estate, virtual real estate. So I get to build whatever I want with my Lego blocks on it. And that's fine, but there should be more we can do with this. And now that DeFi's come along, we looked at it with kind of a fresh look and said, well, what if there was yield generating and the only way you could get to that yield and access it was by having access to a parcel of land. And so what we have is kind of gamified DeFi RPG coming. And you said 6 months. We think that it will be live by Christmas. And so I guess that counts. Yeah, it counts. So we're pretty excited about that. And there's a lot to explore there in terms of you have to get the parcel, you have to put NFTs on top of that parcel that if you've ever played like a Clash of Clans, casual gaming, these NFTs will let you access the yield that's under the ground there. So it's literally, I think on your previous, the panel just before us, Tyler from Barnbridge was saying, we want to take finance to a point where it's so gamified that, you know, our kids don't even recognize the finance, what we call finance. And so I think that's where we're going with it all when you put it all together and the various projects that are being built out. That'll take a little bit more than 6 months though.
Absolutely. And I like that kind of gamifying finance, gamifying DeFi. That was a great answer. And JD, I'd like to turn to you now because I think our first ever discussion was back in 2017 or 2018. And since then, the industry has migrated quite significantly. So when we look at where we're at now, which is a kind of gamifying DeFi space, what is your expectations for moving forward? You are muted. JD, your microphone's muted.
Sorry, I really should have had that extra cup of coffee. Sorry about that. Yeah, to answer your question, and now you know it's a little bit late on a joke. I said, well, the expectations are it's going to be a wild ride. You know, yeah, a lot has changed, man, since back in those days. It's it's unreal what the 17 and 18s used to be like compared to now. So, you know, I think what we're all working on here, everyone working on gaming and finance and seeing this is that, you know, this market really, I mean, look, DeFi has been around, God, how many years? 6, right? Let's be real. It literally, DeFi, in my opinion, blew up. It was accelerated just like the gaming world because of COVID, right? And the DeFi world really blew up because of tokenized junk bonds we call liquidity mining, right? With no use case, a bunch of degens running around saying when moon and give me my free money. Literally, this industry is like so much different than it was. Like, since when did Anon become like the fucking cool thing to do? Excuse my French, but let's be real. I came from the industry long before like the whole degen thing, and I'm like, yo, like, when did it be cool? When was it cool to be anonymous? You know, what I, you know, I'm not even gonna go down this path, whatever. So, you know, like, I think it's a really interesting world. It's like, you know, we have these like junk bonds we tokenize and everyone gets free money, but there's a genius in that right there, right? There's a genius because of the tokenization. And now we have these assets that can be liquid within instantly on a purely democratic place, peer to peer. It's unreal. And you can open up a liquidity pool like overnight. And, you know, especially now with the L2 solutions, which I know most of us are on right now, or, you know, or whatever. I mean, dude, look at Polygon, how many liquidity mining tokenized junk bonds pools have opened up. What was it, 500? We were just looking at it the other day because we were doing some research reports and stuff. It was like 500 in the past month or something. I mean, so the future of this is what I believe finding a use case, a true use case for this liquidity mining, which is, you know, the biggest driver right now of DeFi. And then you have all the lending, which is, I mean, DeFi in general is just, it's absolutely genius. I think the gamification because, you know, liquidity mining is really just reward-based actions. And what is that? That's exactly what gaming is, right? And I mean, I think it's gonna be a wild ride ahead. I mean, it's fascinating. You know what I mean? What we're doing right now, playing games and earning money. Like, who would have ever thought that would happen? So, I'm excited.
Wild ride indeed. And Mary, I'd love to turn to you finally, because we're seeing Rangers Protocol testnet is launching in July. So what kind of things have you learned from the process and implementing?
Yes, yeah, thank you for asking us. Actually, maybe few people know us that we start to get into the blockchain field with our first game, actually, which is Hyper Dragons. And all the team members, actually, we are from the traditional gaming industry. So our first game, Hyper Dragons, we surpassed CryptoKitties on Ethereum around August 2018. So, and actually that is the time we started to build RP, Rangers Protocol. And obviously we are talking about the metaverse, because actually we believe that all the problems we met today, like how can we value the NFTs, what we can use, is all because of the lackage of the usage scenarios, actually. So Rangers, actually, we are targeting to serve all the NFT-related complex applications. It's EVM compatible, but we have upgraded the virtual machine to support more complex applications. And we really believe that if we have more historical data, like Zach just mentioned, that it's too difficult to describe or to measure all these, non-standard assets. But actually, this price value discovery mechanism has long existing in the traditional industry, like what kind of work you have done and what kind of auction you hold in any exhibitions or things like this. All this history data is very important. So we believe that as long as we collect more data and to sort and take it different data, it is possible to measure all these non-standard assets. So yeah, that is what we will do.
Such an exciting time indeed. Well, that's all that we have time for. Thank you all so much for joining the discussion today. It was actually a pleasure, and I'm looking forward to seeing all the updates as well throughout the rest of the year, and hopefully we'll catch up on the same panel later on in the year. Thank you, guys.
Thanks, Jessica. Thanks, everyone.
What is the future of decentralized finance? Affordable, decentralized, and sustainable. Experience the power of DeFi in ways you've never experienced before. Plenty allows you to use DeFi tools that you've grown to love and adore, but without the crazy fees associated with proof of work. Enjoy sustainable yield farming programs that are cost-effective, liquid, and built on the powerful Tezos blockchain. Visit plentydefi.com now to get started.
Well, welcome back to the second annual Global DeFi Summit. Now, one conversation and phrase we've heard a lot throughout today so far is liquidity. Our next panel will cover just this. We're taking a look at liquidity wars and how to enable better capital efficiency with DeFi. And it's moderated by Anya from Falcon X. I'm going to take it over to Anya and the rest of our panelists.
Hey folks, thanks so much for taking the time, and thank you to the audience for tuning in. A huge thank you to Draper Goren Holm for hosting the Global DeFi Summit, one of my personal favorite conferences every year, and a favorite topic in terms of just capital efficiency in the space. So quick introduction on myself. My name is Aya Kantarovich at Falcon X. I lead institutional coverage. Falcon X is a cryptocurrency financial services company that provides institutions with trading, clearing, and credit. So super excited for the panelists that we have today. We have Antonio from DYDX, Niraj from CoinDCX, DYDX, Robert from Liquidity, and Sunil from Saddle. So why don't we kick it off with some brief introductions? Antonio, you want to start?
Hey, I'm Antonio, the founder of DYDX. DYDX is a decentralized exchange focusing on derivative products. We've been live for a little over 3 years now, and most recently just launched our new product for perpetual contracts on layer 2 in partnership with Starkware.
Robert, why don't you go next?
Sure, I'm Robert Lauco. I'm the founder and CEO of Liquidity, which I started back in 2019, end of the year. And we launched it now like 3 months ago, roughly. And Liquidity is a lending platform which gives out its own stablecoin to borrowers without charging an interest rate. And it also improves on capital efficiency.
Neeraj, you want to go next?
Yeah. Hi, I'm Neeraj, a co-founder at CoinDCX, India's most compliant and secure cryptocurrency exchange. We have an objective of strengthening crypto liquidity in India so that billions of Indians can invest in crypto in a cost-effective manner. Having multiple product offerings like staking, spot markets, margin derivatives, and lending, we also have plans to launch global crypto platform very soon.
Awesome. Hi, I'm Sunil, the founder and CEO of Saddle. It's an automated market maker for peg value crypto assets. Most recently, we launched a new pool in collaboration with the Alchemix protocol for their new ALF product. Thanks for having us.
Awesome. So why don't we kick it off for those on the line that maybe don't know what DeFi or decentralized finance is, maybe with a brief introduction. Sunil, do you want to maybe at a high level start with how you might define DeFi today?
Totally. So the way I kind of think of DeFi is it's an open and permissionless version of what we kind of see in traditional finance. And one of the real big kind of powers of DeFi is all the different little like money Lego blocks that people are building through different protocols like Liquidity, for example, are composable. So people can kind of build new exciting products that kind of build on all these existing primitives.
Absolutely. And anyone want to add to that before we jump into capital efficiency?
Yeah, maybe one more thing to add is that, I mean, composability is a very important part, but I would also mention that there are various degrees of how those systems can be governed. So some of them are trying to have some democratic governance mechanism. Others are trying to be as autonomous as possible so that they are just playing by the rules that are governed by an algorithm, which is all like encompassed by the notion of DeFi.
Definitely. So there's definitely like a wide spectrum of what would be defined as DeFi, and as it pertains to the capital efficiency of accessing DeFi, it'd be interesting. I know with the panelists that we have today, some of you are more centralized and other more decentralized. On the centralized side, Neeraj, it would be really interesting to hear more on how you think about both access to DeFi from your platform today, and then how capital efficiency plays a role coming from a more perhaps centralized perspective.
Sure. So when we started building CoinDCX, we wanted to be the most liquid exchanges globally, right? And that was a big dream. Clearly, that would have required a lot of capital to be invested in market making in hundreds of crypto markets. But with the help of some great financial experts, we instead built a liquidity aggregation model on top of the centralized exchanges. So with minimum capital, we were able to bring liquidity of exchanges like Binance, Huobi, BitMEX, OKX at the doorsteps of our users. With just one single platform, users are able to access liquidity of all these top exchanges without moving funds from here and there, right? And more exchanges would be added. So we kind of built this model on the centralized layers to bring in capital efficiency in the markets. And we intend to do similar things in DeFi as well. We're still figuring out the best possible solution for that. But essentially the objective, in my opinion, moving in the DeFi markets would be, a single pool of capital should be able to cater to demands from multiple DeFi protocols. I think that would be a killer app in the decentralized finance, bringing in capital efficiency, capital being at one place, while all the applications built on top of that would be the ultimate view of capital efficiency in the DeFi.
Yeah, you bring up a really good point. So, Robert, to your point, right, DeFi is built on top of different protocols, and whether it's layer ones or layer twos, and each of these have their own different pools, and how they manage the pools between the different protocols really depends on the bridges that are currently built. Antonio, I'm really curious, what are your thoughts on that? And as it pertains to both DYDX, and maybe you can dive a little bit deeper into how DYDX views DeFi, but also on the capital efficiency front across these different protocols.
Yeah, I think capital efficiency on DYDX, the main thing we've really been focusing on is giving our users access to leverage, which just inherently makes their capital go farther. If you're trading with 10x leverage, it's like you come to the exchange with $100 and you can immediately buy $1,000 worth of Bitcoin, Ether, or whatever else you kind of want to invest in. And that works for market makers as well. So definitely echo a lot of Niraj's points there. It's extremely important as an exchange to be able to build liquidity, and market makers can benefit from leverage as well. So it's kind of a double whammy where our customers can trade more because they're trading with leverage, and our market makers can quote and offer deeper markets because they also have access to leverage. On DYDX, one of the big improvements of our new perpetuals protocol, basically we had like an old protocol for perpetuals that ran on layer 1 Ethereum that was launched 1.5 years ago. And one of the main limitations of that protocol is that it only offered what's known as isolated margin, which effectively means that for every market that you might be trading on DYDX, say you want to trade both Bitcoin and Ether on DYDX, you have to collateralize those positions separately. So it was not very capital efficient in that sense. But one of the really big things that's kind of the layer 2 in our partnership with Starkware unlocked for us is now we can offer what's known as cross margining, which basically means that you just have one DYDX account and you can start trading whatever different assets you might want to trade out of that account. And again, market makers can profit from that too, because a market maker can just have one account on DYDX, can start quoting all the different markets they might want to trade on. The sum of all of their quotes can be much larger than the amount of capital they'd have in their account. So that's kind of how we think about capital efficiency at DYDX, and really think of it as kind of a core value proposition for our product.
Yeah, super interesting. Robert, how does that compare on the borrowing side, specifically in your world?
Yeah, this is interesting because also in the borrowing side, there is something called leverage, where you basically can amplify the collateral that you want to remain exposed to by borrowing more and basically exchanging what you borrowed to more of that collateral asset. So and that's what basically Liquid is also allowing to do in a more efficient way than maybe other protocols that are similarly built, by reducing the minimum collateralization ratio, because the minimum collateralization ratio below which you get liquidated is really what determines the maximum leverage that you can achieve by repeatedly borrowing, exchanging for more of the asset that you want to invest in, and then put this asset back to your position in order to be able to borrow more, and so on. I mean, this is already known from margin lending in the TradFi world. And I think here the key innovation or key ingredient of making this possible is making liquidations as efficient and as fast as possible, because you always need to have enough buffer for your system to cope with a falling price of your collateral asset. And the faster you can liquidate it, the less time you lose, during which the price of this asset may fall even more. So by basically making the liquidations instantaneous, we can offer a much lower, only 110% minimum collateralization ratio. So that's the trick behind liquidity.
Got it. And are you guys protocol agnostic? So you're working across different assets, or are you specific to, let's say, anything Ethereum based?
In our case, it's really Ethereum based, and the only collateral that you can borrow against is Ether. We have this kind of extreme radical approach to decentralization that we only wanted people to borrow against Ether, which as a native token is completely decentralized.
Got it. Makes sense. That's super interesting. On the saddle side, I'm curious, I know Antonio mentioned as it pertains to market makers, as an automated market maker, how do you think about the liquidity needs and capital efficiency for something that's a bit more decentralized?
Yeah, totally. So capital efficiency is definitely one of the most exciting frontiers for automated market design currently. So we've seen some pretty new innovative designs come out of companies like Uniswap, for example, with their concentrated liquidity, which effectively allows users to provide liquidity over a certain range of prices. Another cool thing we've seen out of Balance or V2, for example, is the ability to put some of the assets that are in these automated market makers into other protocols. So they're actually earning yield while still being available to be traded against. At Saddle, we're actually looking into leveraging synthetics to provide increased capital efficiency, because synths have this really cool, basically attribute where you can trade between different types of synthetic assets with no slippage up to the size of the global debt pool. So the general idea is that if you have a bunch of different automated market maker pools that have a synthetic asset in them, you can then leverage synths as kind of an intermediary to kind of trade between different types of peg value crypto assets with very great rates that will rival centralized exchanges.
Interesting. Niraj, I'm curious to get your thoughts on that specifically, coming from a more centralized exchange.
Yeah, could you repeat, Aya?
Yeah, curious to get your thoughts. I guess, from a centralized perspective, what are some of the gaps that you see today around areas where you could build on more capital efficiency that doesn't exist today in the same way, let's say, Saddle can kind of create that opportunity that you may not see on exchange?
I think two things would be very critical here. On the centralized exchanges, we would notice that the interest rates are very high. For example, if you want to borrow assets for margin trading, right, or if you want to go leverage on derivatives, the interest rates sometimes go up to 50%, even 70%, and I have seen 300% interest rate per annum, right, when you want to borrow more assets. Now, I think that's a very core critical problem when you want to have more capital efficiency, right? Efficient capital would allow us to borrow cheaper, right? That is very important. Right now, the interest rates are just haywire. If you want to long derivatives for 3 months or 4 months, you end up paying all of your principal, all of your wallet balance goes away, right? So I think that is a big gap. And one of the reasons could be that the centralized exchanges are also fragmented. You have 500 different centralized exchanges, right? And the capital is completely distributed across. So you need some kind of integration of exchanges, some kind of integration of the capital. The capital is divided across so many different platforms, and centralized exchanges generally do not talk to each other in any way. They are completely independent units. So decentralized exchanges, of course, you can build one protocol which connects with multiple protocols, right? We have been seeing relaying and concepts like that. But in centralized exchanges, this kind of efficiency is not there. So I think that is something which needs to be solved. And that would bring more capital efficiency. We want to see interest rates going as low as 5%, 10% per annum. That is very important for the markets to grow and mature up.
And what's holding, let's say, Coin DCX from using Liquidity or DYDX?
Frankly, nothing as such. The bridge between centralized exchanges and decentralized exchanges is still very difficult to build, especially when you are talking about exchanges built on Ethereum or Polkadot, right? Like DYDX. So I'll give you an example. If CoinDCX were to interact with DYDX and allow our users to interact with DYDX, we would have to connect with DYDX via our single exchange address, right? And that one address would give a lot of transactions, would put a lot of pressure on DYDX exchange, just single address, because that address is essentially collating all the orders of our millions of users and putting that, sending all those orders to DYDX via single address or maybe a few address. Now, in a decentralized world, that might not work, because tomorrow, miners could easily boycott you, right? One single address can easily be set aside, that okay, transactions from this particular address will not be mined. That can easily be done, right, once identified. So that's a core problem when we as an exchange want to send all the orders to DYDX via a single address. So essentially we'll have to create millions of address, and then one address per user at our end, and then connect with DYDX, right? Like one address corresponding to one user. And that is very challenging in terms of the operations and security. And that is what we are solving at the moment. At the end of the day, we do want that all our users who do not understand holding private keys, who are not very tech savvy, but they do want to participate in a decentralized world, they do want to lend, borrow, or do derivatives. We want to enable a gateway where people can access these markets via CoinDCX. And we are still working on that, building that bridge between the two worlds.
Got it. I guess question, Antonio, for you, how do you view centralized exchanges trying to access DYDX, and how have you worked with other centralized players similarly in the past?
Yeah, I think it's a really important problem for everyone in DeFi and probably in crypto in general to enable better bridges, kind of as Niraj says, from CeFi into DeFi. It's something that we're certainly thinking about at DYDX. I think the beauty of decentralized exchanges is that it is technologically possible for centralized players to integrate with them, just in kind of the same way that you could trade on a decentralized exchange, of course, with your own wallet. Like Niraj said, the centralized exchange could create their own wallets, could create integrations from their products directly into DeFi apps. And I think that's a really interesting thing, because it's not like you could just integrate or partner with one centralized exchange. Potentially all of them could integrate. And I think that's where the future is going over time. That some people will choose to custody their assets in decentralized wallets. Other people will choose to have, third parties custody their funds on a centralized platform. And both of those are totally valid. But we can, that's kind of the point of this talk, just really aggregate liquidity around these decentralized platforms, because everything can integrate with them over time. And yeah, in terms of to answer the question, what we're doing right now, it's really a lot of education on our part for centralized exchanges, starting to see really interesting moves with centralized exchanges into DeFi with some of the new layer 2 platforms that are coming out. I think one of the best ways centralized exchanges can integrate with DeFi and new DeFi platforms for now is, especially as a lot of DeFi platforms are moving to layer 2s. I really think centralized exchanges should consider integrating directly with a lot of these layer 2s to say, support a withdrawal to Optimism or Starkware or Solana or whatever the users prefer to use there. It's just a much more efficient experience for a user than kind of going to layer 1 Ethereum, paying really high gas fees to get off of Ethereum onto layer 2s. So that's, I think, where we should start. But certainly, I think the end state, like I said, is a lot of these centralized platforms having product experiences that are built on top of the DeFi protocols in the back end.
Yeah, definitely. Robert, Sunil, I'm curious, outside of like L2s, some things that have helped with capital efficiency, you have like rep tokens, so the ability to use Bitcoin on Ethereum platform, or other bridges like Near's Rainbow Bridge or Polkadot's Chain Bridge. Anything else you guys see today in the space that has helped in DeFi specifically for capital efficiency across these platforms and for your project as well?
So across platforms, I'm not quite sure, but in our case, what really helps for like being more capital efficient is sourcing what's already available in capital. So, there was this idea like in previous protocols that when you need to liquidate, for example, a position, you need to start looking for a buyer or somebody who bails out this particular borrower or this position that needs to be liquidated. And then the idea came from that, hey, why not use the existing players in your system? Like in our case, we are only using our stability pool mechanism and the borrowers themselves as a guarantor of last resort, so to say, that they can act as underwriters or guarantors of their fellow borrowers. But I can also see like potential ways of collaborating, like where protocols can use their same pools. Like some liquidity pool could be used for guaranteeing and securing loans on some other platforms. So I think there, like the space is really open for more innovation, where you can double use or even triple use the same liquidity for multiple purposes, so that you can really make it more capital efficient instead of just letting it sit around.
We have a couple more seconds, so Sunil, you're gonna wrap it up for us.
Cool. Yeah.
How do you see that efficiency?
I was just going to add, yeah, I think we're seeing a clear trend across the industry that, a lot of individuals are starting to prefer productive assets. So rather than just having their BTC sitting on BTC, not actually earning, any interest on that, we're seeing products, like Keep and TBTC come out, where people can now trustlessly move their Bitcoin over from BTC to Ethereum and then start earning interest on, on their assets. And I don't think anybody has perfectly figured this out yet. There's different issues with a bunch of the different bridges and other solutions, but I'm sure DeFi as a whole is going to figure this out in the near future.
Thanks, folks, so much. I know we just touched the tip of the iceberg, but thank you again, Draper Goren Holm, for having us, and appreciate you all for giving us some insight on just a bit of capital efficiency across all these platforms. Thanks again.
Thank you.
Thank you.
Time is ticking away. Ditch the banks and join the DeFi movement on Tezos blockchain. What if we told you there was an affordable, fast, and sustainable way to leverage the power of decentralized finance, all the while empowering the next generation of finance? A proof-of-stake implementation into decentralized finance, taking up to 2 million times less energy than proof-of-work networks. It's time to start caring about your impact. It's time to care about the future. Visit plentydefi.com to get started.
Welcome back to the Global DeFi Summit. A huge thank you there to Anya and the rest of our panelists for that fantastic discussion, talking about efficiency when it comes to DeFi. Now, our next conversation, we're talking about something that doesn't just charge innovation, it's supercharging innovation. We're talking about permissionless composability, some applications and some examples. And we've got a great set of panelists lined up, moderated by Ting Peng from Cointelegraph China. I'm going to hand over to her and enjoy the conversation.
Hi guys, how are you? Welcome to the Global DeFi Summit. My name is Ting from Cointelegraph China, and so happy to have this panel with Camilla from Defiant, and Luke from PrimeDAO, and Alex from Blockchain Capital, and Helma from Gelato Network. I think before we kick off the topic, talking about the permissionless composability, supercharging innovation, examples and applications, why don't you guys give us some brief introduction to our audience, because you are absolutely having great, background in the DeFi space. Camilla, should we go from you first?
Sure. Thanks, Ting. So a brief intro on myself. I'm the founder of The Defiant. The Defiant is a content platform focusing on decentralized finance. We have a daily newsletter, a podcast, a YouTube channel, a website. Visit thedefiant.io to subscribe to all of the above. And I'm also the author of The Infinite Machine, the first and most read book about the history of Ethereum. So hopefully you've all read it by now. If not, go check it out. So that's me.
Cool. And Alex, would you like to go second?
Sure. Hi, everyone. And thanks to Draper Goren Holm for putting this together and having me on. My name is Alex Larson. I'm a partner at Blockchain Capital. We're an early stage venture firm with a focus on the crypto ecosystem. So we work with both companies and protocol teams and help with business development, help with strategy, hiring, growth, and we're on the ground working on grants programs, treasury management functions, and other DAO services with the hope that we can help DAOs kind of transition to a decentralized organization and then pass some of those learnings on to newer portfolio companies.
Right. Thanks, Luke.
Hey everyone, thanks for having me. I'm Luke. I'm a full-time DAOist, have been working for DAOs for about 3 years now. I'm the strategic lead at Prime DAO. We're a Web3 collective that is building DAO-to-DAO innovations with the aim to improving coordination in DeFi. And I also run a small DeFi fund from the Amsterdam Stock Exchange.
Thanks. And last is Helma.
Yeah, hi. My name is Hilma. I'm a legendary member and at Gelato Network, and Gelato automates smart contract executions on Ethereum, Polygon, other EVM compatible chains, soon every blockchain near you. And yeah, basically developer use us to kind of outsource the DevOps work to our network of bots.
Cool, thanks. Welcome to this panel. And today we're going to talk about the permissionless composability. My first question is, what's the goal for the DeFi composability? We have a lot of innovation going on. So what's the goal? What's the, the end? Yeah.
Happy to kick that one off. Well, I think there are probably lots of different goals, but to me, the goal of composability is to catalyze innovation up the stack and to drive strong network effects. I think that one of the really amazing things that Ethereum unlocked was this ability to create permissionless, highly persistent APIs in the form of smart contracts. And so a term that I've enjoyed hearing for this is computational amber. And you can think of like smart contracts on Ethereum as persisting over time like spiders trapped or frozen in amber. So instead of having to constantly maintain the API connections that you rely on, developers can run leaner teams and build with more comfort that the ground beneath their feet won't shift. And having that kind of certainty, I think at the base layer allows for much greater combinatorial innovation up the stack. And in a lot of ways, the past 2 years, I think in DeFi have really been a testament to that. And we've seen kind of innovation compound over time, and where maybe, at the beginning you had some foundational financial products. Today you have things that leverage lots of different, parts of that stack to create new products on top. And so an example that sticks out to me, or I think is very illustrative of this, would be Alchemix. And so at the bottom layer, you have liquidity pools, Compound, Aave, Curve, Uniswap. And then at the middle layer, you have Yearn vaults that are responsible for optimizing the yield and reallocating between all of the liquidity pools. And then at the top layer, you have Alchemix, providing basically a cheap line of credit against a Yearn vault. And so because Alchemix's product, cheap credit, was so attractive, it grew fast, and that growth flowed down into Yearn and then into the bottom level liquidity pools that Yearn was allocating to. And so I think something like Alchemix, I don't think is possible without having a reasonable degree of certainty around the building blocks that you stand on. And so that growth and the network effects of having an application ecosystem building on top of your protocol, that would not be anywhere near as powerful without strong composability throughout the entire stack. So that, to me, I think is the goal of composability, and kind of illustrates a good example of where it's been powerful.
Right. And I mean, that's very specific, but I mean, what's the ultimate goal? Are we talking about transiting the whole traditional finance into DeFi? Is that what is this super innovation is going on, with what Alex just mentioned? And what's your opinion?
I think from my point of view, I come originally from a small Caribbean island where we don't have the innovation sets, like skill sets available to create our own financial ecosystem. So we really rely on outside nations, which always has like this dependency on other nations. So for me, it's really empowering people by creating this network that is global, neutral, and permissionless, that any person or any nation can build on. And like Alex mentioned, where, well, you know that this infrastructure is neutral, it's not gonna kind of disappear under your feet. And that's such a big revolution, because previously this is something that only the largest and most powerful of nations or companies would be able to do. And now anyone can do it from their bedroom. And it truly flips the table of kind of what financial services mean, and really brings these superpowers, because they truly are superpowers, to more people in the world with less friction.
Yeah, and adding on top of what Luke said, I think you really nailed it there. I think maybe just a really concrete example of that is, I don't know if you guys know the InstaDepp founders. Like, we work together with them quite closely. They're like 21, 23. They have this platform which they built in a hackathon, and which has, I know, 8 billion or something total value locked in their smart contracts, right? And how do they do that, right? They have no financial experience whatsoever. They just plug into all these small Lego bricks that are available to them with like easy to use standardized API, as Alex said. And what they do is they plug into Compound, and for example, they use Gelato to kind of like automate the liquidity movement of dApps from one lending protocol to the next. And they use Yearn here, and they put it all nicely together, offer a great UX, and then suddenly you have like a bank basically built by two guys. Of course, they have now like a big team around it, but this is the power I think that we are having right now. Everyone can become a bank, build financial services. You don't like, you can, as long as you audit and rely on good quality code that is kind of like vetted by the community. I think like the possibilities are endless. It's kind of like DJs remixing songs every day, and like every day something new pops up. So it's amazing to see, and like you can't keep up with the space because everyone can just try out whatever they want. So I think that's just super fun.
That's an awesome point on DJs. Just to kind of add on to that, I mean, what you saw with SoundCloud maybe like 10 or 15 years ago, I'm forgetting the exact timing, was this explosion of hobbyists essentially who became, they came up through remixing, and having that substrate and that ability to sort of distribute your remixes, and a distribution channel for it, was really an enabling function for more music. And so I miss SoundCloud. Really excited about Audius to do that in music in the crypto context. But the same applies to the financial space. To your point, giving people a substrate to remix financial applications unlocks innovation. And to the point about the team size, I mean, if you look at fintech teams and what the head count needs to be at a bank that provides financial services, like, you can easily reduce that 10x in a DeFi context by just leveraging the work of others and having shared protocols.
Yeah, I'll add to the point about just DeFi adding efficiency because of this composability. We recently had a story on the Defiant talking about just this, focusing on Yearn finance. And I think this is very little known, but Yearn right now is producing more revenue than traditional fintechs like Betterment and Wealthfront, like double the revenue. And this is a project that launched like early last year or like very recently. And more than that, like Yearn has like maybe 10, like less than 20 people in their team, like in their core team. And that compares with teams of like hundreds of people in like traditional fintech. So it's just amazing. Just like the scale of growth that DeFi has achieved in such a short amount of time with a fraction of the costs and the people. And that's largely because of this feature or characteristic of composability, which comes because I think more than a goal, like it's a product. It's like a result of kind of the main the way that DeFi is built, which is on like open source software, and that results in like all this amazing innovation and composability. And sorry about my dog if you're if she's participating as well.
Nice. I like how Alma you talk about it's a remix every day of having like new songs remixed every day with the composability here. And what are the new applications that we've seen, these new songs we've seen these days? I mean, we've had Camila just mentioned about Yarn from a year ago, and we have Aave and synthetics. What are the new applications that you've seen that it's quite exciting and they're using this new mix here?
Yeah, if I may add a shameless plug here. So I just talked about the Insta guys, like two young founders, right? They actually also just released their token, the INS token, which they distributed via an airdrop, and they wanted to. They don't have any connections to traditional centralized exchanges, so they were thinking about what's the best way to provide like deep liquidity on decentralized exchanges, and of course Uniswap V3 just came out, right? But it's very difficult to kind of like manage these liquidity positions because you kind of like have to constantly readjust the liquidity around the new price that kind of forms on Uniswap V3. And basically what we build, and tying back to composability, is we kind of build like an ERC20 wrapper around Uniswap LP NFT positions, which we provided into InstaDepp, and basically they just enabled users to put in all their tokens into this kind of like G-Uni, that's what we call it, basically a gelato wrapper around Uniswap. They just put all their tokens in there, and then their position kind of gets auto managed to track the current price of INS to ETH on Uniswap V3. And they actually added like a liquidity mining incentive on top. So they actually incentivized people to put their money in there. So suddenly like all of the tokens that got distributed were allocated on Uniswap V3, and they were like deep liquidity around the price. And you could literally trade like a high volumes there with not significant slippage. And they have now control over how to set these ranges, and they can kind of create like a buy wall around the price, and kind of like say, okay, below here we don't want the price to slip anymore. We can just incentivize people to provide liquidity here, or above here. So it's like a new paradigm for projects to launch tokens, for example. And this is just tied back into us being able to use Uniswap easily, InstaDepp being able to use Gelato easily, and like everything together, right? Just like a remix of remixes, basically.
Great. That's a very, very new type of application. Anyone else would like to share an example?
I think, again, coming from a DAO background, I think what I'm most excited about, it's not something that's extremely new, but something that has really seen more traction recently, is Gnosis safe applications. And kind of the second or maybe the third DAO iteration that started. We see a lot of exciting things in the form of Snapshot kind of opening up DAO governance and participation, bringing more people in kind of shared mind spaces and having kind of shared governance governors, which I think is something really important. There's only a limited amount of people that can actively govern things really well and have a good experience in that. And then kind of what that started, this combination of things like Snapshot and with the SnapSafe model being already somewhat able to connect it all together and have it completely on chain. I think what we're seeing is that these different organizations are also getting closer and closer to each other, leading to composability between the contributors and the talent in the space, and moving it away from like silos of like the traditional organization mindset that we all need to work just with our organization, and taking it to more of an ecosystem point of view. And I think that's a really exciting innovation that I'm looking at.
I think it's hard to like to come. I think it's harder to point out to one DeFi application that isn't like composable, because really I think just like setting the stage for like the background for composability is, I mean, the fact is that all of DeFi is a money Lego in this kind of, you know, universe. They're all plugging, like all of these applications are plugging in with each other. So it's like name one DeFi dApp, and that's going to be an example of composability. It's like, like MakerDAO. I think that's kind of like the backbone of DeFi, or kind of like how it started, but they kind of produce DAI. Then DAI gets deposited as collateral in different lending protocols like Compound and Aave. Then that transforms into these like interest-bearing tokens, like CDAI and ADAI, that people go to trade these tokens on Uniswap, which depends on like plugging into these like hardened token standards. And then like Yearn then kind of routes all these tokens traded on Uniswap through these different lending applications to provide the best yield. So it's like every single application is plugging into other applications to create just this kind of like living, breathing, growing organism. I think is, I don't know, just to set like composability background, like everything is plugged into each other, I think.
Yeah, I mean, I agree. How we are talking a lot about these applications, but these also applications are built on, like infrastructures, and most of them are built on Ethereum these days. But we've seen some application like infrastructures are coming up to compete with Ethereum, and these composable smart contracts are written in this infrastructure. So what is the current competition look like with different infrastructures, and how would they try to attract or helping the composable applications move forward in this space?
Yeah, I'll go ahead and start. I think the competition is fierce. Maybe a couple of years ago, it was less obvious that there would be a huge block space demand problem. But what we've seen today, obviously, and this was all kind of born out of Ethereum, is that we've sort of hit the limits in terms of what this version of Ethereum is able to provide, and that manifests in extremely high gas prices that essentially prices out all of retail. So it goes from a question of what's the kind of like ideologically, what's the right platform for you to be building on, to how do you treat your users well and provide an experience that's acceptable. And that, I think, is an existential question. And so Ethereum needs to provide that. That's happening via layer 2. I think we've seen the kind of success of things like Polygon. There's a lot of anticipation, around the rollups, and the Arbitrum launch, I think, certainly has given an indication that we'll see a lot of activity shift over to more Ethereum native layer 2s, but certainly things like Solana, Binance Smart Chain, even, and some of the other layer 1s have picked up some of the projects that just need the scalability. So really the problem emerged this year, and the market responded very, very quickly. And it's it'll be very interesting, I think, to see how it unfolds. I think my take on it is that decentralization doesn't really matter until it does, and then that's when the kind of real decisions are going to be made. So I think when we have a good landscape of sort of Ethereum native layer 2s that keep some of the promises that Ethereum main chain makes, and they're competing head on with the other layer 1s, that's when we'll really find out where the network effects are going to be strongest. My money is still on Ethereum, but certainly I think it's a big trade-off space, and Solana optimizes for different things. And so if you need to support micropayments, for instance, that is probably not an application that you're going to build on a rollup even. That doesn't have the level of scalability required for micropayments. And so something like Solana might be more interesting or better suited to facilitate micropayments. I think if not a lot of value is at risk too, that that absolutely might be appropriate to use a more centralized architecture. Something that's really interesting that is maybe a new trend that I would expect to see continue is projects building different components of their systems on either different layers or different base blockchains. And so Audius, I think, is a good example of this, where governance and staking is on, as well as the token, is on Ethereum layer 1. And then micropayments is going to be built out on Solana. And so I think that sort of combination of architectures is going to become more common.
Very interesting. And anyone else would like to add on top of that?
I'd be really interested to see what happens to composability when more and more applications are building on different both layer 2s and layer 1s. I think that's kind of an interesting open question that, you know, I don't think we have a good answer for that yet. I think there's kind of the hope that there will be bridges across all these L1s and L2s, and that with better technology that the user won't really, you know, be able to see all these hops from different chains. But I think we're not there yet. So like, how does DeFi look like in that transition, where, you know, maybe you will have to deal with like clunky experiences of like having to change from one wallet to another wallet and keep your money in some bridge for like a couple of days before being able to withdraw, like all those things that are happening now with a very kind of nascent L2 ecosystem. And it's not the best experience, even like with people who are used to dealing with DeFi. I find that very intimidating to just like, I don't know, keep my money in a bridge before taking it out. I think that's very scary. I don't think like retail people, like non-crypto native people will be willing to do that. So yeah, that's kind of what's interesting to me, like something to watch, how fragmented this space becomes in this transition to like a multi-chain future, if that's what ends up happening. Maybe like there's one chain that will concentrate everything, but yeah, too many open questions, I guess.
Yeah, but I think I'm quite bullish on that. So we are already seeing like for example, we already implemented one system where we transition Aave positions from mainnet to Polygon, and the user literally just has to do one transaction on mainnet, and then you have this kind of like overlap period where funds are credited in the bridge contract, and then they are credited on Polygon, for example, and you can use, for example, something like Gelato in the background that kind of like monitors when these funds are credited, and then send a transaction on behalf of the user, send it to a contract, and then have the complete migration with just one transaction by the user sent on ETH mainnet. And this is, for example, already live, and so some customers are using that of ours. And I think there it becomes very apparent that like where your money is, on which chain your money is, will really depend on what your interface that you're interacting with will offer you, and they should probably manage that for you. So they should say, hey, if you have like $50 million, you might want to consider, or like the UI should by default put your money on Ethereum mainnet, for example. Or if your funds are like $100, right, then hey, Polygon is probably the better place for you to get into Aave, right? So at the moment it's still clunky because like MetaMask has a lot of these infrastructure pieces like MetaMask that is very slow in evolving and adapting to this space, though they also picked up some pace, I have to say. But like at some point, these transitions will be seamless. It will automatically detect how much money you have. They will put you on the network you need to be, with the respective security guarantees that you for your money will require. And then the transitioning is already, I think, pretty smooth. Like, okay, a friend of mine lost like 20K the other day with a bridge, so not that smooth. But I think it's improving, and we are getting there slowly.
Right. I guess my last question for you guys is, well, these composable applications are quite exciting, and there's endless opportunities, but what's the catch? I mean, what's the risks with these kind of, applications?
Yeah,
Losing
so
money is one, yeah.
So I think the risk, I mean, each contract on its own comes with it's sort of its own native risk that's specific to how that contract was written. And so if you build a higher level application that leverages 3 or 4 different protocols below it, you're exposed to the risk of each part of the stack that you build on. And so that risk compounds all the way up. And I think it's probably the most it's the most threatening at the highest level. And so if an end user is using one of these higher level applications because of the benefits of composability, they're also exposed to this kind of evil underbelly of it, which is that the risks of the entire stack get rolled up into an overall higher risk profile for the activity that they're engaging in. And that's something that we're just going to have to navigate. I mean, what makes me confident is that we're in an open source ecosystem with a tremendous amount of builders that are super talented, a tremendous amount of intellectual capital and financial capital as well, funding teams that are solving these problems. And so an example of the industry sort of solving this for itself would be Nexus Mutual. They recently put out a stacked risk cover product. They previously were providing insurance just for individual smart contracts. And then things like Yearn Vaults became the sort of consumer application of choice, and that product did not really fit with Yearn Vaults and the requirement for insurance there. And so what they did is said, we can create actually a product that will cover all of the underlying risks, and they've put that out, and that's been, I think, a popular product and has helped people create coverage for yield farming vaults and some of the products that have really taken off this year. So it's definitely a big problem, but I'm fairly confident that we're going to find many different solutions for it over time.
Cool, thanks. I think we're running out of time. So if you have the last comment, for the last question, that'd be great. Luke, would you like to wrap it up for us?
I think, Alex, you pointed to the most important part, and it's this compounded risk. And I think the scariest part there is specifically for the retail users coming in now, not even understanding kind of how this technology stack works, and then especially on the settlement layer, not being able to differentiate between different kind of risk levels. So I truly think that that's something that is partly educational and partly just builders coming together and fixing it. But that's really crucial for us to do, because Aylmer, you just mentioned a friend of mine lost 20K. I mean, I'm pretty sure your friend was, well, it sucks, but life goes on. But there are people that are not as financially savvy that would actually put all their money on these things, and then they could lose their house, they could lose their family, and there are people that are not as fortunate. So I think we should continue to work hard, and I think we're going in the right direction. I'm super excited about where the space is going.
Thank you guys so much. And thanks Draper Goren Holm for having us, and I hope you guys are enjoying the rest of the summit. Thank you.
Thank you much.
What is the future of decentralized finance? Affordable, decentralized, and sustainable. Experience the power of DeFi in ways you've never experienced before. Plenty allows you to use DeFi tools that you've grown to love and adore, but without the crazy fees associated with proof of work. Enjoy sustainable yield farming programs that are cost-effective, liquid, and built on the powerful Tezos blockchain. Visit plentydefi.com now to get started.
We're back for the second annual Global DeFi Summit. We are live and we're streaming from around the world, bringing you hosts of different discussions from people in the DeFi space, sharing their insights and also the evolution. A huge thank you to our previous panelists for their insights. Now, our next conversation is talking about why are competing blockchains networks really gaining some traction. And we have Benton from Cointelegraph moderating the session. I'm going to hand it over to Benton now. Ladies and gentlemen, enjoy the next panel.
All right, ladies and gentlemen, thank you for handing that over to us. Jessica, welcome to the Global DeFi Summit 2021. We're going to be having an exciting conversation today about how alternative chains are gaining traction in today's space and time. We're going to start off today by heading around the room and just kind of doing some introductions. So let's start off with Meta.
Hi, nice to meet everybody. I'm Meta Parlikar, the CTO and one of the co-founders of Casper Labs, the company that built the Casper network. Happy to be here.
And Kendall?
Hey everyone, my name is Kendall. I'm the head of product at Near, which is a proof of stake layer 1 blockchain. And yeah, looking forward to the conversation.
Excellent. We'll go to Nichols next.
Hi, Speedy Nichols, founder of Blizzard.money on Binance Smart Chain.
And Ogle.
Hello, I'm Ogle, founder of BSC Gems.
And last but not least, Greg.
My name is Greg Osuri. I'm the CEO founder for Akash Network.
Excellent. And how's everybody doing today?
Wonderful. Beautiful day in San Francisco.
Very
Fantastic.
Good. Exciting time for DeFi. So today for this panel, I really want to help for the audience just paint the broad picture and kind of give some context. What's going on in your particular niche inside of DeFi, whether that means at the enterprise level, at the BSC level. What does that kind of look like? And the first question I have that we're going to start off with is, what is the current state of DeFi in your opinion? And what are you seeing in your particular ecosystem? Let's start off with Kendall here.
Yeah, sure. I mean, I think it depends on the ecosystem for sure as to what's happening. I think on Ethereum, we've seen a lot of the primitives be kind of established. And, I think people are working now on some like higher order application and use cases. On Near and some of the newer blockchains, those primitives are still kind of being laid. There's still room for some of these core components to kind of be built out. And I mean, I'm hoping that, we can get to the point where we can sort of short circuit a lot of the experimentation that needed to be done to like understand how to build AMMs, how to build generalized lending, what you needed to ensure, and can kind of start, coming up with some more interesting use cases earlier. Things like liquid staking on proof of stake networks, I think is like a core primitive that can be injected really early in an ecosystem.
Excellent. Anyone else, feel free to jump in here. I know a lot of your companies are in various spaces inside of the DeFi ecosystem. So, take us from a broad level, whether that's an enterprise perspective, maybe Meta, you want to elaborate on kind of what Casper Labs is doing and what's you're seeing from your perspective.
Yeah, I mean, from, Casper Labs is focused on enterprise adoption. So we're actually working with financial institutions to build, traditional financial products that use blockchain technology along with, identity solutions. So we want to be part of the wave that helps banks and other financial institutions leverage public blockchain technology to build financial instruments for consumers. So we're really focused in on that. Of course, with respects to DeFi, we're not ignoring it as well. We are building bridges to help, provide greater liquidity and access to the Casper protocol.
Yeah, and I think as far as where I work, so as I said, I'm the founder of BSC Gems, but really it's Gems, which includes Polygon Gems, BSC Gems, AVAX Gems, a whole bunch. It's like every sort of side chain, just not Ethereum. And so as Kendall was saying, like it actually is really like it depends on which one you're in, right? So if you're in BSC right now, which happens to be my favorite, it's rife with scams. Like that's just the situation. It sucks, but it's just, I mean, that's the situation right now. If you're in Polygon, it's unusably slow. And so, you have that situation. If you're on Ethereum, you can't afford anything unless you can't afford to actually do anything unless you have lots of money. If you're on AVAX, there's three things to do and then you get bored. So it's like, it just depends on what you're looking at and what the state is. Most of it is, I mean, this is sort of like, in my opinion, this is really, it's kind of cool because we're gonna learn probably from each of these, what's working, what's making things slow, what's making things cheap, what's making things fast, what makes things cool, what's like sticky, what keeps people around, and hopefully at some point or another, one of these things is going to win out.
Yeah, definitely. Greg, I think you might want to unmute.
That helps. Yeah. I share the sentiment with you know, Ogle here and Kendall, and you know, in terms of Ethereum really providing the primitives that kicked off DeFi, and as we're seeing now, DeFi moving into interchain. Cosmos Ecosystem's first DEX was launched Saturday. It had a phenomenal launch, attracted about $40 million in liquidity without building bridges. And in a world where you have a lot of scams or performance or unusability, Cosmos really has a beautiful, you know, usability first tendency for most Cosmos projects, because it's a lot more expensive to launch a Cosmos in terms of bootstrapping your security and whatnot. So that tend to attract you know, higher quality products like Osmosis, right? So you're super excited. I mean, launching Osmosis was a game changer even for us as Akash Network liquidity. We're a publicly traded token, and I think what we're seeing is a true, like, you know, a sovereign chain interaction that's happening over IBC, and that's just going to open a whole lot of things, like, you know, like what Kendall was talking about, liquid staking. We're seeing persistence and all amazing products right now building liquid staking, because, you know, Cosmos network actually has staking that secures the network, and you know, pretty much when you can aggregate a lot of these like yield generating assets, you're going to open up a whole new realm. So where we are, yes, DeFi began with Ethereum and with Polygon, all the side chains. It became interchain. Now with Cosmos, it's truly becoming interchain in the sense you're having multiple chains that have different things they do. Like Akash is a cloud computing network. It is not a DeFi product, but adding that extra yield-bearing utility for the Akash network token through interchain is something that we have never seen before. So really excited for interchain DeFi future.
Yeah, I want to hear from Nichols as well on this topic, but I do want to circle back and touch on that liquid proof of stake concept and kind of unpackage that. So Nichols, why don't you tell us a little bit about like what you're seeing with Blizzard.money in particular on the Binance Smart Chain?
Yeah, I mean, Ogle and I play in pretty much the same space, you know, Polygon, BSC, and overall the network is, you know, BSC is very much in need of good developers, you know, with all the scams going on right now. And that's what we're trying to do at Blizzard.money, is just make it a safe place to use DeFi. As far as Polygon, it's building out infrastructure and making the chain run well. So very much agree with Ogle.
Is there ever a point in time when scams will stop, or what will prevent those from happening? I hear that happening a lot, not just on BSC, but on several other chains as well.
Yeah, I mean, I think at the beginning of BSC, it was you would see a lot less of them because it was centralized. There was no bridge to ETH, and now you have, like, you know, AnySwap and other decentralized bridges that, you know, people can move money off of the chain rather than going to a centralized exchange like Binance. Sure. So it's a really it's a tough thing to combat.
Interesting.
Yeah, I totally agree. We were really dreading, you know, the moment we saw the announcement that AnySwap was coming to BSC. I was like, oh Christ, here we go. Like this is the beginning of the end for Happy Days over here, you know, because everyone's going to start coming in because they have a way to get off, right? And so to answer your question, like, are we gonna see this stuff end? I mean, it really depends on a few things, right? It depends on do these side chains, any of them that are centralized anyway, do they use the ability they might have to put walled gardens up to stop people from getting away, right? That's the first thing. Two, do we educate users in ways that are useful? So do we show them what the issues are they should be looking out for, and then to make it where it's less likely that scammers can get away with tons of money? Three, do projects like Safer Moon, which some of you guys may have heard of, which is making this product where basically people can come and launch their own tokens, but with verifiably safe code. Do people utilize platforms like that and say, oh, I'm not going to go and put money into a project unless it's been launched from a platform that I know is doing this a safe way. Who knows? These are all things that are sort of being worked on in different angles. And then forward maybe is are we going to be regulated to the point and sort of trackable to the point that people are getting in trouble, like serious trouble for doing bad things, right? So any of those four things, actually just one of those four things probably could eliminate most of these. And so we have different prongs we can come at this with.
Yeah, definitely. Well, I do want to like circle back on kind of like the evolution of DeFi and like where we're heading. All these chains kind of have whether it's liquid proof of stake, proof of work, zero proof of knowledge. There's tons of different things kind of happening right now. But is there going to be an ultimate chain that will rule them all, or what are we kind of seeing for future evolutions here?
And that's definitely not the way that it's going, right? I mean, you can already see, we have two guys here from the BSC community, which has done a fantastic job. Polygon's been getting a lot of traction, Cosmos as well, Near to some degree. And Polkadot's hardly even really live yet. And so those chains are probably going to get a lot of traction too. And then we have the rollups that are coming out as well that are, the like true layer 2 on Ethereum. And each of these components is going to get some traction. The space is growing tremendously. I think each chain has their different trade-offs. They have the different communities too. There's different kind of like actors that like behave in different ways in each of these communities. And I think as DeFi grows and expands and more retail, more institutional comes into it, Casper as well, like who's targeting enterprise, like you're going to see different chains, different ecosystems that are just going to serve different communities. So I think it's, multi-chain is here to stay. I really don't think it's going away.
Yeah, I tend to agree. I don't see one chain ruling them all in any aspect. In fact, I've seen a lot of chains already evolve separate from DeFi that are, specific they have use cases, right? They're optimized for a certain niche. And I think you're going to continue to see that happening even in DeFi and the financial sectors.
Yeah.
It's hard to say. I mean, I'm a sovereign maximalist. I believe, sovereignty is critical for scalability in general. So we're seeing, I believe in a multi-chain future. I think we're going to have can't really think about how much of a breakdown we're going to have between shared state systems versus sovereign systems. Shared systems are great because they're quicker to iterate. And of course, that'll result in a lot of scams and whatnot. Non-shared or sovereign systems are harder to scam because, it's expensive to bootstrap security. So you tend to attract higher quality projects. So, the market behavior will ultimately decide as to where the liquidity is trusted. But I think a future will be a multi-chain future, for no doubt.
Yeah, I think just sort of echoing what Meta said, it really is based on sort of, it's probably going to be based on what is the purpose of you being on the chain to begin with. Maybe it's going to be depending upon the niche you're in. And so, for example, if you look at like traditional financial institutions who have fiduciary duties to make sure that the money is safe, they're likely going to want to be on a network that is as safe as possible, as low likelihood of losing money forever, as something that's like open and sort of more the crypto ethos, right? It's going to be a little bit different of a thing. On the other hand, if you're someone who is a gambler, probably your goal is just to find the place that's got the fastest transactions to get you the most money as fast as possible. If you're doing things that you know what I'm saying? So it's like depends on different sort of purposes. And I think that it's very similar to like the question that people have where they say, well, can there be more than one coin, or is it all going to end up just being Bitcoin? And I think that, clearly that's it's not going to end up being Bitcoin. You look at the real world, we have credit cards, we have wire, we have ACH, we have cash, we have all these different things that are transacting essentially the same underlying instrument, right? But some of them are more secure, some of them are faster, some of them have the ability to charge back, some of them are not traceable, right? And so there's different reasons to have different ways of transacting and doing these things. And I think the same thing goes for these networks.
Yeah, I agree. Shared security means you're also having shared budget on how you secure assets. Like Ethereum's shared security model effectively, mandates that you have the same level of budget for an NFT that is a GIF or a DeFi protocol that has $100 million worth of lockup, right? So the shared security kind of like breaks down at economics. That's why gas fees are high for anything you want to do. So there's no way in hell that there's going to be like a single chain rule all kind of world because shared security is not homogeneous.
So I want to ask though, so what defines safe in the space? Does that mean more centralized, less centralized, completely decentralized? Is there a spectrum? What does that kind of look like? Nichols, I'll kind of direct this towards you. Looks like you might be on mute there. Meta, would you like to jump in on this one?
Oh yeah, definitely. Oh gosh, this is a really good question when you talk about safety, right? So when we think about safety in the layer 1 world, we think definitely about security of the underlying protocol, and we want it to be as decentralized as possible. So that goes without saying, right? But I think when you think about from a consumer perspective, it's like, hey, if somebody steals $20 million from this DeFi protocol, what are like, from a regulatory perspective, from a governance perspective, like what's my recourse, right? And so is definitely different layers when you talk about, is DeFi safe, right? And it's not a straight line answer, I think, right? Because part of what makes Ethereum so powerful and a lot of the proof of work networks and even Casper is that, these decisions are more or less immutable. And the minute you crack open that Pandora's box, you say, oh, nope, we're going to go back and change something. Now you've totally gone and done it, right? And so I don't think it's a straightforward answer. I think it's a bit of a thorny issue in terms of, what do people do when what's the recourse, right? In the event that there is a hack or there is a theft, how can people be made whole again? It's a big challenge. I don't think it's an easy thing to answer.
Sure. Yeah, definitely. So I do want to kind of also address, like, where are we in terms of adoption, whether that means at an enterprise level, institutional level, more of an end user, like what is everyone kind of seeing in the market itself?
I could speak about enterprise. So from our perspective, we are observing that enterprise is extremely interested in the product offering we have. They recognize the value of public blockchain. I think they just need some guarantees around their ability to maintain and manage their code, basically their on-chain logic, but definitely a lot of interest in using public blockchain, given that some of their base requirements are met, so they can continue to satisfy their customers, their investors, and their board members. So lots of interest there. Specifically with respects to banks, I think they would look to reducing risk. I think risk reduction is really, really important. So streamlining compliance operations, reducing risk within their organization, and looking to blockchain to do that without, and then they will eventually look at, implementing new products or even existing products using blockchain technology. But definitely a lot of interest, very, very open to exploring.
Right on.
Yeah, I mean, I think we're very early both on like retail, institutional, early on both. Institutions can't really deploy much capital yet. They still need a bit more clarity around like compliance and also security, right? I mean, yeah, you hear about not just like, smart contract issues, but there was Stakehound that had an issue with a kind of an enterprise grade sort of, key management supplier that, ended up losing the keys. I mean, not sure who's at fault there, but they see those things and get pretty scared. So while they're like waiting, they see these yields and now large amounts of money that are earning these yields. It's billions. They want to play, but they're not sure they can do it in in a compliant or secure way. And then on the retail side, the biggest issue there, I think, is just kind of both user experience, which we've been banging on about forever, but also just on ramps. BSC actually might have one of the best on ramps in that they have a close relationship with Binance, but even that still can be pretty confusing actually when you're trying to really get onto these platforms. And then Ethereum's too expensive for most retail who wants to try out something new. The cost of making a mistake is enormous, just in gas costs even. So that's kind of not really an option. And then a lot of the newer chains, don't yet have really smooth on ramps. Usually you have to use either Ethereum, BSC, or something else. So I think it's still very early days. I mean, there's probably 1 million or much less even kind of really active users of a lot of these protocols and these products. So it's still expanding.
Yeah, it depends on. I mean, whenever you ask the question of how early we are, it depends. I think a little bit. I mean, either way, we're early. Period. We're very early, in my opinion. I think everyone else here. But how early we are from like a time perspective is different, maybe, than how early we are from like a spectrum of optimum like blockchain. In other words, the regulators and the governments could make the time perspective mean we're way early because they could slow this down a lot. by being very annoying about things. Like, I mean, China is doing this right now. You see, it's slowing things down tremendously over there. But the spectrum of the actual development continues, right? And so that's going to keep on going. But when are we going to see mainstream users actually coming onto it, utilizing it? I mean, it's going to be a while, and I think most of that probably is for the reasons that Kendall said. At least from like the end user point of view, is because on ramping is annoying as can be. You know, even if you're technically savvy, it's still terribly difficult. And then you have all this, you know, the heavy security issues, of course.
Yeah. And when are we going to expect like a much larger adaptation from, you know, from that institutional perspective? It sounds like there needs to be the regulation, there needs to be guidance. Which countries or which regions in particular do you feel like are kind of really taking the lead? Obviously, China is trying to deploy their native currency, digital currency, but like what everyone kind of seeing out there?
I mean, the obvious elephant in the room is El Salvador, right? I mean, they made Bitcoin the national currency, so that the implications of that is beyond just a country, a sovereign accepting open source money. It's the fact that Bitcoin will be recognized as a global currency and should be respected by U.S. banks in the U.S. I think that's sort of like you know, a sneaky way to establish a more, you know, the reality, which is everybody, every bank that interacts with an El Salvador business will have Bitcoin wallets enabled to the user. So, well, you know, I concur for most part, right? We don't really have a good on-ramp, or we don't really have good user experience. And I think a lot of that, if you used the Cosmos or the Osmosis DEX, you can really see where the future of a low-fee, hyper interactive platform will go. So I think we're just starting to scratch the surface of usability. But on-ramp is still a huge issue. Without that being solved, I don't see how mainstream adoption will happen. And that said, like, well, you're seeing sovereigns now, you know, solving the on-ramp problem. It's only a matter of time. I think the on-ramp problem will be solved. Will it be a crypto-native solution, or will it be more of a policy-driven solution? I don't know. But it's bound to happen sooner than later.
I just want to say that I've never actually touched Cosmos, but Greg's doing a great job selling it here. It's making me kind of want to open up a new tab while we're in here and check it out.
Yeah, Osmos is beautiful. I mean, it's launched by Sunny Agrawal, who's it's very well-respected member of the Cosmos community. He was a research scientist and attracted over $40 million in TVL in less than 3 days. And I mean, I'm just obsessed with it. So
I can tell. I now with DeFi and government, I do want to kind of better understand, like, can DeFi actually be regulated? If so, what will that look like? And then what are some of the biggest risks or benefits of regulation for DeFi?
Oh, I think regulation is coming, and I'm actually very afraid how that's going to look like, right? Like, one of the things that's underlooked in DeFi is domain name ownership. So, like, if you go to, you know, Uniswap, or I'm going to throw Uniswap under the bus, but app.uniswap is registered under Hayden Adams. So even though you're not really decentralized and all that, you still can be construed as a facilitator because you own the domain name and you're actually hosting a financial product that's not regulated. Right? So I don't know when it'll be horrible if something were to happen to people hosting DeFi websites, right? So there are like, that's just scratching the surface as to the different risk parameters that I see in DeFi. Like, there are people, of course, doing mitigation around like domain names. If you look at what Serum is doing, they're not actually hosting, but they're having a lot of UIs being hosted by people. But I think people are not taking the domain name issue seriously enough. And when the hammer drops, it's going to be really bad.
Yeah, there used to be Namecoin that was trying to kind of hit that back in 2012, 2013, I think it was. The domain issue, and then there are a couple of new ones coming out now that are doing that. I'm not really sure, like, you know, how that's going to land, but I can tell you, as someone who spent the last 24 hours trying to track down the people who did the big scam for Stable Magnet, the domain name has been a great weak vector. because they had to register it somehow, and that turns out to be a spot where we can, we can utilize to find bad actors, and so it's going to be able to be utilized to find good actors too, the way that we see them.
Yeah, that's why we have solutions, right? Like Handshake, which is amazing. They have like over 1 million domains that are being used on Handshake, and there's technologies like Skynet or Saya, where you can actually host a static website and configure your Skynet to talk to Saya, right? So that way you're fully anonymous, and ideally you want to de-risk yourself and have users run different UIs instead of you hosting a UI. In the ideal scenario, I think we have decentralized technologies where you don't do you don't post any identifiable information and still conduct your business pretty safely. So we have the tech. It's going to be one of those terrible events that'll make people realize how important privacy and decentralization is. And regulation is bound to happen, and it's going to be nasty, and we're all going to make it after that, I think. Because
is that the biggest obstacle for growth?
Regulation?
Yes.
I wouldn't say biggest obstacle. I mean, I would say a big obstacle. I think biggest obstacle for growth is still on-ramp and user experience. But as they improve, you're going to have regulation come down. But I think once we go off that hump, it's going to be unstoppable. But it is a hump, I believe, that we have to face.
I mean, I'm not
like
completely convinced.
I'm sorry, Meta.
No, it's okay. I mean, I'm not completely convinced that regulation is going to be horrible. I think it is definitely coming for sure. And I think how we as a community, a bigger community across all the layer ones, across all the DeFi protocols, how we conduct ourselves as a community and what we demonstrate to those people that are watching, I think plays a big role in how the if and how badly the hammer could potentially come down, right? One of the things I used to work for a sales tax company, so I'm intimately familiar with the way they make these kinds of determinations around taxation or regulation of a particular good or service. And right now they're watching, right? They're watching and they're waiting, and they have purposely not come out and said anything because they know that muddies the water, right? So when they leave the water muddy, right, they know that they can kind of stymie, right, the growth of that sector and observe and see how things go. They are definitely in a phase where they're learning right now. And I think if they see a lot of scams, a lot of theft, a lot of, right, like even the flash loan thing is really, really dicey. If they see a lot of that, that's definitely going to drive their opinions on how we are regulated, right? And I do think sovereign currencies are coming because they're just not going to want to give up that level of control to decentralized protocols. So I think having a decentralized layer one is super important, to provide more options and accessibility that is not sovereign currencies, because I personally think sovereign currencies are pretty frightening. It's just more control from those government entities, right, in the grand scale. So I feel like decentralized protocols are critically important for the ecosystem.
Yeah, and if you don't mind, I just want to say, and Meta, you might have more input on this, but I know that when I was looking a few years ago, 3 or 4 years ago, when I was working to get institutional and family money, like family office money into the system, what people were waiting on and sort of begging for was clarity and regulation. Mm-hmm. They said, look, I can't put money into this. I'm controlling $1 billion. I'm controlling a $20 billion pension here. I can't put money into any of this until it's clear.
Yep.
Right. So I think it depends on who you're looking at. Like, it's going to slow us down, like a regular user. Sure. I think it's going to speed up the other side.
Yeah. I mean, regulatory clarity is absolutely what they're looking for. It's risk aversion, right? They will absolutely do everything they can to mitigate risk.
And do you feel like with that regulation, is that going to be coming down on all chains, certain chains? Do you think certain chains will be targeted first?
From what I've observed, they will look at a category. They tend to categorize technology. So they'll find a broad category and then implement regulation that way. So I don't think that they will necessarily go after specific chains, right? Like the Howey test was a very weak way to try to put us into some kind of a category. And they have, 10 or 15 different parameters they look at to see whether a public protocol is decentralized or not. So they'll definitely try to categorize, right? So I see, like, what is the notion of a DeFi protocol vis-a-vis a layer one, vis-a-vis a layer two. I see them like that's what I predict, is that they'll categorize it that way and then have rules around each each category.
Okay. Yeah, that makes sense. Yeah. So my last question here for the panel, and we'll hand this one over to Kendall, but like, what is the holy grail of DeFi? Is there a holy grail? What does that look like?
I mean, for me, I think it's kind of the experimentation, right? The economic experimentation. I mean, it's been, at least for DeFi, it's been fascinating. I mean, it's the greatest economic sandbox that we've had, where we have billions of dollars sloshing around into like new models and new experiments. I mean, the other side of that, and more important, is probably disenfranchised, or like serving these disenfranchised communities that don't have access to the global financial system. I don't actually think we've done a particularly good job of getting there yet. I mean, starting to, for sure. I mean, maybe that's in some ways El Salvador. That's certainly, I think, actually South America in certain places, in Venezuela has seen like the greatest sort of like beginnings of that. But I think, we're still not really there in being able to serve those communities. So somewhere between the two, hopefully we can keep both. That's how I see it.
Yeah, I see composability as a holy grail, like Kendall, to resonate what Kendall said. I mean, being able to compose on economic primitives, we never had such a platform before, right? Like DeFi as a atomically composable, financial, Lego blocks. The sheer power of things like flash loans that are very, very crypto native, is just unraveling the behemoth, right? Like, so the holy grail is definitely composability, in my view.
Yeah, from my perspective, it's a little bit on the last part of what Kendall said. It's really about being able to sort of even out the economic disparities between the world. I mean, I think it's a sad reality that there's an invisible line that humans have created, and if you are born on one side of that one, then you have a very different world than if you're born on the other side of it. And stuff like this allows people the opportunity to, by using their brain for a little while, create something and potentially change the way that humans interact with finance in general, and make themselves come up a lot based on that. I know that in BSC Gems, I mean, the group's only 10,500 people, but I've had hundreds and hundreds of people from what you call third world countries who've said, holy cow, like just getting onto BSC, which is actually affordable for them, getting on here, I can now buy a house, right? And maybe that house doesn't cost a lot for someone who's not from a third world country, but for them, they've made a few $1,000s off of a couple bucks, right? And they've had the opportunity, and now they want to come back and they say, okay, I'm going to teach my community how to do this. I'm going to go around to the town next door to here, show them how to do this, and it gets more people sort of more people are able to participate in a system than what currently or what has traditionally been able to happen, which I think is fantastic.
Yeah, definitely. And I think that I'm a big believer in DeFi. DeFi has changed my life, which is why I'm here today on this panel, just because of the power that has to financially include everybody from developing nations to developed countries. So I do want to roll this over kind of into our next round of questioning. Now that we've kind of seen the broader context of DeFi, what's going on in each particular niche, and talk about why we're all here today, which is why are alternative chains gaining traction? This is the last question. This is it. And I'll kind of start this off with Greg.
Oh, well, so, it's different properties, right? Like I can speak for Cosmos and maybe a little bit for Solana. From a Cosmos ecosystem standpoint, it is sovereignty. I mean, the chains that Cosmos SDK, tend to be used in are chains that are doing individual functions. Like Akash is a cloud computing platform where AKT token is used for paying for hosting fees, right? And it's low gas is absolute must, because without that we can't have a usable system. So usability optimized system the Cosmos ecosystem has are now, if you want a DeFi in this is essentially you use a Cosmos SDK and go through to interchain protocol. And so I think the uniqueness of it, and if you look at what Solana brings to the table, is high performance smart contracts, right? With 50 TPS, you can do things like 50x leverage trading on Solana that you can't do on Ethereum. So I think that unique properties of speed and sovereignty is what is attracting a lot of developers to these two ecosystems. Of course, I can have others speak for their respective platforms.
Awesome.
We're definitely seeing the affordability of transactions as a big driver, right? So gas fees on Ethereum are very, very high. It's actually cutting out. It's excluding, right, the early DeFi speculator, person that wants to get involved in DeFi. It's just too expensive. So that's definitely what we're seeing in our ecosystem.
Kendall and Ogle, we'll finish with you guys. We are running out of time, so we're going to keep these short.
Yeah, sure thing. I'll keep it short. Yeah, I mean, for us, yeah, similarly, we focused on usability, the usability side of like scalability. So that's cheap transactions, quick confirmations. And what they would do at Near is everybody on their account gets a human readable name. So you don't have this like, crazy string of characters. You can be Anon if you want to, but you don't have to be either.
I've got nothing more to add. These guys have said it all.
Excellent. Thank you all for joining us today. This has been awesome. We're going to hand it back over. Thanks all.
Time is ticking away. Ditch the banks and join the DeFi movement on Tezos blockchain. What if we told you there is an affordable, fast, and sustainable way to leverage the power of decentralized finance, all the while empowering the next generation of finance? A proof-of-stake implementation into decentralized finance, taking up to 2 million times less energy than proof-of-work networks. It's time to start caring about your impact. It's time to care about the future. Visit plentydefi.com to get started.
We're back with the Global DeFi Summit, and our next presentation is by Adal El-Masari, who's the co-founder and CTO of AlphaFin. And the discussion is an absolutely amazing one that is going to be discussed, and it's how third world and developing countries are really having microloans helping to empower them, individuals, and the economy. So I'm going to hand it over to Adal to start his presentation.
Hey, thank you very much. It's a pleasure to be back again here, and it's a tough act to follow, especially with the previous panel that spoke a lot about how the DeFi is going to extend and the difference between alternate chains. And I really like the point that Meda mentioned about the expensive gas on Ethereum right now, because I'm addressing more of developing countries and how can we get DeFi to work for them. So shall we start then? What we are trying to build here is called DLN, Decentralized Lending Network, as a system that will change how we look and view DeFi, not by optimizing it for the yield, but I'm thinking more, how can we optimize it to achieve the highest impact? How can we help the millions and billions of people around the globe that need to be helped with blockchain technology that we have in our hand? If we are truly going to roll this out to the masses, well, half of the world does not have or is underbanked. So what's the problem with microfinance right now? Well, there are 2 billion people that are unbanked, meaning that they don't have any access to banks to start with. We're not even talking about those that are underbanked, maybe have some sort of financial instruments, but they need more of it. And trying to address that crisis that we have, that it will only be exacerbated by the unfortunate events happening with COVID and around the globe, there are very few solutions. One of them are MFIs, like the micro lending that has been introduced by Dr. Muhammad Yunus, who is a Nobel-winning economist. But the problem with that is that it hit a ceiling. It cannot progress more. As much good as it does, it cannot progress anymore. So why is that? Because first, there is cost. When you are trying to create a micro loan, you have 30, sometimes 40% of the loan that has to be spent on origination, on creation, monitoring, and then the follow-up on it, and to collect the loan afterwards. Then also access. Unfortunately, a lot of places don't have access to modern banking system or any sort of financial institutions. Hence, it is difficult to create those loans for people living in those areas. And then if you think about it, giving a loan to one person in a community does not help the community, but really what it does, it helps one person at most out of that community. So it is not sustainable, meaning we cannot really rely on it to feed itself and grow through it. So what is the solution? The solution is that we will be able of creating DLN that provides affordable loans with no fees and no interest at all. And they are universally accessible. That's done through a social staking smart contract, the aim of which is to unlock the capital in the community itself so that the community can coalesce together, because blockchain is all about community, which means it's going to be sustainable. So if a financial system can depend on the financial components that exist within it, it does not need governmental assistance, and neither does it require NGO subsidies. So we need to rethink, reimagine the current micro-lending. The current environment has two components, basically traditional borrower and lender. In that model, in order for the lender to extend the loan to the borrower needs to provide some sort of collateral, like here, hold this as collateral so I can give you a loan. Well, but if that borrower is unbanked and they don't have money to start with, what kind of collateral will they do? I mean, they cannot just give you 2 chickens and say like, hey, hold those for collateral. You'll spend more on them to maintain them. So what is the solution? So the solution is those that don't have collateral, they usually have friends. So, and those friends usually perform the role of guarantor, backer, and they put their own money on the line for their friends. But why can't we recognize them? Why can't we create an equation that includes all of them? That's what we've created here. We've added community investors. Why investors? Because we want your friends to invest in you. We don't want you to simply borrow money from them. So by creating that, now you have the borrower coming in and providing and asking their community to invest in them. So how can we organize that on the blockchain? Well, we will basically utilizing social staking smart contract to allow the borrower of creating a proposal. That proposal then is solicited and shopped to his friends, family, community investors that want to back that borrower. And when they commit their assets to the social staking smart contract, those are locked in. And as soon as the entire amount required is locked, we turn around to the lender and say, well, we have a fully collateralized 100% risk mitigated debt position. Would you provide liquidity for that position? And lenders will be quite happy because those are very secure positions. And hence, the lender can put the liquidity to the borrower, and the system invests the collateral in DeFi to generate ROI that can be then split between the community investors for helping their own friends and the lender for providing the liquidity, and 1/3 goes to the actual network itself. So after creating all of that stuff there, we started talking with different people on the ground. And when you are trying to introduce new things, some people like to create like direct to the masses solution, which could work, but in a highly regulated domain, like all the previous speakers mentioned, regulations are coming and all of those there. Transmitting money and dealing with money becomes a huge problem because you need to make sure that it is working in a right environment. So how do we deal with it? We basically have to think of a way that allows you to basically use and utilize the actual system that exists. That system are the MFIs. So we've spoken with a whole plethora of MFIs. 6 of them are the first tier to go through, and those span from West Africa to the Middle East to India. And those, when they looked at the model, they said, like, this is great. This can help us progress and help us really get to the objectives and the goals that we want to achieve in the system. Because before the DLN, there is no way for them to help more of their people and provide a way for them to provide incentives for their people to work through those. Those are 130 million in total budgets and 2 million people lives that will be changed in there. And what we have been doing is we're taking each one of them one at a time and rolling out this solution with them and using networks with low gas fees and high speed like Casper that allows us to basically serve more people and making sure that our DeFi component can operate at maximum efficiency to provide the highest yield possible so that the system can really grow faster and serve more people. But how does that work? Well, we want to make sure that we are generating all of those in the back end correctly, and at the same time providing a really good way of interacting with the users. So we all know that traditional banking have very low returns, but the blockchain has more returns going through. But for the regular user, they don't know a lot about what DeFi is and how it works. So they need a simplified UI that can show them how it is. That's what we are doing with all our MFI partners, is creating a simplified application so that by having a very simple, intuitive AI that the system can use, people will use just like any other phone. So for example, you are able of registering, you are able of logging in, you are able of creating your proposals. And then just like any system, you are able of sending an invitation so that people can see what are their friends asking from them. And once the invitations comes in, you can simply click on a button on your phone to invest in your friends and check how much you want to contribute towards them. And once you are done with the investment, you are now fully ready. And this way, you can get all the locked in amount to your friend. So in short, what I'm trying to say here is if we are able of thinking differently, if we are trying to use DeFi as a different way of thinking of how do we create a system that is quite efficient, that can take the current nice DeFi components that we've built and been talking about all day, and then direct them all the way to serving the people, to serve the masses, to be able of rolling out those benefits that we all have experienced, but on a larger scale, for those that are unbanked, for those that are really, really in dire need of every penny that we can help them generate in the system. Now we will be able of creating a new generation that not only adopts DeFi and blockchain, but they will be one of the biggest supporters because we are able of affecting their lives and the lives of their children and the community, and which will reflect on us very positively.
Time is ticking away. Ditch the banks and join the DeFi movement on Tezos blockchain. What if we told you there is an affordable, fast, and sustainable way to leverage the power of decentralized finance, all the while empowering the next generation of finance? A proof-of-stake implementation into decentralized finance, taking up to 2 million times less energy than proof-of-work networks. It's time to start caring about your impact. It's time to care about the future. Visit plentydefi.com to get started.
We're back at the Global DeFi Summit and we're taking a look at scaling blockchains and in particular layer 2 solutions and why they're so perfect for this. Now I'm going to pass it over to the moderator of this panel, my fellow Being Crypto colleague, Layla. Take it away and enjoy the discussion.
Hi everyone. Glad to be talking to you all today. So we're going to be talking about why layer 2 solutions are perfect for scaling blockchain. But first, I thought we could start with introductions. So, Jack, you can start.
Hello, everybody. I'm Jack O'Halloran, CEO of Scale Labs. We are the core team behind the Scale Network. Pleasure to be here today.
Hi, everyone. I'm Emin Günser. I'm the CEO of Ava Labs. I'm also a professor at Cornell University. I'm also the co-director of Initiative for Cryptocurrencies and Smart Contracts.
And hey, everyone. I am Marek Olszewski. I'm the CTO and one of the co-founders of C Labs, which is one of the companies working on the Celo network.
Fantastic. Thanks so much for being with us. So I thought we'd start off with the question of the panel. Why are layer 2 solutions perfect for scaling blockchains, or are layer 2 solutions perfect for scaling blockchains? If you could each answer, maybe we'll start with Emin this time.
So, yeah, I couldn't really hear what you said, Layla, but I think the question is why are layer 2s a good fit for blockchain scaling? And so I think let me just come out and say outright that I do have some credentials in this space in the sense that we developed the fastest layer 2 for Bitcoin in something called T-Chain and T-Chan. But deep down, I believe that the best way to build scalable blockchains is by building scalable layer 1s. Scalable layer 1s is what everybody needs. At the core of every good scalable layer 2 solution lies a good scalable layer 1 solution. But with that said, layer 2s are welcome on every blockchain, and they represent a reasonable technique for addressing the scalability issues and for shedding off load from the underlying network. What you can do in a layer 2 solution is, of course, take the load off, resolve issues off-chain without having to use the security of the network, and then bring back the resolved, the fast-forwarded smart contract or the resolved set of payments back into the chain without having to tire the chain out for things that could have been resolved in private. So there are many cases where this could go much faster than having to use the underlying chain, and also this can also be very, very, very cheap. This is at its best when there are things like payment networks. When A is paying B, that's really a bilateral issue. It doesn't really necessarily involve the rest of the network. It can be resolved off-chain most effectively. But when you have multi-node or multiple users using a smart contract, then the off-chain solutions are actually difficult. That's when layer 2s are potentially not the best solutions. So, with my professorial hat on, I think there are benefits to both approaches. What unites us is our commitment to decentralized solutions. So what is best in this space is, of course, any solution that is trustless. So with that, I'll let Jack and Marek present their ideas.
All right, go ahead, Marek, and I'll go next.
Yeah, I think one thing to add is, I think that we're in an exciting time right now. I think what's clear really with all of this excitement around both layer 2s and also side chains and other kind of EVM compatible layer 1s is that it's giving people an avenue for a lot of this excess capacity that clearly needs to go somewhere, because there's clearly more demand for decentralized smart contract platforms than there is capacity on Ethereum. And I think one really nice thing about all of these different offerings that have been springing up is that it really gives us opportunities to experiment and to innovate and even to try out kind of new things that maybe are a little more specialized. As Emin said, layer 2s can be good for payments. And likewise, there are networks that are good for other things. And so, for example, Celo, we really focused on giving one block finality, having native stablecoins built into the platform, where you can even pay for transaction fees with those stablecoins or with other ERC20 tokens on the platform. Things like efficient light clients that you can sync with the chain. These are things that are important to some users, but not to all users. And it's just really nice that we have a world now where there's lots of different offerings, where there's more choice for developers to try out new platforms. And as Emin said, we're all united by our desire for decentralization, and I think that's why we're all here.
Yeah, and I really agree with both you guys, and I think in particular the uniting around decentralization. And one interesting thing for people who aren't really closely following the layer 2 or scalability field is there's actually a nomenclature and diction battle as well happening around syntax of what is a layer 2. And for me, I think my perspective is I'm a maximalist around decentralization. I feel like if we put value into away from blockchains and into centralized systems that one are really good for certain use cases, but if we try to put all our eggs in that basket where we're abandoning blockchains and then trying to integrate methods and methodologies with randomization and swapping of which individual node is actually really in control of something and implementing game theoretical mechanisms. I appreciate the work people are doing there, but it worries me a bit that we're getting away from the core magic that's really brought the industry where we are today. So I'm a firm believer in layer 2 scaling or scaling of blockchains with other blockchains, and also actually a believer too that we're going to have a lot of really interesting solutions out there. Look at the people on the panel today. I feel like everyone is building something that's unique and different, and I see a bright future, and I see so much demand that we're going to need all the smart people we can get in this space building.
Those are all really interesting answers. I was curious, especially on that point where you mentioned the fact that what exactly is a layer 2 and the whole debate, and the fact that you all are doing such different things. I was curious about what made each of you in your specific organizations and projects choose the layer 2 solutions you are working with, and what was the sort of payoff that happened as a result of you choosing those? Jack, if you want to start.
Yeah, I'll go first. I think we all have unique situations, and that question probably isn't even, needs to be reframed for some other people here. But for Scale, Scale is actually built in, it's Ethereum native and multi-chain. It's built on Ethereum. And so Ethereum actually guides Scale nodes and where they work and which chains they participate in. And so we're really just very focused on supporting and scaling Ethereum. And that's, so Scale is a scalability solution. It's by many standards a layer 2, by many standards not a layer 2, by many standards a layer 1, by many standards not a layer 1. And we just kind of took an approach of we were trying to build something for ourselves for the applications we were looking at building, and that's really what led us down this path. So, and we felt like it was optimal for the situation within Ethereum. And excited to hear the other panelists, because I know they're not doing layer 2s and have different perspectives and operate in a similar field. So
yes, so in that I'm obviously, and it's understandable that not operating in layer 2 like Emin, you can rephrase the question maybe to what it's like operating, especially for you, and from having built layer 2 and then going back to layer 1 or building on layer 1 now, what that process was like and why you've made that decision. Sorry.
Right, Leila. No, I think the differences, as Jack pointed out, are actually very, very, very minute. So the difference between a side chain versus a layer 2 versus a layer 1 are essentially they're very hard to discern. So there was a lot of talk about interoperability, right? There were chains launched where the entire selling point is this thing solves the interoperability problem. There are K different blockchains, and this one's going to be the K+1 that solves interoperability. And I will tell you what, it introduced yet another, the K+1 chain to be that is not interoperable with all the K that came before it. So I don't think the interoperability problem is going to be solved in that fashion. I think that what we're moving towards is going to be a universe of many different blockchains with bridges that are connecting them. And when you go from the layer 1, one layer 1 to a different one, or one layer 1 to a different L2, or one layer 1 to a different, whatever it is, a roll-up, etc. Essentially, you're doing the same thing. You're taking assets in one universe, converting them into a different universe, resolving transactions off the chain, and bring them back in. So in Avalanche, the main thing that we did was to address head-on the 3 big problems that are facing every single solution on Earth. Every single blockchain solution on Earth. What are those problems? Scale. Second one is flexibility, the ability to support more than one virtual machine and more than one network. And the third one is governance, being able to control what this thing does in a dynamic fashion after it's been deployed. And we interoperate with Ethereum via bridges. We plan to interoperate with many other chains via bridges. And we have so much scale, so much capacity, thanks to our brand new novel consensus protocol, that we can take on that load, resolve it, and the assets can move back to their native chains afterwards.
Yeah, and I'd like to echo that. I think definitely as more and more layer 1s and layer 2s and side chains continue to launch, I think this internet of blockchains reality is certainly one that we've already started living in. And over time, each of these chains will start specializing a little bit, and there will be use cases that each of them are better at. I think governance and scale will continue to be important, as I mentioned, and honestly will become table stakes over time, and then we'll see other specialization. And one of the things that Celo really specializes on is mobile payments. We spent a ton of time building a consensus protocol that really works very well on mobile devices, where you can realistically actually sync with the chain on a resource-constrained mobile device. And that means using a ZK Snark proof that you can download, a 500 byte proof, and verify it in constant time really, really easily. We worked really, really hard to make that possible. And then, obviously stability is just really critical for DeFi and very, very critical for payments, but making it just really easy for people to send those payments, allowing transaction fees to be paid with these stable coins that are implemented as ERC20 tokens. If you think about where DeFi is going to go over time, we need that kind of simplicity for your end users. Gone will be the days where people have to think about multiple currencies. And then finally, addresses. I think a lot of people here are probably very comfortable with private key derived or public private key derived addresses. But if you think about the end user that we're hoping to get on board onto DeFi, those people are very, very intimidated by these kind of addresses. And so baked in directly into Celo is a decentralized phone verification protocol that makes it really easy for you to, one, verify your phone number in a fully decentralized manner, but after that, to be able to actually send payments to phone numbers instead of to these intimidating publicly derived addresses. And that's really, really exciting, because not only does it let you send payments to people who are in your contact list on your mobile device, it also lets you send payments to people before they even sign up. And that, from a growth perspective, from a making DeFi global perspective, is just going to really be very important over time.
Pretty much everyone mentioned the idea of almost a universe of different solutions and blockchains. I was curious, so we're all kind of still waiting around for Ethereum 2.0, and I was kind of curious if this world we're creating is kind of pushing not the need for it, but more like the big savior of it further out and not as important because we're coming up with solutions faster than that's coming out. I was wondering what your thoughts were on that were. Whoever wants to start can go for it.
I'll take first cut at that. So one, I think it's a good point, and I feel like that's probably a perspective many people have. What I'm seeing from my view is the amount of businesses and entrepreneurs that in the past would have been starting machine learning companies or social networks or consumer applications. All of these people are flooding into the blockchain space, and not in one area, but actually across a whole span and spectrum of industries and applications and uses of smart contracts. So I think we're really at this explosive state where we're not to the knee of the curve yet. We're figuring out all these fiat on-ramps and wallet integrations and bridging. And I think we're getting really close. And I think it can feel like there's a lot of confusion and infighting and kind of like religiosity around what technique is the best from the outside. And it seems like it's slowing stuff down. But personally, I think the builders are building, and all of the people building infrastructure around them are supporting them. They're building, everyone's raising ecosystem funds and innovator programs, accelerators. So we're at a really exciting time. And my message to people who aren't inside seeing this is there's some exciting stuff coming.
Let me echo that and build on it. That's exactly right. There's a lot of excitement. There's a lot of religiosity. There's a lot of, whenever there's so much excitement, you end up having people flood in and come up with the cheapest, dirtiest solutions. These are the people who tend to not have any staying power, and these are the projects that tend to disappear. It takes no effort whatsoever to take Geth and to run it on a centralized group of machines, and voila, you've got something in your hand that you can build as a scalability solution. And often what these people do is they say, oh, look, we're going to start out as a layer 2. Actually, now that this is a layer 2 panel, we should talk about how this is actually pertinent here. They start out as a layer 2 solution, and to an uninitiated person, this sounds really appealing. Oh, these people are friendly. These people are going to work on my own coin. They're going to bring more value to my coin. But I suggest, A, I have an observation, and B, I have a suggestion. Observation is everybody who starts out like this ends up issuing their own token. Sooner or later, the token is coming, because that's the proven way to fund development. There is none other that has been tried out and that has actually led to a sustainable model. The token is there. Even Uniswap, whose goal was to not issue a token, ended up issuing a token. So that's going to happen. So whether or not a layer 2 brings value to the underlying system depends on the actual activities of the group. Are they coming in with new technology? And in addition, are they coming in and looking for actual business development venues for that technology? Are they making things happen that would not otherwise have happened? Because when they inevitably fork off, when they inevitably start with their own separate push, using their own token, they're going to cleave away and take away some of that business, some of that TVL, some of that activity that was on the original chain. So that is in the works. It will happen. Are those people really trying to make the pie bigger, or are these zero-sum games slicing an already, I think the DeFi pie is tiny when you look at the general macroeconomy. So do you want another person to come and take a bite out of this with a fancy, moon math trick? Or are these people bringing in things and that would not have otherwise happened on the original chain? I suggest that everybody take a look at that. And in fact, these competing layer 1s typically have their own business development teams. They have their own vision. They're trying to make the pie bigger for everybody. And many layer 2s end up being, oh, I just ran Geth on AWS, and now make me rich. So people have to be kind of careful about what's going on, the dynamic in the layer 2 space.
Yeah, no, I agree 100%. And maybe just to take the question in a slightly different direction, I think, there's been this really interesting debate lately around increasing block sizes, never-ending debate, I guess. But recently with Elon Musk tweeting about increasing block sizes for Dogecoin, I think Vitalik wrote a very, very thoughtful piece around why he thinks sharding is really the way to go to achieve scalability and decentralization. And it's certainly one of the directions that obviously the ecosystem is exploring, and I think it's very, very much worth exploring. But I do think that there are additional opportunities as well. I think the biggest criticism of scaling vertically and increasing block sizes and increasing the compute requirements of full nodes and of validators and miners is that it effectively makes it harder for hobbyists to run these nodes on their personal computers. And that's certainly true, but I think there are interesting new ideas that still have yet to be explored around incentivizing professional folks to run large numbers of these nodes so that we can achieve both decentralization and scalability. I think Ethereum at its peak had around 12,000 nodes, according to ethernodes.org. That is very, very much feasible for any network that has the appropriate incentives for people to run full nodes, which, admittedly today is a thankless task and one that you don't get paid for. But it's certainly possible. One of the ways that we're doing it is by incentivizing full nodes to service like clients. Again, if you have a very efficient like client protocol, then you can have a lot of like clients on the 6 billion smartphones that exist today with active mobile subscriptions. They can connect to tens of thousands, hundreds of thousands of full nodes that can service these nodes in a fully permissionless manner and can actually get paid as part of the core protocol for doing that. And so I think there's really a lot of really interesting ideas still that are left to explore around achieving very, very highly decentralized networks that also can scale much beyond even the fastest layer ones and layer twos today.
Awesome. I mean, that was such incredible insight, even taking it off into a different direction. I mean, just brings more to the table. I was wondering, Emin mentioned the how small this world actually still currently is. Sort of looking into the future, do you think there'll be a time where users won't really care what the solutions their dApps that they're using are built on, or will this always matter?
Let me start. Let me take a stab at this. So absolutely, our goal with Avalanche is to make sure that dApps on Avalanche can present a seamless interface to the user. And to those people who've never tried it, I suggest they try interacting with any dApp like Pangolin on Avalanche. It is entirely different than any other blockchain experience you might have seen. The finality is so fast that the experience is as if you're interacting with a centralized website, even though behind the scenes you have about 1,000 nodes that are processing your transaction that are involved in the construction of the blockchain. These are actual block producers, 1,000 block producers. I'm not even counting the additional nodes that are checking the blockchain. So absolutely, our vision is that of a seamless Web3 experience for all kinds of applications, wherein the user has no idea that they're interacting with a blockchain. So we have a lot more, of course, ground to cover in this space, but it's starting to happen. And I think normie adoption is beginning to also happen as well, although we have a ways to go to that as well. But it's a qualitatively different experience.
Yeah, I'll echo that and say similar experience using the first application that went live on the Scale mainnet. And I think there's a lot of similarities and goals between the projects here when I see what Avalanche is aiming to do and what Scale is aiming to do. And when you have block times of 0.35 seconds, 0.45 seconds, it's an absolutely transformative experience using a blockchain application. But I think, Leila, you're right. The goal is for the end user not to say, wow, I had such a good time using Scale today. They should say, wow, I had a really great time using this application. Oh, it was on a blockchain. I mean, just like, hey, I took an Uber ride the other day. I didn't really know if I was using AWS or Google Cloud, but hey, I got where I wanted to go. And and Stripe processed the payment. Good. Okay. Like, I don't care. I just want to get somewhere and pay for it. And that's our job. And really our, where the hearts and minds have to be won by protocols and blockchains is with developers ultimately, and helping them, win the hearts and minds of their users.
Yeah, no, absolutely. And, it's an interesting comment about normies getting into this space. Over time, this will, of course, just continue to be the case. And I think we will see a world where, that reality where you don't have to know what platform your underlying application is running on. And it really necessitates that that this future that you described, Leila, is going to happen. Similarly, I think if anyone's interested in seeing similar to Pangolin experiences that look and feel like centralized offerings running on decentralized platforms, I highly recommend checking out Valora as well. That's a decentralized Venmo-like product running on Celo. And the team there worked just so hard to fully abstract all of the crypto away. But the end result is you can send money to phone numbers, send money to people in your contact list with really fast finality in a fully decentralized manner. And people running that application have no clue what protocol it's running on. It's been fully abstracted away. And I think our job as platform developers really is to build the best platform for those developers building those kinds of experiences. And yeah, that's what we're doing.
I want the decentralized Venmo, Marek.
Check it out. Aurora app.
All right.
It's there.
Cool.
Thanks so much for that. So we're getting to the end of our time. I was wondering if there are any ideas that haven't been touched on that maybe you'd want to mention, especially about maybe the supposed perfection of layer 2. If not,
yeah, I think.
Oh, sorry, Jack.
Just last, I'll just before we close here, I'm sure everybody has some thoughts, but I just think there's been a lot of talk and a lot of work while that talk's happening, and I think a lot of really amazing teams were funded in 2017, 2018, and we're starting to actually see the output of that work. And the next year is going to be pretty exciting, and whether it's on layer 2s or layer 1s or some culmination of those things. It's just exciting, I think, for people in the space where, the rising tide lifts all boats, and we're actually going to get real, take a bite out of centralized competitors. That's kind of what I'm ultimately excited about, as well as many things launching on Scale. But in general, this industry is going to get hot in the right way.
Absolutely, I think it's a really exciting time, and obviously DeFi has been just on a rocket ship over the last year, but there's so much more that can happen. And one of the things that, not surprisingly perhaps, I'm most excited about is payments. Payments has long been kind of one of the holy grails in DeFi, and we're really at that point now where more and more it's becoming a reality. And so I'm just absolutely thrilled for what the future has in store for that.
Yeah, and let me say a few words about the current climate we're in. So if I had to characterize what's happened exactly a year ago, and then since then, I would say that we saw an enormous amount of interest in new launches. And we had a lot of very exciting projects, maybe going back to 2016, 17 actually, start to take hold and start to capture the public's imagination. And of course, the best financial rewards go to people who invest in good ideas early. So we ended up seeing a lot of investment, a lot of people come in and go into projects very, very early on. Now, once you see a couple of these projects take hold, then what happens next is, well, okay, my cousin Jimbo ended up getting rich on some token issuance. I too want to have that happen, and you can do this and it becomes a self-reinforcing dynamic where there's a new coin. The idea behind it is broken, but because there are enough people who think that they will make money off of it, that coin does go up. Now, this game cannot continue forever. And at the end of the day, what really carries the field are the good ideas, the projects with actual technical strength behind them. And there aren't that many technical ideas that are novel. So at the end of the day, after a year of this, you end up with a bunch of people trying to run after dog coins to trying to get rich. And the correction that we're living through now is well deserved. It's great actually for builders. It's a correction that separates the wheat from the chaff, separates the projects without staying power, separates the projects that have no technical background. So this is a great time to build. I suspect that in the fall we're going to see a resurgence of activity because a lot of effort will come to fruition. We'll see exciting developments in DeFi. We'll see exciting developments in Web3. We'll see other developments that have long been talked about but have not been addressed, like identity on a blockchain and so on. There are lots of different areas that there's been a lot of noise about, but the people who know how to solve them and the tools that are required to solve them had not yet been brought to bear, and that's coming. So I'm super excited and super bullish about the space, no matter the temporary correction we're living through at the moment, and super excited about what's to come.
Thank you all so much. Yeah, it's going to be a great time. We're looking forward to it. Thanks for speaking with us all tonight, and yeah, have a good day.
Thank you.
Thank you so much.
What is the future of decentralized finance? Affordable, decentralized, and sustainable. Experience the power of DeFi in ways you've never experienced before. Plenty allows you to use DeFi tools that you've grown to love and adore, but without the crazy fees associated with proof of work. Enjoy sustainable yield farming programs that are cost-effective, liquid, and built on the powerful Tezos blockchain. Visit plentydefi.com now to get started.
Welcome back to Global DeFi Summit. Now we have a record number of attendance and comments in the comment section of the chat. We'd love to see some more, so let us know how you are finding the day and how you're finding the conversations so far. We're loving to read the messages. So if you are watching on any of our live streams throughout YouTube or social media, do make sure to head over to globaldefiSummit.com. You can interact a little bit more. And also, if you are on Brella, you can also check out some of the amazing exhibitor booths that you can go and check out and have a little look, and also say hello in the chat as well. And guys, keep up with the networking and the engagement. We're loving seeing the conversations and also seeing where everyone in the world is tuning in for. Now it's time for our next panel discussion of the day. And this one is taking a look at the Tezos blockchain. So I'm going to head over to our next panel of the day.
Hey everyone, first a huge thank you to Draper Goren Holm for producing this event, as well as all their other leading crypto events that give individuals across the globe front row seats into this unfurling, exciting, world-changing, tech-driven financial revolution. These are exciting times. I'm Dara Albright. I'm the host of the D-Wealth News podcast, and it is my honor to moderate this all-star panel that will be discussing the current state of DeFi on the Tezos blockchain. Now, although DeFi on the Tezos blockchain is still in its infancy, many of these platforms are gaining rapid success, so much so that Tezos could ultimately emerge as the leading DeFi, as the leading DeFi blockchain. And today we're going to explore some of those reasons why. So let's start with each of our panelists first giving a brief intro, and then we'll just dive right into the discussion. Maybe Alex, you want to start?
Sure. Yes. Thank you, Dara. My name is Alex Davis. I'm the head of innovation at Tezos Israel, a grantee of the Tezos Foundation, and the little bit of a soft announcement of the CEO and founder of Maverick Finance, a decentralized finance platform on Tezos. Thank you for having us.
Excellent. Dibia?
Hi, everyone. This is Dibia, and I'm the co-founder of BuildPad. So BuildPad is an IDO launchpad on Tezos ecosystem, and we are empowering token-based projects and helping them to do pre-sales in the Tezos ecosystem.
Kiefer?
Yeah.
Hi, I'm Kiefer. I work with a company called Hover Labs, and we build a number of DeFi protocols in Tezos land. We build Harbinger, which is a decentralized price feed. We build Colibri, which is the first algorithmic stablecoin on Tezos. And we're working on Murmuration, which is a generalizable DAO for Tezos as well.
Excellent. Bernd?
I must say that commercial at the beginning was pretty epic.
It was.
Yeah, well, no, I'm co-founder of Plenty, and also Tezos and Tezos India. Well, Plenty is a decentralized yield farm on Tezos, and we became the #1 DeFi application in just a few weeks on Tezos. So it's been a crazy few weeks.
Excellent. I see that we're missing Kevin, but I guess we'll jump in because he should be joining us momentarily. Maybe there may be some technical difficulties there. But let's start, maybe, Bernd, you could kick it off with just giving a little bit of a summary of the Tezos blockchain and what sets it apart.
Well, the last sentence of the position paper of Alan Goodman of a few years ago summarizes it perfectly, where he writes, Tezos aims to be the last cryptocurrency. So it's built in a way that you can upgrade it. So we've already had 6 successful upgrades, and we're on our 7th. And that's more than the entire industry combined, how much they have upgraded so far. And
I think ETH has had more hard forks than we've had upgrades.
Yeah, but hard forks, it sucks that the chain gets forked, but the thing that really sucks is that your community gets forked. So on Ethereum, you now have 2 camps. You have Ethereum and Ethereum Classic. But on Tezos, we try to keep everyone on the same boat and keep rowing in the same direction.
Excellent. So we've all seen some of the growth, the exponential growth that the Tezos DeFi blockchain has been experiencing over the last couple of weeks. Smart contract calls were already up well over 1,000% in 2021 alone. What do you all ascribe to this massive growth? Other than the general enthusiasm, in the marketplace, in early spring. Maybe Alex, you want to kick it off with that. And actually, Kevin just joined on. Kevin, want to just give a brief 30-second intro, and then we'll get right into the questions. You missed nothing yet.
Sure. Hi. My name is Kevin Marabi. I founded StableTech, which builds layer 1 DeFi solutions on the Tezos, as well as Wealth Chain. Yes, so we built USD Tez, ETH Tez, TezX, and now we're coming out with TezFin.
Excellent. All right, Alex, kick it off. What's with all this massive growth? What's going on here?
So yeah, I mean, look, it's basically about time. There's been a lot that's been building behind the scenes in Tezos, as we know, with Bernd and Plenty, and Kiefer and Hover Labs, and Luke, of course. I don't want to keep him out of that. And especially, I think the NFTs have really kicked off really what has been going on with these massive increases in contract calls. Nuked and Calumet have skyrocketed the amount of interactions with Tezos. And if you look at the total amount of transactions on an actual platform, Nuked, Latin for here and now, so people abbreviate as HEN, has more users and more transactions than OpenSea on Ethereum. So it is that's really kicked it off for us. But besides for that, there are plenty of DeFi applications that are just kicking it off and getting moving. Plenty as one of the examples, Calibri being another, Maverick soon to be coming into the field. Kiefer, I've spoken to you about it a while ago under a different name. We've rebranded, and I think that's really what's gotten this kicked off and started. I'm sure we'll get into the reasons as to why Tezos in just a moment.
I think as well, there's a lot of quality of life improvements that happened for developers over the last year. So there's been a lot of work to lower gas costs on the network. There's been a lot of work to make the RPCs more developer friendly. I know like I contributed code to the protocol to allow us to inject larger smart contracts. And like the tooling in general has just kind of developed. And all that is to say is that building a platform and a language like Nicholson from scratch is hard, right? It's not something that you do in a few months. And so it's taken a little bit of time for this tooling to develop over other competitors who maybe just have EVM code and can kind of take all of the EVM tooling already and just slap it onto their chain. And so I think that developer friendliness of Tezos is rapidly increasing and has made very big strides in the last 6 to 12 months.
And on that front, I think because this is something anybody can relate to in the NFT space, which takes up a lot of the crypto conversation overall now, you're probably familiar with IPFS and the chain that's on and how long of a development project that's been, or maybe you're not, but it's something that no matter what chain you're on, you're probably using that as your file system. Well, few people know that the crowd sale for that overall project was just 1 month after Tezos in 2017, but they didn't go live with anything that was production level until late last fall, which goes to show that good things take time, especially including Tezos. And yeah, so I think a year ago we had like 3 tokens on Tezos. That was it. And we didn't have any wallets that were supporting Tezos tokens, really, block explorers, anything like that. But that infrastructure was built over time. And then so now we're hitting this crescendo period, this tipping point where all that and so much more, as Kiefer was mentioning on the developer front, that's been opened up to which we can start to see the fruits of that labor. And the first level on that front was the NFTs. And now we're starting to see blossoming in the DeFi front as well.
To build on that just a tiny bit, because Kevin, you had a really good point on the infrastructure kind of coming up. The last year and a half has been instrumental for Tezos, but something that we tend to forget from a developer and entrepreneurial standpoint is the fact that the rest of the world matters, and it's been Corona. So, you know, Tezos launched in I think mainnet went live in 2018, and in early 2020, the last year and a half has been Corona for the most part. And our infrastructure for getting things released didn't really start until Corona started. And so all of this development happened during a period of global pandemic, which is not really, I don't know. Yeah, in Israel, at least we hit 25% unemployment, and the United States went into a horrible position. Bern and Dibio, you guys are in Europe and India respectively. And there was a lot of, it's not the most conducive for building in general when it comes to businesses, but when it comes to technology, it actually allowed us to push forward and actually focus and build rather than get stuck with markets, etc. and yada yada. But a lot of what has happened in Tezos occurred over this time span of incredible strife, I would have to say. And so with the future of building on Tezos is going to come in a dramatic upswing of the world getting back on track. Our infrastructure is there, and I'm really excited to see what happens going forward.
That's a great point. The one thing I will say, though, is that plagues do give innovators a chance to innovate, you know, and really focus on that. So we could look at the bright side of a global pandemic. So, you know, mainstream media has recently glommed onto this whole notion that cryptocurrencies are bad for the environment, you know, notwithstanding the fact that, you know, cryptocurrencies use a quarter of the energy that the conventional banking system uses. But that's, I guess, a story for another day. That's it. Maybe you guys could talk a little bit about why you think that Tezos' more energy efficient approach may help it garner, you know, mass mainstream adoption quicker.
I'd like to address that I've given a few talks on this specifically recently. It should be clear that the networks for of activity for whether it's Ethereum or Tezos, like that actual internet side of things, that's already green. The problem, the energy consumption, comes from the way in which Ether, for example, or Bitcoin, for example, not harking on them, but the way in which it's produced. It involves this competitive system called hash mining, and you've probably seen images of people with these massive rigs or warehouses, and then with all these chips strung together, and then all the energy that takes to power that. And that has to increase exponentially over time as people compete with each other. The difference is with Tezos and the direction that Ethereum is going, is that proof of stake doesn't do any of that at all. The economic system in which the coin is produced and distributed is green. It's, for all intents and purposes, carbon neutral. So it's not like it's an improved system. And this is even those that are trying to report. I think it's important to correct this, because those who would maybe even, I read a lot of articles speaking about the greener nature of Tezos, or what about these more energy efficient ways of doing what crypto does, as though it's on the same spectrum. It's not. It's a night and day, apples and oranges, completely different. That whole system is gone. And at that point, it's as the energy consumption is as it's too cheap to meter in that regard. That would warrant any concern. It's virtually nothing at that point. So I think that for any proof of stake blockchain, I think that's a great future, because as Cambridge reports in real time, the amount of energy consumption annually of Bitcoin mining alone is nearly 1%. Now, as you mentioned, yes. It is less than the traditional banking system, but also the traditional banking system, manages maybe 100 times more in cash, trillions of dollars, maybe $100 trillion, and also hundreds of quadrillions of dollars. And we're very early with Bitcoin and Ethereum and these proof of work systems. And the point is the energy consumption grows exponentially. That's the key. Where are we going to be in 5 years or 10? If it's going at this rate, we will definitely get to a point where Bitcoin mining would get over 99% of annualized energy consumption globally.
Well, Bitcoin deserves a separate section, but Ethereum is now upgrading to proof of stake. Well, it's been a few years, but that already shows the problem of upgrading a network. And what I said in the beginning is that when you make a system that's ready for the future, those upgrades cycles become a lot easier. And we see that with Ethereum now in the last few years. It's been a hell of a task upgrading Ethereum from proof of work to proof of stake. And that's a problem that Tezos will never have.
So, that's part of, I guess I'm going to build on what Bernd and Kevin said. Upgrading Ethereum has been a nightmare. I feel like Ethereum has been, with all due respect, built for developers and not for humans, and not to cross that chasm into mainstream adoption. And part of the way that I see that is that there was one moment where Ethereum decided to do an upgrade, and they upgraded over the weekend, and they had problems because no one updated their nodes. And then they upgraded over Christmas, and then no one updated their nodes. And then they updated over New Year's right after, and no one updated their nodes. And it's just been one hellhole after another with Ethereum. And it's taking at least, let's say, 3 to 5 years to get to where Tezos has already been for at least 3 as of today, from where I'm speaking. So with that being said, to again build on what Bernd said in the beginning of this chat, with Tezos we have upgrades every 3 months. Even the founder of Polkadot came and said the only blockchain that is actually giving people in a decentralized manner the updates that they expect on a normal process has been Tezos, and we were able to do that with on-chain governance. Now, to build on what Kevin said, a little bit of a teaser / exposure here, because I have to be very careful about what I say with a leg in both sides of both the Tezos worlds, is Tezos is so efficient. When you think about Bitcoin using the entire amount of power of nation states, entire nation states, we are working on a project to do a road trip with a Tezos node validator called a bakery in an electric vehicle from one city to another, calling it a Model X/TZ. So Model XTZ. So you can kind of guess what we're aiming at with the vehicle brand. But the project is slated just to show off how efficient Tezos is, that not only can you run a node / miner, if you want to like equate the two, is that it's so efficient you could run it in an electric vehicle while on a road trip across the country. So when it comes to energy efficiency, yeah, I'd pretty much say we're there.
Pretty epic.
Yeah, I'm looking forward to that. How about with respect to transaction speed compared to Ethereum? Who wants to tackle that?
Who wants to show off Granada? Guys, come on.
So
Kiefer, can you hit this? You've been on Agora about the latest updates quite a ton.
Yeah, sure.
Transaction speeds.
Yeah, Tezos is going to move to 30-second block times, which is pretty cool. So the actual consensus mechanism is going to get updated as part of governance. And so we're moving from one style of Nakamoto consensus, which is the longest blockchain, is the canonical chain, to a slightly modified version, which uses more endorsements and is still Nakamoto style consensus. But the cool thing is that this is a stepping stone to Tezos migrating to a BFT algorithm that offers us really interesting things, like even faster block times and really faster instant finality. And that kind of upgradability is super cool. And it's also it's a thing that is only available in proof of stake, right? Like BFT systems aren't feasible to implement in a proof of work mining network. So I personally don't give much credence to the Bitcoin wastes energy narrative. I think Bitcoin will probably always exist, and I think that's okay. But I do think that proof of stake offers a bunch of interesting benefits with regards to finality and block time, and in particular, like predictable block times and throughput that make it more advantageous than proof of work systems.
So with all these advantages, can the Tezos blockchain become the predominant blockchain for DeFi and overtake Ethereum? And if it can, what's the time frame that you guys could see that happening in?
I'd say it's not a matter of if, but when. I'd say, I believe, I'll put this out, I believe we're in the tens of millions of dollars in TVL right now, looking at say 50 billion-ish, somewhere between 50 and 90 billion for Ethereum. I'd say we get to the billions this year. I'd say we'd be in tens of billions next year. But already we've started to see the margin of difference between Tezos and Ethereum start to get smaller and smaller. It's 1 for every 4 transactions on Ethereum. We have a Tezos transaction now, and that's getting even closer and closer. We've already seen in just whole industries on the NFT front. There was a point, I think it still is the point, in which the amount of daily active users of one marketplace on Tezos is more than every major NFT marketplace on Ethereum combined. I mean, it was seen as like this is this mighty a fortress called Ethereum. I mean, they already won. They have the runaway effects and whatnot. No, it's really small. Ethereum has 600,000 daily active users. That's not very much. We think it's so big, but it's not very much. And even with the high gas fees, that's when they were going up in the amount of transactions. But you can Google it, see it live for yourself. So I think the tide is already turning. It's just there's always this lag behind when I think the mainstream conversations start to fill out, because people are still gathering the data and saying, oh, okay, yeah, this is real. You can just look at any other fundamental metrics of Tezos network and just see the amount of massive growth that's been happening over the last 6 to 8 months, and you'll see how real this is. And to add on to what Kiefer was saying, the fundamental nature of Tezos, what makes it so great and why it is so great, is that on-chain governance. It's the fact that we don't need to do these hard forks, which lead to contentious hard forks, which lead to really just breakdowns in developer turnover, which kind of negates the advantages of having a developer-friendly language that it was built on, as Alex was mentioning, whereas Tezos took the long, hard road, using a language OCaml built by mathematicians for mathematicians. But yeah, this upgradability has led to faster block times. It's not just the fact that we're going to 30 seconds, but we have a fundamental technology now that will and that shift, which will lead to transaction times of potentially less than a second. And as we've been increasing the amount of transactions per second, I think every metric that people are looking for, we got it, or we soon will.
That's great. And I want to talk a little bit about some of the projects that are on the Tezos blockchain. And Baron, I want to start with you because, Kevin, you talk a little bit about some of the stats there. And just as far as the numbers, I read this morning, Plenty collected over 10 million in total value locked within just week of the launch, which was just a couple of weeks ago, and has now handled over 80,000 transactions and generated 1,430 unique active wallets. I mean, that's pretty tremendous growth in a very, very short period of time.
Please keep going. Yeah. Sounds good.
Is this a sign of things to come for DeFi apps building on Tezos?
I think so. Yeah, it was the perfect storm for us. Actually, we started building like 2 months ago, and we saw this opportunity together with Draper Goren Holm. And we just started building, and we just wanted to launch something as soon as possible because it looked like the Tezos market was ready for it, and we were right. And now Plenty became the #1 DeFi application on Tezos in no time. Today we hit 20 million TVL, $20 million TVL. So my mind is blown. So I'm super excited for the next few weeks, even the next few days, because there are multiple applications popping up. Like, for example, Crunchy Network last week launched. They are close to 10 million TVL already. So more and more applications are popping up. But I think the big the floodgates will really open when we all open source our stuff. Open source all our smart contracts, our UI, our APIs, everything, and then everybody can just fork everyone's code and just start building for themselves. And then so many new projects will come on Tezos, and it's going to be epic.
I think part of the epicness that's about to hit the Tezos blockchain is not necessarily just the openness of it and what's about to come, but the amount of companies and protocols and platforms that have reached out to us at Tezos Israel regarding, hey, we've had problems with ETH. We've been thinking about coming to another chain. What can we do to come over? Has been, and I'm not even talking about Maverick. And we're all of us here are founders or co-founders or working in some form of DeFi platform on Tezos. We see the numbers. I mean, there's no I say this with all the honor to you, as we say in Hebrew, Kol HaKavod, Bernd. The TVL on Plenty has been outrageously successful. Another metric that I don't think is really looked at because you can't quantify it on chain is simply the amount of people that have reached out to different Tezos entities, and I know just interpersonally who's reached out to us at Tezos Israel. Looking out to transfer from EVM style blockchains or ETH itself onto Tezos, and we are overloaded with work in terms of converting, so to say, platforms over to Tezos. So it's not just us who are, let's say, the entrepreneurs and the people putting our lives on the line, in a sense, not lives, but our careers and time and blood, sweat, and tears into building all these things. And God knows, Kevin, you've been doing it for a while, from the very beginning.
And I think
we have people jumping to come to Tezos.
Yeah, I think, and to add to that, I mean, completely, I feel that on the ground every day, and all the developers feel the same way. And to add to what Bernd was saying, I think the scaling will really come once we are DeFi cycle complete. That's a very key takeaway. I think, if nothing else, I think should be from what I'm saying. Like, if one would take away is that we need to be DeFi cycle complete, and that'll happen once we have a decentralized lending system on Tezos. So we're working on ours. There are a number of outfits out there working on them. So we have Tezos Finance, Tezfin. So that'll be out in the next few weeks. And a lot of the advancements that Kiefer was talking about that recently came, that's what's enabled it. And that goes to show just how now we have the product, the people, the money, and all the technology that's coming to a head right now in a clear position.
Kiefer, I saw a smirk there. I saw a smirk. I'm really wondering what that smirk was. Kevin mentioned DeFi cycle complete and lending, and then all of a sudden you smiled in this ever little hidden way.
Spill the beans. Spill the beans.
Tell us now.
I think I know
Guys,
a lot.
we're getting the wrap up sign, but I'd love to continue this conversation because we want to really talk more about where this is going to go, especially with institutional adoption and mainstream adoption. I think that's where it's headed. So this was really great start, and I'd love to continue the talks, at some other forum afterwards, because this was really great and I really appreciate all the insights. Thank you, guys.
Thank you, Dara.
Thanks for having us.
Thank you, Dara. Thank you, Draper Goren Holm, for having us.
What is the future of decentralized finance? Affordable, decentralized, and sustainable. Experience the power of DeFi in ways you've never experienced before. Plenty allows you to use DeFi tools that you've grown to love and adore, but without the crazy fees associated with proof of work. Enjoy sustainable yield farming programs that are cost-effective, liquid, and built on the powerful Tezos blockchain. Visit plentydefi.com now to get started.
Fantastic. Thank you so much, Dara, there for the moderation. We're back with the Global DeFi Summit. And thank you guys to the guys at Tezos as well. It seemed they did want to carry on the conversation. So feel free to carry on in the chat and our viewers can interact as well. Now, our next panel discussion, we're not talking ideas, we're talking action. We're taking a look at DeFi beyond speculation, infrastructure and applications. I'm going to hand it over to the Cointelegraph representative, Andrew Thurman, who'll be moderating and he'll introduce the panelists to take a look.
Thanks, Jessica. As you said, I'm Andrew Thurman of Cointelegraph. We're going to be talking about DeFi beyond speculation, infrastructure, and applications. Joining me on the panel today are Kevin Owocki of Gitcoin, an organization devoted to the creation and maintenance of digital public goods. They recently launched a DAO. We might talk a little bit about that. Nelly Chatwe Diop of Ajara, a platform designed to help people in Francophone Africa and its diaspora invest in assets like crypto and fractionalized stocks. And finally, Austin Roberts of Rivet, who are building some key Ethereum and Ethereum node infrastructure. Unfortunately, Anna Stone of Good Dollar, really interesting project, it's worth Googling, had to drop due to illness. To kick things off with my panelists here, I'm wondering how you guys feel about the title of this panel. DeFi beyond speculation. As of today, I can go open a interest-bearing savings account. I can get a loan against the assets in that account, and I can have that account insured. This is effectively replacing a lot of traditional banking, but I think critics like to say that the only thing being used right now in DeFi is speculation. I push back against that. I'm curious to hear what you guys think of the idea that right now the primary user is just the degenerate ape, and if it is, then how we get more people involved in this wonderful new technology.
So I guess I'll go ahead and chime in a little bit there. And, I think the degenerate ape, is maybe a little bit of a long side. Like you say, that, there is, there are people who are, taking stable coins and putting them into interest-bearing accounts and earning much better interest than you could earn on a traditional bank account. But I do think the reason they're able to get that is that the people they're lending to tend to be people who are speculating on much riskier investments, whether they're using it to get leverage positions or using it to get short positions. I do think to a large extent, much of DeFi today is still, those sorts of uses for trying to profit off of number go up, as opposed to, simply trying to profit off a loan. That's not to say the people who are putting their stable coins into Compound or something along those lines are necessarily doing that. But, I do think most of the people who are borrowing that money going into Compound are betting that way. Now, I think really where you'll really see the rubber meet the road is when people are able to start taking DeFi loans to fund car loans or home loans or small business loans, things like that I guess more traditional finance doesn't see as speculative or as speculative.
To jump on that, I would say that when you are in the region I live in Francophone Africa, already even having access to crypto is kind of decentralizing the finance, because how many people do own a bank account? So being able to just use your smartphone and transfer like P2P cash to anywhere, anyone, without the control of your government and the interaction, the control of your banks is already the first layer of DeFi when you are in this part of the region. And a lot of people are not doing that to enjoy speculation, right? They are real use cases. You have the business people that are trying to buy goods from China or Turkey or Dubai and can't access foreign currencies. You have the regular mom and pop that wants to invest in the future to pay for their kids' education. And given the inflation that the African currencies are enjoying here, they have no result but to get into crypto. And then you have the older people that are just thinking about transmitting wealth to their descendants, or even building. Like I have this 70-year-old customer that say, I'm buying lands on internet and my land, it's Bitcoin. I find it very beautiful. It's really a nice image. And when you move to layer 2 of DeFi, when it comes to taking loan against like asset that you own, and I joined Austin saying that the use cases I see here are twofold. People taking loans to really invest in real stuff, like maybe diversifying a farmer, diversifying a culture, and that is a real use case I've witnessed with my eyes. And also people getting together in investing groups on Telegram and WhatsApp, and actually for the first time in their life, getting to know what is investing. Like, how do we go about it? How do the finance markets work? How does this apply to the reality that we have been excluded for so long? So that's kind of, if it was only for that educational part, that community educational part, it would already be a big win for me.
Kevin, any thoughts on this question of, is speculation, is there any utility there? Can DeFi be doing more than that? What does, what's something other than speculation, according to these definitions that we occasionally hear from critics?
Totally. Well, I think the Internet of Money is going to disrupt everything that has to do with value transfer with society, because now computers can send value across the computer network, just like the Internet of Information changed everything about how society moves information. And so, it just took 30 or 35 years for that to play out with the Internet of Information. And I think that we're in like 10 years into the Internet of Money, since Bitcoin's been out for about 10 years. And so I expect that everything to do with money will be disrupted by blockchain and the Internet of Finance. And speculation is just where a lot of people are starting. Gitcoin, I think, is focused on the Internet of Jobs and specifically getting earning for software engineering. Earning for software engineers, we're a place where you can get coins if you're a software engineer. And so we've moved $22 million worth of crypto assets to people who are working on software engineering tasks. And so I think that we're an example of the Internet of Money that isn't speculation. And I think over the long arc, we're going to see a lot more Internet of Money applications that are not speculative, because that's what the Internet of Value can do.
And if I can add a little bit more to that, one of the things you said is, can DeFi, what could DeFi be doing that is not strictly focused on speculation? And I think back in the early days of Amazon, Jeff Bezos was quoted as saying something along the lines of, you really shouldn't be using the internet to do things that you can do without the internet, because right now, and this mid-90s, the tooling isn't there. You're going to be having to invent a whole bunch of this low-level tooling, a bunch of the infrastructure just to do things that are already really easy to do in a brick and mortar store. So if you're going to be using the internet in 1995, you really ought to be using it for something that you can't do without the internet. I think the same thing applies to blockchain today, that right now we're going to be mostly using blockchain for things that you cannot do without blockchain. That's the compelling use case. And we're going to be building up the low-level infrastructure such that at some point in the future, the tooling will be there. We're just like, today, you could build a brick and mortar store and sell your widgets without the internet, but why would you do that? It is so easy today to use the internet. That's what you're going to do. I think 20 years from now, at the long end, I think it'll probably come sooner than that. But I think when we look back at it, from that far ahead, it's going to be, of course, you're going to use blockchain for anything related to finance, because it's there, the tooling is there, it's so easy to use. Right now, we're moving towards the it's so easy to use, but we're doing that by building for things that can't be done otherwise, and a lot of those things are the speculative things.
That makes a lot of sense. Excited to see what these future use cases will be when the Internet of Money fully democratizes things. One thing I heard Austin and Nelly both touch on, though, was that the difference between speculation and using DeFi as a decentralized replacement for traditional banking services is the user. Somebody taking out a loan to gamble on shitcoins is fundamentally different somehow than a farmer financing a loan to buy cattle. And so I'm wondering, how does DeFi reach this broader audience and a group of people who could really be using these technologies, the same protocols, but could be using them today out of the gate for something more than speculation?
If I may start, so I guess you build something like Ijara, and you build it on the back of what people on the ground already use, like a smartphone. Right now in Africa, you can buy a smartphone as cheap as $25, so everyone has access to it. On top of it, there was this base layer of mobile money services where people are more accustomed to have their money on their phone and exchange together using mobile payments on the back of telecom infrastructures. So this is basically like the banking system in most parts of Africa. Like you have maybe 10% of people having bank accounts in sub-Saharan Africa, whereas 50% of them already have mobile money services. So when you combine those two things, the smartphone and the mobile payments rails, and then you add on top a service like Ijara that helps people access easily with their local fiat currency, Bitcoin or Ethereum or Tezos, and then start exchanging together and piggyback on that to get on DeFi platform, that's when you extend the reach. So what we've been doing is that we've started from one single country, Cameroon, and we extended in the last 10 months in 10 other countries across the region, so as to get access to like the larger Francophone area. And also to add one thing that Austin said, that, oh, why would you do something on blockchain and DeFi that you can do in a brick and mortar? I think this saying depends on where you start. When I was living in France, obviously using blockchain maybe to just like send money to a person in the UK didn't really make sense, because I could use Revolut, I could use N26 and send it with no fees, and it was instant. When you are in Ivory Coast or Senegal or Cameroon or Nigeria, it's a different story. How do you send money to even someone in the neighboring country, to even someone in the neighboring city? So that's when blockchain is kind of really necessary, because you don't have other solution. There is no brick and mortar solution. The alternative is too expensive, it's inaccessible, it's limited to a small elite. So, so even like this aspect of why will you build something that already working, it depends on where you stand geographically.
I also think where we do have a lot of that infrastructure, here in the US, it's going to be fairly transparent to a lot of the users. So, when I bought my home, I had no idea how to go out and source a loan by myself. I talked to my real estate agent. He put me in touch with a mortgage broker. They gave me the loan, took it, bundled it up, broke it off into mortgage-backed securities, which they sold off to a bunch of other people. And ultimately, there's a bunch of different people who own my mortgage. But you got to be a part of the financial industry, the finance sector, to get into owning those fairly stable loans. Now, I think what may happen in the long term is, just like when I bought my house, I went to my real estate agent and they told me, go talk to this company over here. I think my real estate agent, who's in the business of selling houses, could well know, well, okay, we can actually get you the money for your house through this decentralized project. Here's the form you fill out. I'll take care of the rest. And at the end of the day, I'm probably still sending somebody a check and they're taking care of the rest.
Good thoughts there, guys. Curious to see, again, just so many untapped potential use cases. There is a kind of endemic problem in DeFi right now, to the extent that, I've heard critics, especially Patrick Rawson over at Curve Labs, he's arguing that much of DeFi at the moment is tailored to a very specific user. This user is likely white, likely male, likely rich, and their only goal with DeFi is to get richer. So some of these use cases that might be more community-minded, fractionalized investment, fractionalized mortgages, as Austin said, that's not going to be something that's available necessarily to or underbanked communities who could best harness, the power of these technologies. So I'm curious.
But actually, I think it could be. I think, like, if you look at Compound, or you look at Aave, or a number of these other solutions, like, all people are doing, if you're putting your stable coins in there to earn interest, all you're doing is going in and depositing some tokens and earning interest. You're not involved with everything else that goes on there. I think you could get something that is that streamlined for somebody who can throw in $50 out of their paycheck to invest in one of these things, and then they start earning interest through people's auto loans, people's mortgages, stuff like that. I think it could be.
So I think I'm gonna liaise my response to the previous panel that was there with the Tezos crew. What I've seen on the ground, because a lot of these crypto and DeFi actions happen on the informal sector, like in WhatsApp groups, Telegrams, and also all kind of community like-minded people. What I've seen is that going to Compound and Aave, given the high gas fees of Ethereum, was really not available to those underserved communities. When DeFi started to happen on blockchain like Tezos, I've seen like a voracity of usage with the people on the ground. I've seen literally Telegram groups spanning from 0 to 500 people in like 3 days, just because they were so excited. Like, with only $3, they could buy one Tezos, and then they could buy another one for another $3 and go on Plenty DeFi or other kind of platform and start playing with it. And for them, it's not so much about getting rich, because they are putting so few money that they won't get rich, but it's about starting to understand what is happening. It's about regrouping in the community and explaining to themselves what is farming, what are these tokens? Oh, am I able to vote? And think about it. We are living in, most of the time, not in democratic countries. So for some of them, it's the first time that they can vote, and their vote matters. So for them, it's really important. They get so intrigued by all this aspect of governance. So they ask the question, how do I make sure that I'm not cheated? How do I make sure that someone won't kind of, overwrite my votes? And then we tell them, oh, it's a smart contract, there is an oracle, is that... So it's amazing. Like if it's only used, like the only use case was the education, the acceleration in financial education that I see happening in these undeserved communities, it will be a huge win because those people have been prey of so many scammers, so many Ponzi schemes that come and promises like FT returns. So even if there's some kind of, I don't know, like risk in playing with DeFi, at least it's not like straight out scammers and Ponzi for the most of them.
Love that answer. So there is, once you can bring down the barriers to adoption in terms of transaction fees, there does sound like there's genuine interest from a very wide user base. Kevin, I'm wondering if you feel the same, if there are sort of endemic, is the product tailored to the wrong user at the moment? And if so, what can be done to change that?
Totally. Well, yeah. Gitcoin is blockchain agnostic. We're open source maximalists, but we do have a lot of users on the Ethereum blockchain. And it's been interesting to see Layer 2 go live in the Ethereum space over the last year because it's taken us from this environment where the fees are so high that people don't want to send any transactions. And when Gitcoin Grants integrated Layer 2, transactions were so cheap, we had to start worrying about spam transactions. So I feel like I'm seeing a little bit over the future, over the horizon. Every time we have a Gitcoin Grants round, and we have 50% of our transactions so we do 150K transactions per grant round, and half of them are on Layer 2, and transaction spam is a problem. So, it's fun to think about what kind of new, like when transactions are as cheap as they are, what kind of new things will happen in the DeFi space. And I agree that we'll have a totally different user experience then, but it's all very early. I don't know if that's going to happen on Ethereum, if that's going to happen on other blockchains. As long as people are supporting open source software, that's what's most important to me.
Sticking with you for just a little bit, Kevin, I think that incentive alignment is really difficult when it comes to getting a lot of the best founders, the sheer brain power in DeFi right now, and getting them to focus on expanding the user base or trying to get services out to or underbanked communities. Gitcoin very, very involved in funding public goods, but what use is it if the public isn't using it, right? So how do we get that to happen? When a DeFi founder can make a new protocol and make $1 billion, how do we get them to focus on adoption for people who really dearly could use these technologies instead?
Totally. Yeah, that's a great question. So Gitcoin's mission is to help software developers work for the open internet, and we just kind of fell ass backwards into an audience of user bases that understand transactions and browser extensions and nonces and private key backups. And so it's I'm just lucky enough not to have that problem, so I'm probably not the right person to ask that question. But I can tell you what we've been trying to do as we've been going more mainstream. And that's basically, we just launched this product called fundoss.org, which is basically like a reskin of Gitcoin Grants that accepts credit cards instead of crypto. And so we built a complete, we understand that user persona of software developer is probably tired of hearing about blockchain and thinks that most blockchain ICOs are maybe they're just not sure what they think of it. And so we just created a product that doesn't have blockchain in the branding and accepts credit cards. And it just does the same thing as Gitcoin Grants, but on the old rails. And so we're kind of taking the model and porting it back into the mainstream. And maybe eventually it'll be run on blockchain rails that are abstracted away from the user. But so far it's not. I guess the more concise answer to your question is I think we're either going to have blockchain in the back, like the blockchain mullet, where the user experience looks like you don't have to learn anything new about private keys or transactions or nonces, as a certain type of user experience. And then we're going to have blockchain in the front for all sorts of other dApps where the user is technical enough to manage their own nonces and private keys. And I think that's the fragmentation of the space we're going to see UX wise, based off of my experience.
And from my perspective, like I was talking about earlier with the early people on the internet were building things that you could only do with the internet, and they built up tool sets that were so great you could build just about anything on it easier than you could build it in the physical world. But, it doesn't really bother me to see people going out and building DeFi protocols that only serve rich white guys right now, because they're building the tooling that will eventually make those things much more accessible to other people. It would be great if there were a way to meet underserved communities while building this technology. But I think the way it's more likely to play out in practice is we'll get the technology built up while building the people who are already served plenty. And then we'll have that technology to make it easier to go serve the underserved communities.
So I will disagree a little bit, because I don't think that you can build for undeserved communities like without their inputs. I think the goal will be to push more software developers that we do have in lots in Africa, in Southeast Asia, in India, to fully participate in those projects. I think that the debate ongoing now in regular IT tech companies, like what is the amount of women that we have in our tech in our tech team? What is the percentage of the diversity people that we have? We need to have the same debate when it comes to blockchain, and that's also why I've been trying a lot to encourage more and more young people in Africa to get involved in the space, to participate in that, in building the internet of the future, the internet of money, because they have their own realities, they have their own challenges, and when they participate in building those base layer with the white guy living in Europe or in the US, that's when we build for the world. And that's when we build maybe a fairer system, and not assume that our reality when we stand in Europe and in the US will be just dumped on other people, and then they will figure it out because it's open source, it's decentralized. What does decentralized mean? Like, do we even have the same definition when we stand in Cameroon or when we stand in France? We need to figure that out. And every single layer needs to be approached the same way.
So that's fair. No, and to be clear on what I meant is, I don't have a problem with people who are building that way, but I think it's great, and there are some great opportunities here to build to serve underserved communities that people haven't done in the past, and I think it's great when people do. I don't want to sound like I'm trying to discourage that. I just I think anything that builds up the technology is good in the long run.
Got it. Well, it sounds like there's a couple possible paths towards solving those user-based problems, but ultimately, getting more communities involved in the development is the best way to have those communities then use the tech. I want to thank everybody for joining us. Kevin, Nelly, Austin, really loved the input. Just a lot of exciting things to look forward to in DeFi.
The ambition to succeed starts with a vision. We have translated that vision into the capacity to create a world that could be very different from the one that is today. A question that we must ask ourselves: what's next for finance? It's only when you question the ordinary that the extraordinary is revealed. Once you catch a glimpse of it, it becomes your reality. A reality that pulsates with sustainability, affordability, and financial innovation. Visit plentydefi.com to get started.
Welcome back to Global DeFi Summit. We're having some great discussions around the DeFi space, and now we're turning to all the Ethereum fans out there. We have a great panel discussion called What to Expect When You're Expecting, with the highly anticipated Ethereum 2.0. And moderating the conversation is Greg Lang from Rivet. So I'm going to turn to Greg now, who's going to introduce our panelists.
Hi guys, I'm Greg Lang, founder and CXO of Rivet, and I'm here with Alex Glukowski, CEO of Matter Labs, Alex Warren, CEO of IDEX, and David Hoffman, founder of Bankless. How are you guys today?
Absolutely fantastic.
Well,
Thanks for
thanks.
having us.
Awesome.
Thanks,
Well,
Greg.
today we're doing a bit of talking about Ethereum 2.0. Specifically, our topic was what to expect when you're expecting the rise of Ethereum 2.0. So just to get the audience who may not be that familiar with Ethereum 2.0 off to the races, question for the whole panel. What is Ethereum 2.0 and what makes it different from Ethereum 1.0?
Let's say that Ethereum is it's a protocol upgrade. And so there are certain things that are changing about Ethereum, and we can talk about the technical details of that. But I think at a broader, higher level, the point of Ethereum 2.0 is to increase access to the Ethereum protocol on two fronts. Making it easier to access the consensus mechanism of the Ethereum system. Right now, proof of work and mining is a very competitive game with massive economies of scale. And so to participate in proof of work consensus is very, very resource intensive and limits the decentralization and democratization of the participation in the consensus of the system. Proof of stake is meant to return consensus back to small consumer level laptops where you can actually provide security to these public permissionless blockchains from the comfort of your own home, which is it's good for getting the most amount of people participating in security and also for optimizing for decentralization, because now Ethereum lives in the living rooms of everyone who has just a consumer level laptop. And then Ethereum, on the other side of things, it also increases democratization of the access of the ability to write to the blockchain. And this is sharding. Scaling how much trustless block space Ethereum has allows more people to use it for cheaper fees. And so when I answer the question, what is Ethereum 2.0, it's really optimizations trying to increase the access to the consensus level, as well as increasing the democratization of the access to actually writing a transaction to the blockchain.
Cool. So you mentioned proof of stake. Alex W., I understand you have some relatively deep understanding of that. Can you describe what proof of stake is from your point of view?
Yeah, sure. So just one thing I'll add to David's comment. I think ETH 2.0, he did a great job explaining, proof of stake and sharding, which are the two main components. There's also this concept of rollups as another way to help scale the Ethereum network. And I think that's becoming a big part of the overall thesis of 2.0, is that these components together really give the scalability that's necessary. And the other element I would add is that 2.0 is kind of the current term for this package of coming upgrades, but they're going to be released in phases. Everything's not happening at once. It's not like you flip the switch and now 2.0 is live and 1.0 is behind us. So I fully expect that some of these things may change further along the way. But I think it's good to kind of rally around a vision, and as we've seen over the last few years, that those changes, the prescriptive changes, have become more precise. Proof of stake, as David mentioned, is a different consensus mechanism, a different way of coming to consensus on what the correct valid history is of the blockchain network. So if people are familiar with proof of work, that's the mechanism that both Ethereum and Bitcoin use today. Miners around the world are solving math problems, for lack of a better way of putting it, in order to get the right to then publish the recent history. Everyone's able to see the history that they publish, verify and validate that block. And the kind of game theory is that because you spent all this hardware, electricity, all these real world costs in order to get the right to validate, and that right earns you new Bitcoin, you're incentivized to behave honestly. There's a little more to it, but that's kind of the basic gist of the game theory and why it works in proof of work. In proof of stake, it's changing that economic incentive to, instead of having to put up capital and energy, you're putting up staked assets in the form of Ethereum that essentially act as a form of a deposit. Think of it like a security deposit on an apartment that you're renting. So as long as you're a good renter, as long as you honestly validate the state and validate transactions, you'll continue to earn fees. Everyone will be happy. If you act maliciously, and there's it's a complex process, but it boils down to, if you act maliciously and try to cheat the system or insert invalid transactions, then you can forfeit your stake. So it's switching the mechanism by which users are incentivized to behave honestly. The big difference from as David was mentioning is that you no longer need really intensive hardware to solve the proof of work mining algorithm, because you're no longer doing that hash computation in order to get the right to put forward a valid block. It's based on your stake. So while you still have the economic incentives, you're able to democratize the access to who's able to participate in that system.
Brilliant. So you mentioned rollups and sharding. I'm going to pass that one off to Alex G to talk about. You know a bit about both of those things, if I'm correct. So go ahead.
Absolutely. So rollups is the idea that we can improve the throughput capacity of the layer one by structuring transactions in a certain way so that the validators do not have to do all the work to verify every single transaction, but they can instead rely on other mechanisms. So the idea in blockchains is that we have trustless peer-to-peer networks where we don't have a central authority. You don't have any single point of failure because the network is consisting of equal peers. But that means that everyone has to check what everyone else is doing. And if we just would do it naively, then we would have quadratic complexity of the communication and computation and storage. And that just doesn't scale to the extent of the real world. So the sharding is an approach where we separate the work that the validators or like full nodes need to do by just grouping them in separate subsets, and each subset verifies only a fraction of the total transactions. That is important from the data availability standpoint. Rollups are a slightly different idea where you solve data availability through some other means. You still publicize the data through the network. You propagate it to all the nodes, but they don't have to do the work to verify every single transaction. They rely on one of the two mechanisms. We have two different types of, two different flavors of rollups. The one is called optimistic rollup. The other one is ZK rollup. In the optimistic rollup, you rely on incentive mechanisms and some game theoretical mechanisms for a lot of people to verify those transactions. And you can be sure that with sufficient incentives, some of them will actually catch the malicious behavior and do certain actions on the layer one to counter that, to revert the blocks which were fraudulent. With ZK rollups, it's a bit more advanced. We rely on sophisticated cryptography, on zero-knowledge proofs, which have been in research for the last 30 years and now coming to fruition with very, very mature algorithms, which actually prevent any fraud from happening in the first place. So every Ethereum full node verifies the entirety of transactions in the rollup with a very small, simple mathematical algorithm, which has a constant cost verifying a number of transactions.
Okay, so if I'm hearing you right, it sort of breaks the work that any individual validator has to do up and sort of makes it heterogeneous in with respect to sharding, so that it doesn't all have to be done by everybody in parallel. And then as far as rollups are concerned, it's a way to aggregate things into aggregate a lot of interactions that would normally be transactions into a single transaction that can still be proved. Correct. Okay, cool.
Even though this single transaction can have certain properties that are cost-wise proportional to the number of transactions in your block.
Cool. David, do you have anything to follow up or add to that on?
Yeah, I would actually like to point out that the progress that layer 2s and ZK rollups, like Alex was just talking about, that's actually separate from Ethereum 2.0. That's just scaling solutions that technically can be implemented on any Turing complete blockchain. But with Ethereum 2.0, there is a meaningful relationship between the new system, the new Ethereum, and rollups. And that's because with the long-term vision that people are trending towards, that people are kind of seeing this play out, is that the main base layer protocol, what we are now calling Ethereum 2.0, which in the future we will just call Ethereum, the Ethereum L1, it's envisioned that the L1 is just a traffic controller of value between all these different L2s. And so we all kind of are spoiled right now in the sense that we are so early to Ethereum that we are actually making transactions on the main chain. I think in 5-10 years, that's going to be a ludicrous statement, just because there's so much density of transactions coming from rollups, that all the Ethereum, what we're now calling Ethereum 2.0, all that we'll be doing will be ferrying value across rollups. And so the theory is that everyone's about to migrate towards these L2s and like kind of move out into the suburbs and live on these L2s. And then they will use the Ethereum protocol to settle between L2s. And so while the ZK rollups and optimistic rollups, while they are technically part of the Ethereum protocol specifically, they do have a very fundamental part of the overall story of Ethereum.
Okay, cool. That makes a lot of sense. So with all these things, I'm going to take us to a more general question. So with all of these things coming in, we've got some existing attitudes, ideas, modes of interacting with things, building habits, best practices that have developed. How do those change? What does migrating from an ETH1 to an ETH2 world look like for developers, users, and people who are investing in these projects that are building on them? Who wants to take that one?
Yeah, I can start. I mean, I think the main hope is that it makes things, by increasing throughput by multiple orders of magnitude, it makes current applications that are not possible. Right. So things that have been priced out recently just because transactions are too expensive for certain types of applications can now become possible. And I think the success on Ethereum so far has been overwhelmingly DeFi and probably partially NFTs, both of which deal with high value transactions. Right. You can make $1 million stablecoin trade today with very little slippage, and that's a fantastic user experience. But if you're a small person with $40 looking to get involved, you're going to quickly burn through any sort of balance that you have just by paying to actually use the underlying network. So, I think that's probably the main thing that I'm most excited about is, people call it the dial up to broadband moment, and a little trite, but I do think that is a reasonable comparison, and that we can expect to see new types of applications that just haven't been feasible yet.
Cool. That's a great metaphor. Alex G, do you have anything to add to that, or do you want to move on to a different question I can throw at you? Your call.
So we have multiple dimensions when we're talking about migration. So one is the user experience, like what will change for the end users, how they will perceive or like act differently on the blockchain. The other one is from the perspective of developers. Like what's going to change? Do we have to change the code of our contracts? Will the old applications work? All the work that have been invested in the, we have a massive infrastructure on Ethereum 1.0 battle tested for a long time. It's actually very important, very interesting to note that all smart contracts are incredibly vulnerable systems because they are so exposed to attacks. The attack surfaces is very open. You don't have firewalls. So if like the code is open, you can't rely on security by obscurity. So if there is something wrong, sooner or later it will be spotted. So the most important indicator of security is lindiness. How long has a given system been running without failure? And this is a very interesting question. Like how this, like, are we going to have some minor changes in the operation of the system so that we cannot migrate it easily? All the audited protocols and protocols that have been running on ETH1. So I think it's still going to be an open question. Maybe David, Alex, you want to touch on that?
This is actually a subject I'm not too particular with because I'm not a technical level like you guys are.
Cool. I'd say one thing I would just add is I think the importance not only from a security perspective but also from the network effect. People talk about the network effect of Ethereum, and I think that viewpoint is evolving to realize that the network effect is really around the EVM and the Ethereum virtual machine, as it's called. The point being that all of this code that's been written for smart contracts, all of the supporting wallets, things like Etherscan, they all know how to communicate in this same language. And I think when you look at some of the other L1s that have gained traction recently, or even some of the early Ethereum L2s, they've had EVM compatibility as a key component because it's made it so easy for both teams and users to migrate over. You have the same application that you can just deploy with minimal additional effort. Users are already trained on those patterns of behavior. They understand things like gas, kind of the way that you price transactions on the network. So rebuilding that or changing that too much is just a risk that I imagine we'll want to minimize with this migration.
Absolutely, absolutely. So another point that's probably worth touching on is, as far as proof of stake is concerned, you've got now folks who are not dependent upon compute to build capacity on the network. Instead, it's it's your capital. It's how much ETH you can afford, as opposed to how much compute you can afford. You could see a situation where validators become sort of this cartelized thing, right? And the little guy again gets edged out, but just in a new way. What are your guys' thoughts on that? Is that a problem? Is this something that we ought to be concerned with, or is this something that as long as it doesn't get out of hand in some way we can't foresee, is not going to cause issues with the permissionlessness or liveness or the decentralization as it is of the ecosystem? What do you guys think about that?
Yeah, totally. And people often talk about this crypto industry as if it's a solution to like wealth inequality and wealth distribution. It's not. Wealth distribution is what it is. What Ethereum 2.0 really helps doing is it helps make that wealth distribution not get too far out of hand, because somebody who stakes $1,000 worth of ether in a staking pool should generally get a pretty comparable rate of return over the long term, so long as they're not messing around paying too much in gas, and they kind of just hold out for the long term, as somebody who comes in and stakes 100 million in ether. Everyone receives the same rate of return because we've been able to democratize access to staking, because you can stake in your own home. And so crypto is not a solution to wealth inequality, but the way that Ethereum is being constructed is it does help it not make it any worse. And as far as wealth inequality goes, not making things worse is actually one of the best solutions that we've been able to come up with as a human collective, because wealth distribution has been a problem since hunter-gatherers.
Cool. Alex G, do you have any thoughts on the cartelization point, or if that's an issue, or if it's not an issue, or if it's more of a problem, for instance, that we've spec'd the thing to require that casual users can stay into it? So that might create some issues on the other side of the risk equation. Do you have any thoughts on that?
So my impression is that Ethereum, or the ownership of ETH, is decentralized to a very high degree. Compared to other layer ones, we have a very good distribution of this ETH supply for now. So initially that certainly should not be an issue. Over a long time, it might lead to a situation where wealth slowly accumulates in the hands of a few people, and this can actually become a security concern. So this is like, if the security of the network did not depend on the validators at all, if we only use cryptography, for example, like in ZK rollups, we never rely on validators for the validity of transactions. Everything is verified by zero knowledge proofs, but we still rely on the validators for, in the case of rollups, we rely on layer one, the validators of layer one for the canonicality. So like we preventing double spends and, or just censorship resistance. So for this kind of things, it is actually important that the network is sufficiently decentralized, and I think I believe Ethereum is going to remain active for a very long time. It's a technology for decades to come. So I would love to see some ideas that will solve this problem in the future, but I think we can safely postpone them until Ethereum 3.0.
Cool.
I think another potential risk that I haven't given it too much thought, but I imagine others are thinking of, is just the fact that centralized exchanges and big custodians are definitely going to be validators. It's an extra form of income for either themselves. They can take a percentage of that and then pass the rest on to their the users that are custodying with them or trading on the platform. And so just thinking through, does that represent a centralization risk? Because typically when they look at proof of work networks and centralization, you're looking at mining pools, which are made up of individual miners who, if the pool actor started to misbehave, they can point their hash power at a different pool for that kind of aggregation. It's a little different if you've been custodying your assets to trade on a particular platform and they're using those to validate, and then they get some, in the most extreme case, pressure from an external, government actor, someone that's pressuring them to censor transactions or change their behavior. It's not quite as easy to have users who aren't familiar with self-custody to get them to then withdraw, learn how to do the whole process themselves, whereas miners are kind of prepared for that potential to point it at a different pool. So I have no clue what the ratios look like I think that'd probably be an interesting just like starting point, like how much does Coinbase and Binance control of the hold in terms of the supply, and is that a realistic risk? But certainly a point of centralization in the network, I would say, to be aware of.
On this same train of thought, Dan Elitzer put out this article called "The Death of Ethereum," and it was DETH, and that talked about what he was concerned about, which was if there are centralized stakers or even decentralized stakers, staking pools where you can come and deposit your Ether into a specific staking pool or a centralized staking entity like Coinbase, they could in theory issue you a note, a redeemable note on that deposit. And then that note could be something that you might use as collateral in DeFi. And when multiple people start trying to do this, to try and claim some of the share of the market, what can happen is that really the most liquid secondary note of staked Ether, the most liquid one is going to win. And so there's some liquidity, and there's some liquidity centralization, because liquidity begets liquidity, right? So people are going to generally stake with the entity that allows them to receive the most liquid, the most accepted, the most integrated into DeFi note, and so they can use that in DeFi. And then that kind of forces convergence upon one single entity that has a lot of the stake, because everyone wants the liquid secondary note. Now, if Coinbase is the issuer of that secondary note, that's a concern. There's also DeFi apps that could be the issuer of this staked Ether note, and that, in my mind, starts to actually improve things. There's Lido Finance, which is secured by a multi-sig, which is a step in the right direction. My eyes are on Rocket Pool, because this is an actual protocol trying to become a staking as a service in a decentralized fashion. And so if the RETH version, which is the Rocket Pool staked ETH, if that becomes the canonical version of a secondary market for staked Ether, maybe that solves this problem, because now it's a DeFi app. And we like to say in DeFi, protocols are built that can't be evil. So maybe that's a solution to that problem.
Cool. That's a great rabbit hole to go down here. But unfortunately, we're getting close to the edge of time. So I just wanted to ask you guys one last question. We know the spec is not final, right? Like, things do get changed. And until that's got finality, we've either got to push for things to stabilize so that people know what to expect and it doesn't change, or we got to get the changes we need in now. So which side of the line are each of you on? Do you want the spec to finalize, or do you think there's one thing that still needs to go into it? And if so, what is that? And try to keep it short, because we've only got a few minutes left.
I do think that there's some urgency to get Ethereum 2.0 out the door. We can kind of see the end of the tunnel. Like it's on the horizon. It's right there. And so like let's get this done. And to some degree, there is a narrative about green energy and mining consumption that I think Ethereum would really enjoy not having to deal with that fight. And so there is some amount of urgency. But at the end of the day, if Danny Ryan comes to me, Danny Ryan, the coordinator of Ethereum 2.0, and says, hey, we need to unfreeze the spec, like, he's the expert. And so I'll listen to him.
Cool. Alex G., what are your thoughts?
I'd rather take a perspective of thinking it through thoroughly and putting all the necessary changes before we launch, because the moment we launch and everyone migrates, it will be extremely difficult to change anything, or like at least orders of magnitude more difficult. And we see it with Ethereum 1. It's very hard to push through precompiles or any changes in the protocol, and they take forever. And ETH2 is an effort itself to just completely reconsider the old system, to take all the lessons learned from the operation of Ethereum 1 and bring it into the new system. So I would rather take just a little more time to make things right.
Cool. Alex W., last word.
Yeah, one last comment. So I actually think that in some ways the delays to date have maybe been beneficial, because it's forced the market to look to optimistic and ZK rollups as alternatives. and has created a I don't know, 10 viable kind of different teams that are really pushing these technologies forward. And I think what you're going to end up with is a much better end product because of the combination of the core work from the foundation and these kind of decentralized groups that are working on these things that can build on top of it. So maybe just a silver lining in some of the delays, that it's actually led to some great innovation in other areas that I think will lead to a better product in the end. Cool.
Well, that's awesome. Well, I think that's all the time we have today, guys. Thank you, Alex Warren. Thank you, Alex Glukowski. Is that how you would pronounce it?
That's correct.
David Hoffman, for joining me today and talking to everybody. I learned a lot. I hope our audience learned a lot, and we'll see you all around the summit. Cheers.
Thank you, Greg.
What is the future of decentralized finance? Affordable, decentralized, and sustainable. Experience the power of DeFi in ways you've never experienced before. Plenty allows you to use DeFi tools that you've grown to love and adore, but without the crazy fees associated with proof of work. Enjoy sustainable yield farming programs that are cost-effective, liquid, and built on the powerful Tezos blockchain. Visit plentydefi.com now to get started.
Welcome back to the Global DeFi Summit. It's now time for the fireside chat that a lot of you have been waiting for. I can see a lot of comments in our live chat stream, a lot of anticipation for our next conversation. So I'm actually going to hand it over to Ash Benenden now from Real Vision, who's going to introduce our next guest for a very interesting 30 minutes. Ash, thank you. Take it away.
Thanks, Jessica. Pleasure to be here. I am here today joined by Sergey Nazarov, co-founder of Chainlink. Sergey, there are a lot of smart people in this space, but I think you are in many ways the rarest of all participants, which is a man with a vision. And I'm extremely excited to get to talk to you today about what that vision is. Sergey, welcome.
Yeah, thanks for speaking with me again. That's very, very kind of you. Thank you.
Sergey, we were talking a little bit off camera. I know we're going to dive into the weeds very quickly, but I think it's important to give people an overall 50,000 foot lay of the land. What's the state of play here in June 2021, the state of play for DeFi and the future of DeFi?
I think it's pretty much clear to the people in our industry that DeFi is a force that's going to continue. That it is kind of like the new token boom that previously happened. That is the new kind of exciting, useful application of blockchains and smart contracts generally. I think beyond that, there's an understanding by the larger crypto community that DeFi is a great place to get the benefits of a blockchain beyond just a token and holding a token. And I've seen a lot more interest from institutions and fintechs and banks about DeFi as an alternative or as a supplement to the existing infrastructure that they already provide their user base access to. So I think what's happened over probably the last, I guess would say 6 to 9 months, is that DeFi went from something that wasn't completely clear, wasn't completely understood, to having the global DeFi summit and a whole bunch of conversations just on this topic. And all the different blockchains and layer 2s are feverishly competing to win on the dimension of having the most DeFi applications that are composable. I think where things go from here is that the quality of DeFi applications and the quality of the teams building those applications continues to grow rapidly. Yeah. Because the demand for putting value into DeFi is just also continuing to grow. And that means there's a lot of capital for teams to build applications. There's capital to grow existing DeFi teams. And I think what you end up really seeing is a large composable web of multiple different DeFi protocols that act as interoperable services to each other, and those interoperable services form kind of a large global financial products system. So while a bank might build individual services inside of itself for use by other parts of the bank or consumers that go to the bank, what DeFi is like one big global bank, basically, where anybody can come and build a service, and then that service is usable by the other services. And when I say a service, I mean an on-chain smart contract that defines a DeFi offering, whether that's a derivative capability or whether that's yield generating capability or whatever it is. And so I think what will continue to happen is, just like the internet started to accrue more and more services that people could build on top of, and those combinations of services made more and more advanced applications possible. I think the exact same thing is now really getting going with DeFi, is that there's a number of protocols that are interoperating and getting the majority of their value from each other by using each other's unique features. And therefore, the other protocol doesn't need to build it, just like, you know, a bank that already has a service running, another department doesn't need to build that same service, right? And this is really the future. And then I think that's just going to be the global nature of financial products that'll eventually be adopted by banks and institutions and so on. But I think that groundwork of those services is being made right about now.
Yeah. So you talk about the groundwork of those services. You talk about the broader DeFi ecosystem. Let's start out on the very ground floor. What is Chainlink? What are hybrid smart contracts? Why do blockchains and smart contracts need oracles? And where ultimately does Chainlink fit into this broader ecosystem you describe?
Sure. So DeFi, in my understanding of it, is actually a hybrid smart contract. So a hybrid smart contract is a combination of on-chain code and off-chain systems. Tokenization contracts are not a hybrid smart contract. They're involved in tokenizing something, putting a ledger on chain, and moving around the ownership of that ledger. Decentralized financial products, in contrast, need external data. So they require knowledge of a price. They require knowledge of market activity. If they're a derivative, they need to know about what happened for the derivative event that they're related to. And so decentralized finance is really the first large-scale, widely adopted hybrid smart contract that effectively combines trust-minimized on-chain code, which is made trust-minimized by blockchains and their ability to come to consensus about the state changes of that on-chain code, and in equal part, the ability to access external systems in a trust-minimized way. And that trust-minimized access to external systems is what oracles and oracle networks do. And, you know, the best version of an oracle mechanism is really a decentralized oracle network, which is what Chainlink is. And so Chainlink is a large collection of many, at this point, hundreds of decentralized oracle networks, each performing their own distinct value and service and kind of input of data or generation of randomness or even some amount of computation for the creation of a new, more advanced hybrid smart contract. So for example, if you look at lending, you need data about price. If you want to make a derivatives DeFi product, you need data about what's going on with the derivative. If you want to make a weather insurance product, you need weather data. And you need that data to meet the same high standards as the contract itself. And that requires validation, consensus, decentralized computation in the form of an oracle network. And Chainlink is the largest and most widely used decentralized oracle network and set of decentralized oracle networks, enabling the majority of DeFi to actually operate and function correctly.
Yeah. When I explain oracles to my mother, I say that oracles are the things that fundamentally connect the blockchain to the real world.
Yeah, so oracles are actually a few things. So in their simplest form, they're responsible for delivering data and transitioning information into another environment. In more advanced forms, they're actually responsible for validating the truth. So what our Chainlink networks actually do is they create a definitive truth about what an accurate price is by pulling data from multiple sources and coming to consensus, a consensus across a large group of independent node operators. So while the initial value is the provision of data at all, the more advanced value is really the validation of data and the making of that data in terms of its validation and trust, and basically its trustworthiness, creating what we call definitive truth. And now what we're really expanding into is the ability to not only create definitive truth that can control billions and eventually trillions of dollars in value, but also the ability to do computation in that environment in a way that you now have access to trust minimized computation that wasn't available on a blockchain. Once again, giving rise to more and more advanced hybrid smart contracts, right? So our fundamental goal is to make the blockchain industry about these more advanced hybrid smart contracts like DeFi, insurance, gaming, global trade, ad networks, fraud-proof ad networks, that all require this hybrid approach of a trust minimized on-chain component and trust minimized off-chain that's been validated to be true and reliable enough to control the value in the deterministic, immutable on-chain system.
Yeah. I'm looking at the chat streaming by, and there's obviously some very sophisticated viewers who are watching this conversation at the annual Global DeFi Summit. So let's get into the weeds a bit here. Recently, within the last several months, Chainlink produced the Chainlink 2.0 white paper. Two big questions, Sergey. Number one, what is the vision for version 2.0? And number two, where are you along the path to execution of that vision?
Sure, of course. So the vision for 2.0 is really the creation of an abstraction layer that can do all the trust minimized off-chain computation that people do not want to do in a blockchain for whatever reason. Those reasons might be privacy related, they might be cost related, they might be scalability related, they might be capability related, as in the on-chain code simply can't do those things, such as get data. So the consistent trend that we're seeing is that there's more and more applications for Oracle networks due to their flexibility. And what the Chainlink 2.0 white paper is about is that it's actually about two things. So firstly, it's about defining this hybrid smart contract architecture and showing people how that is actually a combination of multiple on-chain contracts interoperating with each other and multiple off-chain services in the form of distinct DONs, decentralized Oracle networks, that also interoperate and basically give the needed resources to the on-chain contracts. So if the initial world of smart contracts was a single on-chain contract about tokenization, and then there was the appearance of a voting contract as a second on-chain contract that interoperated with the token contract, and then DeFi was actually the addition of an Oracle network to provide price data and market data to an on-chain contract about a financial product, then the future is really multiple on-chain contracts or on-chain pieces of code interoperating with multiple decentralized Oracle networks, just like multiple pieces of web server code interoperate with multiple kind of services, right? So the analogy here is really taken from how the web world works, in that you need a decentralized version of composing multiple different important services into more and more advanced applications. And so a hybrid smart contract is really the name for a more advanced smart contract, in that it interoperates with valuable external services. For example, in the web world, if you wanted to build Uber, but you didn't have GPS location from Google of a user, you didn't have the ability to message a user with Twilio, and you didn't have the ability to pay drivers with Stripe, you'd have a big problem building Uber. You probably wouldn't build Uber. And so Uber was this more advanced web application that leveraged all of these other services to create what it created. And that's what hybrid smart contracts are. So the first thing that the paper is about is this hybrid smart contract architecture, which we are already enabling very heavily by providing greater and greater amounts of data, and now various forms of off-chain computation, like random number generation, keepers, which are DevOps tools, and various other computations that blockchains inherently don't do and won't do for privacy, capability, or cost or scalability reasons. And so as we provide more of these services, more of these on-chain services that blockchains don't inherently do, we actually enable blockchains to do much more. We enable things like DeFi and decentralized insurance and fraud-proof gaming and fraud-proof ad networks and all the various use cases that smart contracts actually are useful for. So our fundamental goal here is to create an abstraction layer where all of the resources, the data resources, the random number generation resources, the keepers related DevOps tools resources are provided in a trust minimized way, such that somebody could very efficiently compose a hybrid smart contract. We've already taken the development cycle for DeFi down from months to days. And what we want to do is we want to take it down from days to hours, the same way that's the development cycle in the web world. And that's really what I think will accelerate everything, just like the initial appearance of oracles heavily accelerated DeFi. Go ahead.
So is the principal change between version 1.0 and version 2.0 that there's this sort of parameterization or API-ification of the services that are going to be provided and the ability to basically provide additional services through different layers on these sort of cloud-based platforms?
Right. So I think 2.0 is an advanced version of 1.0, where 1.0 was leveraged to make some of the first Oracle networks that power the majority of DeFi. And so that's proven that Oracle networks can serve this purpose of doing a computation that a blockchain can't do, but needs in order to make a more advanced smart contract. What Chainlink 2.0 is really about is expanding the breadth and depth of that capability. So it's expanding beyond just the delivery of data into random number generation, certain amounts of computation via keepers, more advanced off-chain computation that people don't want to do on a blockchain for whatever collection of reasons, which they might eventually choose to do there, but for a certain period of time won't want to do there for those privacy, scalability, or simply because they can't do it. I think what Chainlink 2.0 is really about is it's creating a universe of services and capabilities to make hybrid smart contracts in a very efficient, secure, easy to build way, so that our industry can become about much, much more, right? Our industry can become about reinventing the insurance industry, reinventing the ad network industry, reinventing the gaming industry, which it absolutely can be about, because all of those industries have fundamental trust issues that are equally well solved as the trust issues blockchains have already solved, right? So Chainlink 2.0 is really about this abstraction layer where developers can go and build hybrid smart contracts using their blockchain of choice, or actually multiple blockchains in congress with each other, while still getting connectivity and trust minimized computation that they're not getting from a blockchain. And that's a key complement for them to be able to build these more advanced use cases, with DeFi just being the really first example of that dynamic.
Yeah.
Go ahead.
No, I was just going to say, as you talk about this broad shift toward DeFi, toward distributed systems, toward blockchains that have the ability to interface with the outside world, I'm curious what your overall overarching picture is on how DeFi is changing existing business models and how it could disrupt or complement, for example, fintechs, banks, and other institutions of a similar stripe.
Yeah, sure. So I think that fundamentally capitalism and really the web world and really the developer world are very, very focused on discovering customer needs, right? So there's all these notions on customer development and how you have to serve the needs of users and customers and so on. And really that just leads all of these banks and fintechs and eventually institutions to just give users what they want. I don't really understand what the question I don't really see a big question mark in all of this. The simple progression that I see as just quite clear in my mind is that just like users require banks, fintechs, and PayPal and others to have custody, because PayPal and others did market research and realized that their user base wants to hold cryptocurrency, and there was just kind of a preponderance of evidence that said, hey, we should do this This is what users want. This is how capitalism works. If you don't service the user, someone else will service them. We should service them first. And so everybody is now in the bank, in the fintech world, and even in the institutional world, looking how to achieve different custody capabilities, right? How do I custody a Bitcoin? How do I custody some token somewhere? Even though 2 years ago they were saying like, oh, this is going to go away and so on. It doesn't matter like what people's theories are, really. What matters is what demand is and what demand says, because we're all kind of subject to that realistically within capitalism, right? So quite simply, if you reason about that, about it that way, it's just crystal clear, right? Like everybody's going to do custody. Everybody's going to custody people's tokens for them, or custody some kind of asset or value in the custody solution they're all feverishly getting now. But that's just like the start of the race. That's not the race. That's not the whole thing, right? That's just once you give somebody custody of something, they actually want to do things with it, right? They want to earn yield. They want to deposit that somewhere. They want to get exposure to some kind of upside from a derivative. They want to use what you're custodying for them to gain a return, right? Like that's what the financial system is largely about for many people in most institutions. It's about getting a return and hedging risk. So you're not going to just as a fintech or a bank or whoever going to custody something and that's it. You check the box and you're done. You're immediately going to have people, almost immediately, you'll probably already have people coming to you and saying, well, if I custody with you, what do I get? Do I get a toaster? Do I get a yield? How much yield? Do you give more yield than the other guy I could custody to? Because, my finger's on the button here and really, your logos are right next to each other. And I could really click either one and, you have a toaster and he has yield. And can you give me a toaster and yield? And at the end of the day, there won't be a choice, right? Just like there wasn't a choice with the internet. Like there was just a point where if you didn't have email, you couldn't do business.
Right.
And at a certain point, people just came to you and said, like, this is how I want to transact with you. And if you weren't able to transact that way, then you didn't transact. And that's like the reason for being for many of these fintechs and banks, right? That they're there to transact. So
Sergey, as we get to talking more about the inevitability of these distributed solutions, I know we could talk about this for another hour, but we're coming up on a hard stop here in less than 5 minutes. I'm curious if you could tell us about how you think smart contracts and Chainlink specifically help society in general, and then also a topic that's been very much debated over the last, say, 90 days about the environmental impact of this world that is becoming, as you say, inevitable.
Yeah, absolutely. So hybrid smart contracts for me have a lot of very positive properties for society, and it's actually probably the main reason I'm working on this for so long and in such a focused way. I personally believe that there are essentially three unique properties that they have, and then there's a fourth property around incentives. So the first property is that they're highly transparent, which eliminates information asymmetries that lead to things like global booms and busts, like the 2008 crisis. They give people control, which people desperately want now, because the people that they've given control to as intermediaries, whether that's in social media or whether that's in the financial world, those intermediaries haven't lived up to expectations, right? So people want control and are going to want control even more as those intermediaries don't live up to expectations, whether it's Facebook or Robinhood or whoever. And then the third and final one is the global nature of these systems and the permissionless access and global nature of these systems. So in terms of transparency, there are two extremely important properties that benefits really that society will get. The first one is that the booms and busts in the global financial system are fundamentally based on information asymmetry that very few people can exploit, to the detriment of society that often ends up bearing the costs of those extreme booms and extreme busts. Now, while markets are efficient at adapting to information, the systems that give information to markets right now are not efficient at providing information. And therefore, even if markets are efficient at adapting, if they don't have information, like in the 2008 financial crisis, then only a very small subset of people that can really dig and are really kind of digging for information experts can uncover what the information asymmetry is and asymmetrically benefit from it, make a lot of money, while the boom just gets really big and then the bust, right? And that is not the right societal pattern that I think we should be in. I think there should be very transparent systems that actually force transparency. The second thing around transparency is that it'll allow people to know the risks that they're taking with their assets, and the ability to know the risks that you're taking in DeFi are so far superior. Sorry, Ash, go ahead. I can't hear you. You're muted.
As I've just seen in the thread, many of our viewers have said it's really a shame that we only have 30 minutes to do this conversation. It looks like we have about a minute left. Sergey, what would you like to leave us with in terms of the big picture for people who've listened to this conversation and for people who want to hear more? What are the important takeaways that you'd like to leave us with?
I think if you're thinking about joining this industry and you're wondering whether it's real or not because of all the news and the hype, you should consider the fundamental impact that this will have on how the world works. And the fundamental impact will be going from a world of probabilistic promises that people can renege on and that are kind of selectively given to certain groups, but selectively made inaccessible to other groups, to a globally accessible system of promises and guarantees that is guaranteed to work through physics. So the world of, I promised you something as the global financial system, or I promised you something as an insurance company, or I promised you something as some kind of institution, but I'm not going to deliver on that promise, is a world going into the past. And that's a very big change in how the world works.
Yeah.
So if you're interested in this industry, and you're a smart person, you're thinking about, is this a real industry? Do you want to work in this industry? Do you want to help build this industry? I think you should look at it from that point of view, right, and not necessarily all the different noise. And
Sergey,
also, yeah, go ahead.
Perfectly said and very well summarized. Unfortunately, I think we're going to have to leave it there. I believe we're about to get the hook here at the 6:30 mark Eastern time.
Sure.
Thank you so much for joining us.
Thank you. Great to speak with you again. Thank you.
What is the future of decentralized finance? Affordable, decentralized, and sustainable. Experience the power of DeFi in ways you've never experienced before. Plenty allows you to use DeFi tools that you've grown to love and adore, but without the crazy fees associated with proof of work. Enjoy sustainable yield farming programs that are cost-effective, liquid, and built on the powerful Tezos blockchain. Visit plentydefi.com now to get started.
Welcome back to Global DeFi Summit. Well, what a fantastic fireside chat. A huge thank you to Sergey for joining the discussion and Ash for some great moderation and topics there as well. Now, don't go anywhere because we have a panel discussion up next. We're taking a look ahead into the future to 2022, and we're discussing the future for DeFi when it comes to mass adoption and also use cases. So I'm going to pass it over to our moderator, Veronica from Accounting Today, to introduce our panelists for the next conversation.
Hi, everyone. Welcome to the next session, the next panel discussion, which is we're going to be discussing the future of DeFi for 2022 and beyond. We're going to be talking about mass education, adoption, and use cases. I'll be the moderator. I'm Veronica Arrowsmith. I am the technology editor for Accounting Today, which is a publication based in New York City. And I'll be the first to admit I am no DeFi expert, so I'm very happy to have a panel of experts that I will be asking questions of so they can educate you all. I will quickly run through the introductions and they'll give fuller introductions of themselves. So first up, we have Ralph Geerthuis joining us. He's co-founder and CEO of ScaleSwap. Welcome, Ralph. Why don't you tell us a little bit about yourself?
Thank you very much for having me. My name is Ralph, as you said. I'm co-founder and CEO of ScaleSwap. We will launch in around 12 hours, so pretty hot phase for us. And yeah, I'm really happy to be on this panel and speaking about the future of DeFi.
Excellent. Thank you, Ralph. And next up, we have Maggie Love, founder of SheFi and more. Maggie, welcome.
Hi, thank you. Yes, as you mentioned, I'm founder of SheFi, which is an education initiative to onboard more women into crypto and DeFi. And I'm also co-founder of Web3 Cloud, which is a joint venture between Consensus and Advanced Micro Devices to build the infrastructure for the compute and storage layers of the decentralized web. Thanks for having me.
Thanks, Maggie. And then we have Betty Chen joining us. She's co-founder of the Akala Network. Betty, welcome.
Oh, thanks for having me here and also a great panel here. I'm sure this discussion is going to be very interesting today. So yeah, as introduced, I'm a co-founder of Akala and also Karura. So we are building in the Polkadot and Kusama ecosystem as an all-in-one decentralized finance network where users can trade, issue self-service loans, and also become liquidity providers and also access a whole bunch of different yield opportunities for the powering the real world. Yeah, and that's us. Thank you.
Thanks, Betty. And last but not least, certainly we have Frederick Rowe, CEO of CoinSquad, joining us. Welcome, Frederick.
Hi. So CoinSquad is 24/7, 365 support with digital assets. And we specialize in DeFi. So keep it short and sweet.
Thanks, Fred. Yes, we only have 30 minutes to take on the topic of the future. So let's start there. From my perspective, when we do talk about the future, we also must understand with DeFi that there is only future because we're right at the beginning as far as I am concerned. So how do you all think about the future of where DeFi will be able to take us? Yes, in 22, but also in the years to come. Let's go back in order again. I'll throw this one to Ralph to start.
Thank you. Yeah, as you said, I think it's still in its very early stage, DeFi. A lot of experimental stuff is ongoing. And that's also very necessary to drive innovation. I think this is always the first step. I think a pretty big future is definitely possible. But let's say also like in other areas of blockchain applications, I think certain maturity steps needs to happen. So on the one hand, in the area of security, UI, UX, but also from regulatory side. And I think if these mechanisms take place, it can also have its place, let's say, in everyone's daily life.
Right, daily life, yeah. Maggie, I'll go to you now. Do you have anything to add?
Yes, I think it's exciting to see all the improvements in the DeFi like user experience. So I've been in this space since 2017, and at first it seems a little uncomfortable to download a Web3 wallet and send your first transaction to like a string of numbers. But I think after that, after you get through that first comfortable phase, then just logging in with a wallet to any app and now cross-chain. So we're seeing DeFi exist on other chains outside of Ethereum and all those rails being built into wallets. I think we're going to see a lot more adoption. So once you get past that, people realize how easy it is to actually just log into a DeFi app. And so I think that we're going to continue to see these improvements, and we've made so much progress, and I'm looking forward to seeing more.
Thanks, Maggie. Betty, what do you think about the future and what DeFi will bring us in the years to come?
Yeah, I think at a macro level, I'll say something bold here. Like, I think first of all, Bitcoin is probably going to be the global reserve, or at least one of the strong contender of it. And then on top of that, DeFi happens on a layer where you can program finance in a very open and transparent way. And also, I think DeFi or decentralized finance is, if not replacing, it will at least disrupt the current very closed financial system as well as banking system. No different from what internet has done to many other industries. It's probably only just time where DeFi is going to be the very base layer of all the financial world that we've been building on top of it. And it probably also going to get to a point where it's really opaque. So end users, I mean my parents or my friends, would not necessarily realize their everyday transaction is not powered by Swift anymore. It's going to be powered by DeFi. And there are many opportunities also open to them to access either credit or various different financial yield opportunity. I say that not looking too far ahead. I say that from a point of view as I'm actually a builder, so I'm an entrepreneur that has been building the DeFi platform for the last 2 years. And then one thing that we started to have is this collaboration between Web 2 and Web 3, FinTech and DeFi. And then we kind of coined this new trend as hi-fi, so hybrid finance, where we, as a DeFi platform, we're serving as the pipes and the infrastructure, where many of the CeFi counterparts, where they serve specific jurisdiction and they are, compliant, regulated, and they can serve the end users. And we kind of connect the two routes or ramps together and be able to actually serve folks like my parents and use the sort of the DeFi instruments, do their daily grocery shopping without exposing to the whole complexity of what I've been building and still couldn't actually explain what I do to them. But hopefully, they will be able to actually enjoy the fruit of work from us using similar interface like a card or some apps that they are familiar with, but are able to, bring the DeFi to everyday use. So yeah, so that's me. Thanks.
Thank you, Betty. I have some follow-up questions, but I'll get back to you. Frederick, I don't want to leave you hanging too long. What do you think about the future of DeFi?
Well, I think we're in our beginning stages, but that beginning stage is going to blossom into something beautiful. I really compare DeFi to the traditional IT space when cloud computing came into the picture in 2006 and really changed the game. And it gave a lot of opportunities for people that didn't have them normally. I look at certain things and aspects of like barriers that everybody has to get through with like fundraising and stuff like that for startups. And I look at Ralph's startup with Scale Swap and giving the ability for everybody to raise money, based upon certain aspects, and vetting. But these abilities weren't available before, and this is just going to completely change the game of when you get an idea that pops in your head that you can actually go and make it happen. It's physical at that point. It's not just dreaming; it's a reality. So,
thank you. Betty, I want to go back to something you said. You mentioned about holding power, financial power. It won't be the Swiss, it'll be DeFi. Do you have any comments on who that power can move to in the future as DeFi takes over in the way that you're envisioning?
To the people.
Who? To the people. Yeah.
To the people. Yeah, in short. I'm sure others will chimp in on that. Yeah.
Does anybody have any comment on the question I followed up with? Or
yes,
I think that's quite succinct.
Yes, I think so what we were seeing in the traditional financial world is sort of, you didn't go into traditional banking right after school, you're sort of left out of this walled garden where it's not only like your career, but you have access to information and people for the rest of your life on certain wealth building opportunities. And what we're seeing with DeFi is totally disrupting that, where everybody can see what projects are out there, people can test them, they can decide to invest in them. There's no credit scores, there's no KYC, there's no insider game. So, and in crypto, a lot too, people who are influencers share projects that they think are interesting. So I think we're seeing a much more open world and opportunities to build wealth by sharing that information rather than keeping it for a certain class, for a certain education, for a certain, you got into the traditional financial banking world club. And like we were saying with being able to have an idea and bring it to life, but with new funding mechanisms, crypto and like Ethereum has disrupted that forever. And obviously other chains are doing it too. So I'm really excited about wealth and the opportunity to build wealth to be in the hands of many people who have cell phones, who have access to the internet, can do some research, and then, programs that help people find opportunities that, make the most sense. So hopefully we're moving away from like wealth being held just in the few, and this opportunity being way more widespread, and not even just wealth, but as Bed was mentioning, like just access to financial services running all on top of this infrastructure. So that is what I am most excited about.
There I go, muting myself. Yes, the classic modern day problem. Gentlemen, do you have anything to add about who will hold the power, or do you think we could move on to the next question? Feel free to add.
My point of view, the first comment was also the right one, the people. I'm also looking forward to the real conjunction of decentralized organizations and DeFi. At the moment, it's also a little bit driven because of the gray zone from regulatory area that every organization in DeFi is practically a DAO, or in any way, let's say, DAO near organized. But this shouldn't be a necessity, let's say, driven from regulatory side. I see there a huge potential in real decentralized governance. And there is also important to have an according framework where you can also act and really govern. It's by far more than voting or this is the most simple step, let's say, but in a more collaborative and also management enabled function to live this DAO, and then it's really go back to the people, and in addition, I want to add, it's then also important that we don't see then the budget of the single people as the main driving factor. So how many tokens do you hold? The more power do you have? I'm not a big friend of that. So there are by far more advanced solutions also coming up, which have a factor of reputation factor, loyalty factors included, but also kind of a thought leadership that develops out of a decentralized organization that naturally forms the leaders and also the decision making of an according platform and organization.
Thank you, Ralph. I'm going to go to Frederick now. Go ahead. Yeah, you're right. Go ahead.
I'll talk about the balance of power.
Yeah.
In general, we're talking about computers, which have zeros and ones, and everything has a balance. All of this stuff comes from I Ching and 64 hexagrams, and I can be all philosophical of the design elements of how computers began, but everything in the universe has a balance. So really, I think that this DeFi is really bringing a balance to humanity in general, and it will long term. The existing state of where Web 2 is right now is going to be changed because of Web 3 and the things that we are building, and it's very important.
Thank you. I like that macro view. I'll stay with you, Frederick. My next question, which is, how do we get to that future? How do we put the power in the right hands? Which is, how do we get the public to understand what DeFi is, and what roles do government, legislators, and educational institutions, for example, play in getting this word out? So, Frederick, I'll stay with you on this.
Well, I think I'll go with the regulation side. Everybody's kind of waiting on the SEC rulings and Gary Gensler and all that stuff. I think that there's a lot to be said with KYC and AML. I've been on both sides of the fence, and a lot of these exchanges. There's a lot of situations where transactions really need to be censored, so to speak, because you need to know where the money's coming from when it's going through your platform. It's very important. The government looks at that as a security risk. On the other hand, I come from a background of being a little bit of an anarchist, and so to speak. But at the same time, it's a very tough question of what's going to happen in the future. I see things on both angles, and again, I'm going to go back to the balance.
Thank you so much for your comments on that. Betty, let's go to you about how do we get the public to get educated about DeFi?
Yeah, so I'll actually start with a quote from Dr. Gavin Wood, who's the inventor of Ethereum virtual machine solidity language that all the DeFi is actually built on top of. And also he, subsequently invented Polkadot. So he once said, the pen, pen is mightier than the sword, and now the keyboard is mightier than the pen. So all that, in a sense, is saying this is a creator economy and future. It's the folks here in the panel and also more out there who are creating and trying to build towards all of this, balance or the ideal that we feel that it's fairer to all of the people on the planet is going to create that future. So I think one thing is like if you do have talent and you're passionate about this field, come and build, right? So that's why I become an entrepreneur 2 or 3 years ago. So I think that's one thing. And then the second thing is I think we shouldn't expect everyday person will have a very deep understanding of cryptography and also how the private and public keywords works. I think that's part of being a builder, whether you're actually a programmer or more on the side of education or regulator side of it. It doesn't matter because we are here to actually create a product end to end so that most people, they don't need to be like an engineer to be able to use all the benefits that can be brought about by blockchain. So I think those are probably some of the stuff that folks that have been collaborating with. They all come from different areas. There's some educators, there's some developers. There's also more and more product people coming into the place, UX designers, as well as the fundamental layer of blockchain. Because while we are, anticipating what's happening in the future, we have to remember this is also at the same time a technological evolution. When we are still in a dial-up stage, regardless how we feel Netflix is so cool, you can never stream with that. So we are still at a stage of upgrading our internet from dial-up to actual broadband, probably fiber next. We're still at that stage. So so I think it takes a lot of effort, a lot of manpower, talents to do that. I think same as a regulation side of it, because I'm in DeFi, it actually affects us a lot in terms of regulatory clarity. But at the same time, I don't see government. I also don't see like SEC or regulators as a separate entity. I think they are also people. They are waiting, or some of them I see already actively been trying to brainwash themselves. Educating themselves to learn about this new technology, to understand what benefits it brings, and also what changes to the current setup, right? Because a lot of the stuff that we are experienced with, like the KYC ML, they were designed for the old system. And also trying to fill the loopholes in the current system, because I believe the ethos of regulation is to protect the people, right? If we stick with that ethos, then we can also upgrade our regulation to actually get to the stage of its balance and also serve majority of the people. So that's more of the attitude that I'm taking, and also welcome a lot of the open discussions with many of these people in different sides. So yeah.
Thank you, Betty, and I'll go to Ralph now to get to talking about how we get there. How do we educate the public?
Right. I think educating the public about decentralized finance itself shouldn't be too complicated. I think the principles of the services are pretty similar to a bank, but it's in a completely decentralized peer-to-peer manner. So I think this message is not too hard to get out. But if they want to use DeFi, I think there's a lot of education still necessary, because the platforms, you still need to have a wallet, you need to deal with, certain security measurements, your private key and whatever. You can send funds somewhere wrongly and it's gone, So I think education is two-step, Understanding DeFi, I think I can explain also my mother pretty easily in some simple words. but explaining how to use a DeFi, most of the DeFi platforms, maybe not. So there is, I think, this is still quite a challenge, and I hope that we reach also that level. And it was already mentioned earlier that the tech is really in the background, and like in the internet stage, of getting more mature. I also don't have, to be honest, no clue about TCP/IP, but I don't have to. I use internet applications every day, and yeah, a little bit like this. It should then also be at the end when we go that path, and I believe we definitely will. It should also be the case for the DeFi sector.
Thank you, Ralph. Maggie, do you have any comments on education and maybe even adoption if you want to add to it?
Yes, so I spend a lot of my free time educating and figuring out how to make what I say crypto relatable. So SheFi, what I do is I have a cohort of women and we go over the big topical areas, and usually I'll highlight a project that relates to that area. So we'll start off with like intro to DeFi, wallets, downloading MetaMask, and I give step-by-step how-to guides as well as demos. For lending and money markets, we'll do Aave. For decentralized exchanges, I do Uniswap. And so, and also I'm trying to use like social media. So I have Instagram. If I had time, maybe I would do TikTok. But, I think like crypto's biggest problem still is a lexicon issue, right? Is still the language we use. So when I say, oh, it's launched on mainnet, people will be like, what is mainnet? So a lot of the women I educate, I would say, 40 of them are brand new to crypto. So it's really good for me taking them through this journey on how I can always improve, like making sure I'm writing things out or making sure I'm explaining every little like word that might not make sense. Because if somebody can get hung up on that, then maybe it takes their focus away. Something that also I've noticed is people really like having a group to talk things over. So a lot of the learnings come through questions that people may have during a demo or after a session, or hearing stories of different products people are using. And so what I try to do is, teach like what I say are like the DeFi blue chip, like do big deep dives on them, how they work. Like even if we're talking about MakerDAO, like how they actually do decentralized governance, and what does it mean to be fully decentralized, and how do they keep, DAI stable. And I'll also then just teach them how to use the platform. So, you can't just like teach them how to use the platform, just like any financial service. But for what I'm trying to do as well is give them all the tools. So when they go read about Balancer, which is another automated market maker, they're like, oh, I know those terms. Like I know how automated market makers are priced. So I think there's a lot of work to do. And I think we just need passionate people. I just really want to get more women onboarded using DeFi for whatever their whatever their priorities are. I don't think they have to switch full-time into DeFi. I think if they just want to buy Ethereum, that's great, but still come and learn. So I really want to get us to a point where people are using DeFi for what they need and getting them at the beginning. So if they actually do want to take more active role, they can. And really it's just like making sure we're figuring out, like what I like to say is how to make it relatable, because there's so much content right now. There's so much to learn from. I also want to help people like, where do you begin, and give them a place where they can lift off and, learn about other projects in the same topical area and feel that when they're reading something, it's not all jargon and it makes sense to them.
Thank you, Maggie. We have an enthusiastic listener who wants to know how to find your resources on Instagram.
It's SheFi, SHEFI_crypto, CRYPTO. So you can follow us. I try to break things down and make them in like super relatable small chunks of information on different topics in DeFi. And so, yeah, I also think we were talking about education institutions. A lot of Gen Z and younger generations are actually online in digital communities all the time. So I think it's great that crypto is already getting into Discord, because that's where a lot of young people spend their time as gamers. And so I think we also, while it's great to think about education institutions, I think we also need to think about where people of all ages are spending time and what education actually looks like in the future, maybe less institutional and more in these communities. So it's important to get into those as well.
Thanks, Maggie. All right, so we have 4 minutes left, and my final question is going to be about use cases, and actually some people in the comments had questions about use cases. I'm just going to open this up so any one of you can chime in. What real world use cases does DeFi have now? And also you can talk about what it can have in the future. Anybody can chime in on that.
I can provide one quick one so that others can jump in. So recently, we've collaborated with Current.com. Those of you in US probably know them. They are a US fintech company. They provide this like card for young people so that they can get paid quicker, but also can make their money work for them. So DeFi actually powers some yield opportunity for these guys. So not just spend all their balances, but able to get into a habit of saving and also plan for the future. So so that's something that's very attainable. So
thank you. Does anyone else want to chime in on use cases? You can even talk about your own project, which is totally applicable. That's why you're experts, right?
Right. One use case, ideal launchpad. So also for the ones that are not so familiar, maybe like a Kickstarter for blockchain-based projects, where the public can also invest small chunks, let's say, into high potential fresh startups that are on a good path. This is also a journey, At the moment, these kind of launchpads have also quite a closed circle of community. But this is also one of our goals at ScaleSwap, that we make that broader, a little bit more sustainable, and also less market dependent. As everyone saw that is familiar with the space, let's say, IDOs are very sensitive to market, more than, let's say, larger coins. So it's a big target of us to make that also more sustainable, make it also accessible, let's say, to a broader audience, and also from an educational level to make it understandable for the crowd. So definitely a big mission to go. But first we need to have a good launch.
Thank you. I think we have time for one more comment if Maggie or Frederick want to talk about any use cases they'd like to hit on.
Well, I just think in general, I mean, that it's such a generalized question, because DeFi is going to affect every single market. Like, I'll just pick one, for example, the music industry and the art industry, anybody that's doing anything artistic or creative. Like, in the past 10 years, there's been a lot of roadblocks with making money and a lot of intermediaries in the middle of that. And these are going to remove the friction throughout those industries so that people get paid properly and they have other opportunities available.
All right. Well, thank you, everyone. Maggie, did you have any last words to share with our audience?
I +1 Frederick. DeFi is coming for all financial services and doing a lot to help smaller creators and creatives, take back ownership of a lot of their financial opportunities as well. So I'm super excited.
Thank you so much. Thank you, Maggie, Betty, Ralph, and Frederick for joining us today. That was a great discussion. And thank you to the attendees for being here. And please enjoy the rest of the session.
Thank you.
Thank you very much.
The ambition to succeed starts with a vision. We have translated that vision into the capacity to create a world that could be very different from the one that is today. A question that we must ask ourselves: what's next for finance? It's only when you question the ordinary that the extraordinary is revealed. Once you catch a glimpse of it, it becomes your reality. A reality that pulsates with sustainability, affordability, and financial innovation. Visit plentydefi.com to get started.
We are back live with the Global DeFi Summit. A huge thank you there to Ranika for moderating that panel. Some great conversations to be had with some exciting aspects into 2022. Now, next up, we are going to welcome back Mary Ma from Rangers Protocol. She's going to give you a sponsored presentation discussing some exciting announcements coming up. So I'm going to hand it back over to Mary now.
Hi guys, thank you for having me here, and thank you, Jessica. I'm Mary, and I'm co-founder of Mixmobile and Rangers Protocol. It's an honor to give this topic to discuss about what kind of infrastructure Metaverse needs. And we are not a DeFi team, so we just want to bring up this new topic and hope that it can inspire you something, because we think Metaverse is a very interesting topic. So before we go deep into the topic, I'd like to introduce our team a little bit first. So sorry, how can I come to the next page? Oh, I see. So actually our whole team are from the traditional game industry. I don't know whether any one of you are familiar with all these games. We have core members from the Assassin's Creed and the Prince of Persia and Splinter Cells. All these AAA games are very famous, or the honored product of Ubisoft. And we set up our own game studio on 2012, and the first game, Squeeds, ranked #1 on 65 regions and countries during that year, and it also won a global game rewards such as the game show rewards in Cologne, Germany. And we also helped Toy Wars to be published in Korea and South America, which is quite successful. So actually, that's the reasons why we mentioned about the metaverse and all the game experience, is because actually the metaverse is not the only topic within the blockchain field. It's also the pearl of the king's crown in the traditional game industry. I think there are a lot of people who are talking about metaverse right now recently, and maybe it's because of the COVID and people are so bored at home. I think the most famous guy in Western field must be Tim Sweeney, the founder of Epic Games and also the founder of Unreal Engine. During a speech, he gave his imagination about what the metaverse should be in the future. And in the Eastern side, the most exciting thing must be Tencent's ambitious in building up a whole new metaverse, because Polly Ma, the founder of Tencent, has combined his most important two groups, which is interactive entertainment group and the social media group, which QQ together. And along with all the companies he invested or purchased, he is aiming at building up a whole new experience in his Tencent's metaverse. So, so people must be very curious that if the internet or the game can offer such great experience for the metaverse, why do we need to use the blockchain infrastructure? I would say the experience is very important, but it's not enough, because if we want to build a real metaverse, there should be the governance. Like people need to know how to govern this society, and also they need to have the economy, and people need their assets to be insured. So I would say the entertainment and internet infrastructure and the blockchain infrastructure, they have different responsibilities. For example, the game can use the graphic and rules to build up an open world for the users, such as GTA, such as Assassin's Creed, and they can offer real experience to the users with a physical engine or the VR and AI equipment, and even allow people to do the free creation like Minecraft but blockchain can ensure people's equity ownership, like their digital assets of NFT or DeFi, the FTs, and also the community governance rules or platforms like the DAOs will allow people to be defined into different roles, and we can have different platforms or tools to governance in different scenarios. So blockchain is also very important for the metaverse. So actually, this is a very old slice of our PowerPoint back to 2017, and at that time we only have a very vague concept about the open world. Actually, we came across blockchain technology that year, 2017, and we are very thrilled of this new technology. We just think that we finally found something that can you know to make the metaverse more sufficient, not just limited to experience. So at that time, we proposed that if you want to build up an open world, and you need people to be free creation, and the assets will have interoperability between all these dApps, and community can govern themselves. So now we can definitely, like through all these 4 years exploring and effort, we can abstract all the key elements of the blockchain infrastructure, which are standard protocols we have already integrated into the Rangers protocol, and the dApps will build up a whole new economic system, and also the community will have different DAOs to rule this metaverse. So why we have all these thoughts and exploring? Actually, we've done a lot of dApps and incubating the Rangers protocol. So the dApps, we will see the Hyper Dragons. It's the first blockchain game we developed on 2017. 2017, and it surpassed the Crypto Kitties on 2018 August on Ethereum. And this game generated like over 100,000 active users and $3 million of US dollars revenue in the NFT sales. And also it was rewarded as the one of the top 10 the most influential figures in blockchain world, together with Vitalik and CryptoKitty and so on. And after that, we developed a Hypersnakes. This is the first game who can log in or who can be deployed on 3 chains at the same time and ranked #1 on Ethereum, Tron, and Ontology. And the very interesting story is we also integrated with on the blockchain on the Alibaba, and we believe that is the first mass adoption case in blockchain in a very interesting way, because it was recommended on the first page of Alipay, and we generated like 1 million active users and distributed 5 million of the NFTs. But the only thing is that because of the regulation issue, people do not know that it's powered by blockchain. But still, it's a very interesting experience, and we have tested the stability and the scalability of Rangers protocol at that time. And the most recent trials are The Hero and The Cube. They are 2 games that combine DeFi with NFTs. In The Hero, the logic is very similar with the Avagachi, which people stake FTs or LP tokens into the NFTs, but we have more gameplays, like you can collect more cards to win more mining power. And in the cube, people are staked to mine the cubes, and in the editor, you can use the cubes to combine them into different NFT artworks. It's more like a Lego on chain. But the meaning is, why it's meaningful is because we are trying to convert the value from FT to NFTs so that you can build up a new value discovery mechanism, because we think it's very crucial in the metaverse. All the value discovery system should be sufficient in the future. So we are trying to use different ways to build up this system. And along with all the development of the applications, Rangers protocol has iterated for several times. You can see that during 2018, it was still a layer 2 solution based on Ethereum, but still it can support Hyper Dragons to offer people a very smooth experience, but at the same time retain the decentralizations. And during 2020 to 2021, we iterated with the cross-chain function, and now we are so glad to announce that Rangers is the first one and the only one who can realize the NFT cross-chain, but still retaining the all the historical data and in a fully decentralized way. And we iterated with our own consensus, which is BLS plus BLF, is the advantages of, well, we combine the advantages of Algorand and Dfinity. But in the future, the Rangers is aiming to become an engine for Metaverse, which is just like Unreal Engine is doing in the game industry, because we think that it's crucial for the developers, the small team or the individual developers, to get into the blockchain field very easily and smoothly. So yeah, in the tech side, I can show you a drawing is a hand drawing by me, and if you make a metaphor of what the blockchain world is like, I would say Ethereum is like an island, a very big island, and a lot of commercial activities were happening there. People are selling NFTs or trading or doing swap, and Polkadot is like islands. And Rangers, we have two parts. The connector part is like ships are transporting all these assets between all these islands safely and keeping it completed. And the other part is the port part, because the port is already fully equipped and decorated, so you can open up your shop directly here. And because entertainment is the most directly way to attract normal people to come into the blockchain world, so this land is connected with the mass adoption land, and Mixmarble is opening an entertainment garden or like a playground here, and we are attracting the mass into the blockchain world. So I don't want to bore you guys too much here to talk about too much about the techniques. So I will only highlight 4 key features of Rangers protocol, which are the consensus part, because of the BLS and the VRF is most sufficient way to do the consensus and still remaining safety and decentralized, and can realize the real-time transactions, which is very important for the high-frequency interactive applications. So Rangers is the most friendly and professional way to support all these complex applications, especially games or NFT-related applications. And also, we can offer the NFT cross bridge, and also we can retaining all the historical data, which is very crucial to build up the whole value and discovery system for the NFTs. And also we are ERC 721 compatible, and also actually our virtual machine is EVM compatible, which means all the assets or the dApps on Ethereum right now can be easily be deployed on Rangers. The developers nearly do not need to do anything, but they can enjoy all the support from Rangers just with some few lines of code to be deployed on Rangers. And after the 3 years building, actually, we just released the private round, and thanks to all the investors' support, like Pantera, Framework, Alameda, Hashkey, and all the great investors, we are so happy that we are going to launch our testnet on middle of July, and we definitely welcome every one of you, the developers, the users, to come to Rangers, come to our community and Twitter to experience the current demo or the current applications we've built. and to give us your thinkings and feedbacks. Thank you so much for having me here.
Time is ticking away. Ditch the banks and join the DeFi movement on Tezos blockchain. What if we told you there is an affordable, fast, and sustainable way to leverage the power of decentralized finance, all the while empowering the next generation of finance? A proof-of-stake implementation into decentralized finance, taking up to 2 million times less energy than proof-of-work networks. It's time to start caring about your impact. It's time to care about the future. Visit plentydefi.com to get started. The ambition to succeed starts with a vision. We have translated that vision into the capacity to create a world that could be very different from the one that is today. A question that we must ask ourselves: what's next for finance? It's only when you question the ordinary that the extraordinary is revealed. Once you catch a glimpse of it, it becomes your reality. A reality that pulsates with sustainability, affordability, and financial innovation. Visit plentydefi.com to get started.
Welcome back to the Global DeFi Summit. So we have 2 more panels left for today. Very excited to bring you a huge thank you to all of our speakers so far today. The agenda was jam-packed with over 80 speakers. So without further ado, we're going to bring our next conversation on. We're taking a look at CBDCs and also enterprise DeFi. And I'm going to hand it over now to the moderator of this session, who is Masha from Crypto PR Lab. So Masha, take it away and let's hear from the panel.
Hi everyone. Thank you, Jessica. Thank you so much, Adam and all the organizers. That's such a great event. We're really happy with the show, with all the 80 speakers, so many attendees, so great success. So our panel today is about the stablecoins, DeFi enterprise, CBDC, and we have incredible speakers. James, Dante, Dr. Win. Would you like to introduce yourself?
Me?
Yeah, sure. Everyone, just go one after another.
Sure. Thank you, Masha. Thank you, Global DeFi Summit, for having me here. So my name is Win. I'm representing IBG Finance. So we are the world's first fully insured DeFi platform, basically focusing on robo-advisory, something similar to what wealth management robo-advisory platform is doing, but exactly on a DeFi platform. And I'm based out of Singapore.
Thank you. Dante?
Great. Hello. Hi, Masha, and hi, everyone. It's great to be with you. I'm Dante Disparte. I'm the Chief Strategy Officer and Head of Global Policy for Circle, the lead architect behind USDC, the world's fastest growing and most trusted dollar digital currency, now a $25 billion stablecoin in circulation around the world, empowering many of the conversations that you have certainly had around DeFi and having a trusted instrument that was native to the internet and native to public blockchain. So really happy to be on the conversation this evening.
Thank you, James.
Great, thanks, Masha. And it's a pleasure to be here today, and really looking forward to this discussion with my fellow panelists. My name is James Wallace. I work for Ripple. Ripple is a fintech based on the West Coast in San Francisco. We have a global payments network which operates in more than 55 countries, cross-border payments. And then also we have a number of initiatives around developing new use cases. And specifically, my role is leading our efforts with the central banks around central bank digital currencies, and looking forward to sharing more of that with you as we go through the discussion.
Awesome. Thank you, everyone. So maybe my first question, something that also audience would be interested at, maybe you can tell us more, James, about your current work at Ripple. What are the developments with the central banks, and what are the news? How do you work with stablecoins, and what is Ripple currently doing, which is new and exciting, and what is the roadmap for the next few months?
Yeah, thank you. I'll give a quick sort of overview of what we're doing at Ripple, and then I'll sort of drill down a little bit into the central bank side, if I may. So, as I mentioned, Ripple has been deploying a global payments network. The company's been around for 7+ years. We're focusing on improving the overall experience and speed and efficiency around cross-border payments. The newest innovation that really we believe is a game changer is the use of XRP as a crypto asset to facilitate the cross-border movement of money. So in the old correspondent banking model, you have to pre-fund accounts if you want to send money from one country to another. We avoid that, which potentially frees up trillions of dollars stored in what are called Nostro accounts within the correspondent banking model. We do that by transferring money, say in the US, from US dollars to XRP into, say, Mexican pesos at the other end, and that's all done pretty much instantly versus the old correspondent banking model. So that's the sort of RippleNet side of things. I'm working on a relatively new initiative around central banks. Now, just to put a bit of context, central bank digital currency is fiat-backed digital money. So, like, for example, a digital dollar that would be issued by the Federal Reserve System, or a digital pound that would be issued by the Bank of England. We have a sort of strategy around digital currencies. So within RippleNet, we use native XRP for our on-demand liquidity transfer cross-border. We have work going on in the stablecoin arena, and then we're working with central bank digital currency. So our philosophy is these different forms of digital assets will all have a place to play in the future of finance. So we're not sort of saying it's one or the other. We think there'll be a combination. On the central bank side, what we're doing there is building on the relationships we have with central banks through our RippleNet work. So we have to work with central banks to get approvals when we go into a new country with our RippleNet products. We're building upon that, and we've been talking to central banks for quite some while around what technology they would like to deploy their central bank digital currencies, whether that be for wholesale central bank digital currencies or retail. And they want a private ledger approach, right? So what we've done is we've taken the XRP ledger, which is a public permissionless public network, which has several currencies on it already. I mean, XRP is the native currency, but there have been several thousand other currencies issued on the XRP ledger. We've taken that, which is really built for high performance and built for payments, and we've created a private version for central banks. So that enables a central bank to basically mint or create their currency, distribute it, most likely through commercial banks, and then actually monitor the transactions. So we're working with them on that technology, and then also working with them on the policy, which is going to be a big element on the success factor. I'll take a pause there and let my fellow panelists say something.
Yeah, and if you don't mind, which central banks in which countries are you working on or working with?
We're working with many of them. They're mostly under non-disclosure agreements, so I'm not at liberty to share the details. But I would say, we are working with them in each continent apart from Antarctica. The study by the Bank for International Settlements estimates, I think, 80 to 85% of central banks are doing some work. We're at different stages. I mean, we have some active projects, and then we have some early stage discussions. A lot of the banks are still doing research rather than deploying projects. It's relatively early in the life cycle, I think, for CBDCs. I think it's going to be 2 to 3 years before major economies like the US or the Eurozone deploy a CBDC. China is obviously further ahead at the moment. They are well advanced on their pilots.
Yeah, thank you. That's really interesting. Dante, maybe you can tell us a little bit more about what are you guys doing at Circle, about what are the recent developments on stablecoins and also on the DeFi, if you're using any DeFi products or working on this.
Yeah, no, thank you, Masha. So at the beginning, we are just today announced an early access period for a new institutional grade DeFi solution, which will of course power a range of offerings and a range of investors and other capital allocators to take advantage of all of the opportunities that DeFi represents in terms of programmable access to finance without the costly intermediation and frankly the costly brick and mortar infrastructure that has stranded so many trillions of dollars of opportunities on the sidelines of the global financial market. So we're really excited about that. I think similarly, there's just an enormous amount of development and evolution at Circle. While the conversation about CBDCs remains somewhat abstract, and I'm actually very glad that it is, because ultimately it would transport a lot of the billions of dollars that is being spent on public infrastructure, public blockchains, and responsible privately issued digital currencies like USDC. It would transfer that free market activity into candidly a taxpayer-funded science experiment. So we have to be very thoughtful about the future of money and payments. And so in Circle's view, we have today more than $25 billion of USDC in circulation. The reserve assets are inside the care, custody, and control of the US financial system. And we're designing a business model that comports with exactly what the central banks and other regulators and policymakers would like to see in terms of responsible innovation on public infrastructure. But the posture ultimately is about competition. It's about lowering barriers to access, democratizing access to payments and money, and addressing all of the fundamental challenges we have when you consider the fact that so much of our financial infrastructure has been unchanged until the 11-year-old or 12-year-old cryptocurrency and blockchain industry started addressing this question of access on the internet and this concept of a free internet of value existing, while at the same time addressing a lot of the exponential issues or exponential opportunities for improving financial crimes compliance, access, digital identity, and all these adjacent issues. So Circle is a company that's not aspirationally talking about these issues, kind of like the CBDC conversation. We're operationally addressing these realities today. We've powered more than $700 billion of on-chain transactions with USDC at the core. And this is an instrument that exists across blockchains, powering DeFi, powering NFTs, powering real-world transactions that are low friction, high trust, and peer-to-peer. So in so many ways, we're really excited about the future, not only of the company, but of the industry. And that's the bet I would make, that that private activity, consortium activity, open competition is the future of money and payments.
Okay, thank you guys. So I have a law degree and I'm a lawyer. So I worked as a lawyer and in regulations, also in blockchain regulations sometimes. And sometimes I ask myself a question, do we have to regulate everything? So I recently read the news that the Central Bank of Thailand was also speaking about regulating the stable coins. And my question to the panel would be, do the stable coins need regulation, need a stricter regulation, or can they be as they are right now and they're not doing any harm and they can just stay as they are? Or do we need government to intervene and regulate the stable coins?
So I'm happy to provide commentary on this, and perhaps others will add to this as well. First, I would say ignorance of the law doesn't mean any sector is above it. And when regulators talk about principled approaches to regulation of new technologies or payments or other instruments, they talk about this concept of activity-based regulation and technology-neutral regulation. The reality, however, in many countries is that when it comes to blockchain and crypto assets, regulators have been discussing that in spirit only, and then have tried to figure out how to effectively bar many of the activities in the space. That would be one just open statement. The second is that it's pretty clear that not all stablecoins are created equal. And we have had in the blockchain industry an era of internet funny money in which what was backing, the reserves, for example, backing instruments purporting to be stablecoins were opaque, they were intransparent, or they were illiquid, or critically, they were outside of the banking system. We have taken a posture at Circle that building inside the regulatory perimeter is an important first principle, because something as sacrosanct with people's money should not be played with. At the same time, arguing for an open internet of value in which access and the ability to send, spend, save, and secure your money as freely as you and I might enjoy the exchange of information on the internet should be a fundamental right and a first principle as well. So I think above the regulation are a series of first principles that we have to really address. And frankly, I think many of them are challenged even by central bank digital currencies. I do not want my central bank to know where I am, what I'm spending. I don't want to be deplatformed from my money if it's a public good. And so I think these questions need to be asked as well. So I think regulation is absolutely important. Prudential standards are important. Consumer protection is important. But more important than any of those is the ability to create universal access to trusted forms of payment on the internet. And that's why blockchain and this entire space is such a fundamental issue that we have to protect and preserve, especially in free economies.
Dr.
Yeah, maybe I'll share. So let me just share with you about IBG, what we are trying to solve. So IBG is actually a robo-advisory platform. And what we are trying to solve here is the kind of activities which we can apply in a wealth management platform or any of the traditional banking system, which should be able to do the same process here in the DeFi platform or purely a decentralized platform. So we are trying to solve that problem by merging these two different universe into one by bringing in a layer in between using AI and machine learning as well. So at the same time, yes, going back to the question, stablecoin, I feel like that's going to be the foundation for any of these activities. And for example, when we are talking about deploying CBDCs, so maybe that will be deployed in a form of like a hybrid model where there is one element of decentralization and issuance will be, or it has to be a centralized model. So in that platforms or in that kind of an approach as well, I feel that stablecoin is going to be the key, the key foundation layer. So definitely that is something which the regulators will be looking at, and it is needed to be regulated, I believe.
Yeah, maybe if I could just add to that, I think I agree with both Dante and Vin. I think that working with the regulators is a must, right? Because I mean, if you look what's happening in Europe at the moment, the European Central Bank and the Eurozone are taking a very defensive stance, right? They're basically saying that they're not going to approve cryptocurrencies or stable coins, unless they've originated from Europe or unless they approve them, right? Which is a very, very negative and closed mindset, in my opinion. I think the way to resolve that is absolutely to work on this public and private agenda, right? So the collaboration between the public sector and the private sector, the public sector will ultimately drive the policy decisions, will ultimately, drive the political decisions, but the innovation is going to come from the private sector, right? There's no real history of central banks or governments, innovating in the financial world, right? All of it's come from the private sector. So I think you have to work with the regulators. I think there have been other examples in the history of finance where innovation has not worked with the regulators and then it's run into a brick wall, right? So the best practice, I think, is to engage with the regulators from day one.
Sounds good.
Yeah, and Masha, sorry, if I could just 1 second, just one small intervention, because I think James made an important point, which was the last time we had this big dislocation in the financial system, it was the 2008 great deleveraging or the 2008 financial crisis, in which we privatized gain and socialized losses. And I think one of the issues and points that crypto and blockchain represents is the reverse of that. It's to effectively privatize losses and socialize gain, and to kind of put that model on its head. When you think about what a stablecoin represents, like USDC, it is a better model in some respects, financially and from a risk management and prudential point of view, than commercial bank money. where depositors ultimately suffer from fractional reserve banking, where the bank is ultimately able to lend out money and take risks and create leverage. These architectures are not replicated when it comes to a stablecoin like USDC. And that's an important distinction. That's a standard higher than you would see for commercial bank money and traditional deposit inside the banking system. And so I think this is part of where the argument we have to make collectively as an industry is that we're not eroding regulations nor consumer protection standards. We're actually making exponential improvements on a lot of the issues that regulators care about and want to see.
Sounds good. So can anyone comment on the existing regulations in the US which address specifically stable coins? Do we have them and what they are, if we have any?
Well, I'm happy to comment as well, being the operator on the panel, Masha, and of course, James or Vin, please comment as well. Clearly, we do have regulations in the US, and I think this would have been one of the big mistakes of other potential stablecoin issuers or stablecoin issuers that wanted to have offshore dollar-denominated structures. It was a fundamental critical flaw of a stablecoin issuer to issue a currency outside of the jurisdiction of the country of record. So if you're issuing a pound stablecoin, it would be prudent to put your pound reserves inside the UK perimeter. Same for the US dollar and otherwise. But we have rules, for example, with money transmission, which articulate two areas of risk that the regulators care about. One relates to the management of reserves and how those reserves are custodied and what types of prudential approaches you can take with asset composition and investments and the rest. The other one is money transmission and the transmission of money and payment services, which is fundamentally what a stablecoin is all about, is about facilitating payments and transactions on the internet without buyers and spenders remorse being the reality. So I think we have very clear rules. And similarly in continental Europe and in the rest of the world, many countries have e-money or e-money tokens and similar payment systems infrastructure rules that we have to reconcile with. And I think, many payments and innovative operators in the space learned the hard way that those rules were pre-existing. And then they're now trying to figure out how to back into them. We've taken that approach as a company at Circle, and we've licensed ourselves to the highest standards possible in the jurisdictions where we're principally operating in.
Yeah, just to add to that, I mean, I agree. You have to work within the jurisdiction that you're operating in. That's something that Ripple we do with our global network. As we go into each country, you have to work with the regulators and often with the central bank. You just can't. I mean, the world is a big place, right? There's 240 plus central banks around the world, right? They're not all going to follow the same rules. So, whilst the US is a very important market, obviously, what we found is you can't just apply one approach and expect that. You can't expect the US approach to work everywhere, right? Because it doesn't, right? So you have to have both the technology and the sort of the feet on the street to be able to actually operate within the sort of local differences in the laws and regulations.
Okay, sounds good, right? So regulations are important. We should work with the government within the framework to make everyone happy and keep on growing our stablecoins space. So the name of the panel is also DeFi in Enterprise. So let's maybe turn into the DeFi in Enterprise, and please maybe feel free to comment on the most interesting use cases in DeFi and Enterprise that you've noticed in the space, and also which companies are using DeFi and how.
So maybe I will take this flow first. Sure. Okay. So in terms of our current stage where we are in the product development, so we are planning to launch within the next couple of weeks. So within the short span of last 3 months, we started working with a couple of financial institutions, non-banking financial institutions, and banks including, where they're trying to launch a service like this, which they used to run for their wealth management clients as an enterprise DeFi to roll out robo-advisory for their clients. So this is something like where we are seeing that, okay, so the clients are started moving from the traditional network to the crypto or the decentralized network, and they also want some sort of a security or a guarantee from these these platforms. So when they are rolling out a robot advisory like that, they will make sure that all the protocols or all the investment opportunities coming into that platform is vetted through, securitized, insured, whatever way they could protect their investors, and rolling out these into their client base. So that automatically brings in sort of comfort, which is not seen in the typical DeFi world, where we all know that more than probably 50% of the projects coming out, nobody knows who are the people behind. So these institutions and financial institutions, which we are talking about, they're trying to shortlist each and every the protocol or the projects which they are planning to advise on. They do their own due diligence as part of the the service which they are providing and rolling out through the platforms like IBG to their clients. So definitely that is one space which is coming in, enterprise DeFi. But at the same time, there is this, again, going back to how do you regulate DeFi, and that is again coming in as a big question mark right now. So yes, so the projects which is launched by regulated entities is much easier to regulate, but at the same time, which is actually fully decentralized without having any background, or it is fully driven by a smart contract. That is one space which is still regulators are trying to figure out. Even in Singapore, Monetary Authority of Singapore, they're still not having any specific guidelines for regulating DeFi space. But I'm sure when we are moving into the enterprise DeFi, the people behind or the centralized entity behind will be able to regulate easily. That's my take on this.
Yeah, I would agree with that. I think the enterprise DeFi is something that a lot of enterprises are looking to get into, but they're a little bit hesitant at the moment. I mean, they need stability and certainty in the transactions, and I think that's something that both the CBDC or a stablecoin can bring to the party. But I think also there are concerns about privacy and use of public chains. So it's a very similar discussion, I think, to the currency, digital currency discussion. I think regulation will come eventually, but the traditional players, in the enterprise world, they're worrying about things like KYC, and they're worrying about things like privacy and so forth. So I think it's very early stage in terms of enterprise DeFi compared to what we might think as more open and traditional DeFi, if that's the right expression.
Right. Yeah, I know that you were the founder of IBM blockchain business and grew it. That's impressive. Can you comment on IBM, whether they're doing anything with DeFi, if you know?
It's 2 or 3 years since I was there. I'm not sure what they are doing in the DeFi space, to be honest. But yeah, thank you for that reference. It was a good job for a few years, but creating a new business from the ground up. And that's kind of what I'm doing now at Ripple, which is we're creating this new central bank business as a new line of business. So there's some parallels there, but I'm not sure exactly what they're doing on DeFi.
Right, creating a startup within a startup. That's great. Dante, maybe you can give us some comments about the use cases that enterprise can have with DeFi. Maybe you can imagine how can they start using DeFi. For example, I have experience working at UBS and HSBC in wealth management in Switzerland, and I imagine that one day the Swiss private bankers would be offering to their clients DeFi. Let's allocate 5% of your portfolio to liquidity mining and see how it goes. So
yeah,
when will it happen? Will it happen?
Absolutely. I mean, I think in the same way that corporate balance sheets are now accepting a position for Bitcoin as a diversified, uncorrelated asset on corporate balance sheets, I think the same posture will hold true for institutional investors, CFO, and corporate treasurers who are in the search for global yield in a market rife with risk and with complex, anemic interest rates and currency issues at the macroeconomic level. the ignorance of DeFi and overlooking DeFi and institutional exposure to stablecoins and stablecoins being used to power DeFi offerings would be to not do your job effectively as an institutional investor or asset allocator. So I'm willing to make a bet that we will not only see this area continue to blossom, but you'll see, same with Bitcoin, that you'll see the institutional adoption flourish and a lot of blue chip names and corporates entering the fray. As I'd mentioned before, just today, Circle announced an early access period for an institutional grade DeFi product that provides the types of assurances they would like to see, but also the on-ramps to this exciting class of financial innovation.
Sounds good. Yeah, that's great news. We all hope it will happen. And let's look forward for the bright future of stablecoins and DeFi. Thanks, everyone. Thank you, audience.
Thank you.
Time is ticking away. Ditch the banks and join the DeFi movement on Tezos blockchain. What if we told you there is an affordable, fast, and sustainable way to leverage the power of decentralized finance, all the while empowering the next generation of finance? A proof-of-stake implementation into decentralized finance, taking up to 2 million times less energy than proof-of-work networks. It's time to start caring about your impact. It's time to care about the future. Visit plentydefi.com to get started. The ambition to succeed starts with a vision. We have translated that vision into the capacity to create a world that could be very different from the one that is today. A question that we must ask ourselves: what's next for finance? It's only when you question the ordinary that the extraordinary is revealed. Once you catch a glimpse of it, it becomes your reality. A reality that pulsates with sustainability, affordability, and financial innovation. Visit plentydefi.com to get started.
Welcome back to the second annual Global DeFi Summit. Now, throughout the day, we've had some amazing conversations when it comes to the growth of DeFi, where the industry is headed in 2022 and beyond, some interesting use cases when it comes to NFTs and CBDCs. And now our next panel and our final crafted panel for today is taking a look at how this can be implemented for you, the retail or the institutional investor. We're taking a look at some interesting DeFi metrics for successful investing. And I'm going to hand it over now to our moderator, Karen from Apodomi.
Everyone, how you doing? Welcome to the Global DeFi Summit. Welcome, James and Long. Nice to meet you guys.
Hey, great to see you.
Thanks for having me. So I believe Idan's not going to make it this evening, so let's just kick right into it. I wanted to start off just by, obviously the focus today is to really dig into interoperability and DeFi in how it's evolving. It's obviously evolving at a really torrid pace right now. And both of you, I think, are really adept and are going to be helpful in helping us kind of unpack all of this. So just to start out, if James, maybe you could start first, and then Long. I'd love to hear a little bit about each of your backgrounds and the REN project and CELO, and we can get into what they are, what problems they're trying to solve, and how they interact with interoperability in DeFi.
Sure. My name is James Prestwich. I've been working full-time in the crypto space for about 7-8 years now, and full-time on interoperability for the last 4 years, since late 2017, basically. I co-founded Storage and Suma. In 2020, Suma was acquired by C Labs, and now I work full-time on Celo. Celo is a proof-of-stake blockchain running an EVM, so you can deploy all your Solidity contracts on Celo as well as on Ethereum and other places. Inside C Labs, I lead the interoperability team. We're currently working on Optics, which is a gas-efficient standard for cross-chain communication and bridging tokens.
Great.
Hey everyone, my name's Long. I'm the Chief Technology Officer at the REN protocol. My background came from sort of, I guess, an academic background, studying distributed systems, and got into the blockchain space, 2017, maybe mid-2017. And co-founded REN with my co-founder Ty. And since then we've been working on, well, originally we were actually working on something a little bit different, but we pivoted pretty quickly into the interoperability space. And then since then we've been working on that. And our goal really is to try and connect as many different chains to each other as possible, get as many different assets on as many different chains as possible, while still enabling some smart contracts to be called at the same time instead of just moving assets. And really what we want to achieve is the ability to support any type of token on any type of chain, and for general purpose applications as well, not just any one specific application.
Got it. And this is also a question for both of you, and we can go in the same order. And by way of my background, just so you know, I mean, I consult with Bitcoin Magazine. I would consider myself a Bitcoin maximalist, but not a toxic one. I work in the hedge fund industry, so I've been involved in finance around 17 years, and I've been involved in crypto for the last 3 or 4. My expertise in your field is limited, so I think that gives us a good way to kind of delve into this from a beginner's mind a little bit for those out there, and then we can of course get deeper and deeper if we get a little more in the weeds. But just taking a giant step back, when both of you think about interoperability and the problems they're trying to solve, what do you think the end game is? Obviously, fungibility across chains, across assets is kind of the paramount goal at the beginning, but kind of where do you see all this evolving maybe in the next 12 to 24 months, as we know that's a lifetime in crypto? Maybe James, you can start.
Yeah, I think it's a little funny that you call yourself a Bitcoin maximalist. I would definitely consider Long and myself to be a little Bitcoin forward. The main interoperability projects that each of us have shipped focus on Bitcoin. So obviously REN BTC, and I contributed a good chunk of the core TBTC code base. The long-term goal here is really to kind of break down a lot of those barriers between chains that keep Bitcoin out of DeFi or keep Ethereum confined to a single chain right now. In the next 12 to 24 months, I think we're going to see a lot of standardization and consolidation around bridges. Right now, basically everyone runs their own bespoke bridge from point to point, and I think we're going to see a lot more. We're going to see these bridges kind of aggregate into a few bridges that are going a lot of different places.
Yeah, and I think part of the reason, why, you might want to achieve interoperability. I mean, with something like Bitcoin, it's a bit obvious because it doesn't have this kind of smart contract capabilities that Ethereum has. So if you want that, you have to have interoperability. But all the different L1s and even, the different L2s that are coming out, they all make different trade-offs, on various different metrics that different developers care differently about. So you might be willing to trade off super high speed and super low transaction fees for a little bit of decentralization if you're working with an application that really needs that in order to function correctly. And you don't want to be locked out of the other people that need different trade-offs. So you kind of want to be able to go to the chain that you need for the things that you need. And I think being able to create applications that, as one application, actually span multiple chains, and for the different parts of it are able to leverage the different advantages that are needed. I think that's going to be something that becomes a little bit more popular over the next 1 to 2 years. I also hope we start to see, in line with standardization a little bit more in the way of multi-chain wallets, where you can have like a MetaMask that actually also lets you hold, interact with multiple chains simultaneously. You don't have to swap between different chains on the go, and you sort of beginning to work on that user experience layer much more.
Got it. So let's dig into each of your projects a little bit and try to understand them better. So when actually, I'll start with you and Ren. When I started doing a little research on Ren, again, from a beginner's mindset, from a novice standpoint, when I think of Ren, I was thinking that it was almost like a middleware type of product. So yes, it's a blockchain, of course, and yes, it works towards interoperability, and there's a wallet system, and it's able to wrap assets. But when you think of your place in the entirety of the ecosystem, do you think of yourself more as a middleware product, or do you think of yourself more as a unique blockchain?
I think at the moment, I definitely think of us as middleware. That's a pretty good way to think about it. We're kind of like an L2 for interoperability. So you kind of plug yourself into various chains and enable new assets there. And there are other ways to do that. In fact, we've got James here who pioneered those other ways to do that, where you can't do interoperability directly in the chain. But sometimes, for example, in the case of Bitcoin, that's just not an option. You need that sort of like secondary layer, and so we bring that. I think the long-term goal, we are a blockchain, but we're kind of only a blockchain out of necessity, in the sense that if you want to coordinate large distributed decentralized network, that's the kind of infrastructure that you use, and so that's the reason we have one. I think we do anticipate to eventually allow a level of smart contract programming directly on our chain, so that you can build applications a little bit more efficiently, depending on what your goals are. But I think that's still a little ways away for our project. And so thinking of us as middleware is a reasonable mental model.
And you just had a great point, by the way, which is, you said you're a blockchain out of necessity. Is there a way in which you could see this ecosystem evolving so that you didn't need to be a blockchain, so that there could be applications that connect chains that don't require their own blockchain, their own node system, their own level of decentralization, where basically you can piggyback on top of existing, almost like the parachain concept, attaching yourself within the chain. Is that economical to be a blockchain, or is that just kind of part of the bootstrapping process, and that eventually this could look different from that?
I think certainly when we started, there was no way that was possible. You can do it without a blockchain, but you change the design space that you're kind of working in, and you kind of constrain yourself in different ways. The biggest constraint, and the primary reason we did sort of try to piggyback off an existing chain was tokens, and specifically gas tokens. So if you want to have a transaction that bounces across multiple chains, and you're trying to leverage their consensus layers, that means you're going to have to pay gas to them. And that kind of interrupts this user experience in a kind of awkward way, where you want to come to DeFi and you've got your Bitcoin, and that's, you want to enter this new space for the first time, but to do so, you need ETH. So now you got to go figure out where you get your ETH, but maybe that's actually what you wanted to do with your Bitcoin in the first place, was to enter the ETH ecosystem and, help flip it, or whatever it is that your goals might be. But I think today we're getting closer to a point where you can think about leveraging, at the very least, you can leverage other technology, right? So, we didn't have to invent our own consensus protocol. It sounds obvious, but back when we started, that wasn't so obvious. I think, today you're getting closer to a stage where you wouldn't even have to implement your own consensus protocol. You can just, pick something off the shelf and sort of modify it a little bit, and that comes with all sorts of, nice security guarantees. That certainly makes things easier.
Got it. And James, I'd like to shift over to you and kind of ask you the same basic question, which is, What is Celo? What does it solve? Sorry, I said Celo earlier. I mispronounced it. Tell me a little bit about, as you were talking to a noob such as myself, when I first came across it, I thought you had an interesting approach. Obviously, through your kind of public address, bootstrapping it through kind of the mobile system and the existing kind of mobile infrastructure, and you guys took a very different approach. So I'd love to kind of hear your thought process and how you guys see your project and how you see it evolving.
Yeah, definitely. Like I said earlier, Celo is itself a EVM plus proof of stake. So we're running proof of stake in the wild, and we're working with Ethereum style smart contracts. The focus of Celo is on kind of bringing the benefits of decentralization to parts of the world that are underserved by the traditional financial system. So a lot of the work that we've done has been outside of the US and Europe, with people on the ground in Africa and South America and the Philippines and around the world. I don't actually get out and travel as much as the rest of the team does, especially lately. But the reason that we agreed to join Celo is because we admired how mission-driven and how much attention they pay to trying to do good and to help people. My team at Celo specifically works on interoperability projects. So what we're working on right now is an interoperability standard that can be deployed on a bunch of different chains. The idea being that the ideal way to do interoperability is something like IBC or XCMP, where you have each chain running the consensus protocol of the other chain. In Ethereum, we run a Bitcoin relay that actually tracks the proof of work and replicates the entire Bitcoin header chain on Ethereum. We would love to be able to do that for every chain everywhere. But as Lung said, it's not really practical. You just can't do it. It's too expensive. It's too time consuming to implement. So what I work on right now is optics, which is saying basically, what's the minimal interoperability that we can build and we can deploy in a matter of months, rather than spending 2 to 3 years implementing the ideal version. Optics is in essentially alpha on testnets right now. So we're linking a Celo testnet to an Ethereum testnet, and we're going to expand outward from there.
Got it. And you mentioned being active. The project is being active in a lot of kind of developing economies, and obviously everything that's going on with Strike in El Salvador and Latin America, it's a kind of a timely correlation. I'm curious your thoughts on what role you can play in this kind of seeming revolution. When I was first reading about your, Celo, it did actually, I did see some interlinkages between some of the things that are being done with, a platform like Strike. And being so UX focused, it seems to be a huge part of what you do, and that's a really a breath of fresh air in a world where that's not really a major focus. And obviously, I think regardless of your view about the crypto universe, I think we all want to see greater adoption, and that's a huge part of it. So I'd love to hear your thoughts on all of these developments that are very recent, how you see Celo fitting into that, and how you see some of these payments and remittance solutions potentially evolving into a DeFi solution for the unbanked.
Yeah, it's a really interesting problem because as an engineer living in the US, my day-to-day life is significantly different from someone living in the Philippines. Celo has paid a lot of attention to what is the actual, user experience of people in other countries. How do they interact with the internet in general and financial services in particular? A lot of this means heavy focus on mobile user experience, particularly on older phones. We can't rely on everybody to have the latest iPhone. We like to think about the mobile phone number as an identifier that's persistent for a human being. And so we have some great open standards for how you can have a persistent identity that's based on the mobile number, and you can custody funds and access financial services using your mobile number. Really, I think that a lot of the journey for things like Celo and for Strike is learning how to go where people are and build services that are useful to people with a very different life experience than us.
Yeah. We've all seen ever since last summer how DeFi has exploded, and much of the use case so far, especially from a vantage point for someone like myself who comes from finance, is seeing kind of the financialization of a lot of crypto use cases, which we can sit here and probably have an entire conversation about whether that's a good thing or a bad thing. I think we can all agree that regardless of your ethical viewpoint about that, that it has served a great proving ground and a great experimental landscape for a lot of these different solutions to test themselves and to kind of stress test. But I think you just made a great point, which is to really move to, those are very narrow use cases that are being applied right now. And what you're referring to, and I think what both of you guys seem to be trying to solve, is really reaching a wider audience. I'm curious, by the way, when, again, excuse my ignorance, but in using a kind of the mobile number as your public key or your public address in some way, rather than a QR code, was the reason for that because it's simpler, it's more economical, or like you said, it's because some of the people that you're trying to serve have very, very basic access to technology, and a phone number is really ubiquitous. It's something that everybody has. And is that really kind of the broadest way to reach them?
Yeah, I think that what you want to do is you want to try to find the identifier that everybody already has and understands, and then figure out how you can safely and securely connect that to crypto. A lot of the interoperability projects that we work on, going from chain to chain, and I'm sure Ran has experienced this as well, is trying to find the software and the tools that people are already familiar with, and trying not to kind of shake up the user experience too much.
Yeah, it's a balancing act, right? So getting back to Ren, and I kind of wanted to dig in a little bit into the centralization aspect, and we talked about bootstrapping, and we talked about the end game being a decentralized or a distributed system, at least, and that obviously takes time. You can't start that way with most of these projects. Long, I'd love to hear kind of your view as to how Ren plans on getting there. I believe you need to be a node on the Ren protocol. You need 100,000 Ren tokens, which is around $35,000 at the moment. I mean, how do you try to expand the security reach and the breadth of security to improve decentralization? I'd really love to dig into this, because it's someone from my background that's always the sticking point that I think a lot of Bitcoiners really get nervous about with some of these trade-offs, right?
Yeah. I think so. It's actually a really difficult problem. So something that's kind of unique about a network that uses the kind of technology that we use is that you can't have a traditional proof of stake idea where your sort of portion of the network is equal to your portion of the stake. You have to discretize it, because a fundamental part of the underlying sort of mathematics is this idea of a distinct identity. And that is what your share of the network is represented by, which is why you can't bond an arbitrary amount of Ren and then have your stake kind of be proportional. It has to come in lots of 100,000, and every single lot has to have a unique identity associated with it. And then they get treated as a completely different. So when you shuffle the network around. You really kind of want to avoid having too many of the same identities owned by different identities owned by the same people end up in the same sort of place. So that's why it comes in lots of 100,000. I mean, this was a number that we set to kind of get to a 10,000 max node size, which we felt was reasonable. And at the time, Ren was 5 cents, and so $5,000 for a node seemed kind of reasonable. We want to be able to move all of these parameters of the system off to governance in the future. We've already started sort of experimenting with different governance mechanisms. They're still, I guess, in that experimental phase where you can play around with the voting system, but then if some crazy vote gets through, we still have the authority to say, no, we're not doing that. That's insane. And that gives us the flexibility to kind of test what's actually going to work, and then get a bit of confidence that this is not allowing people to do silly things, and then let go of the reins. There is this trade-off because people are looking at setting up pooling services, which is a classic for people who don't have 100,000 Ren and they want to get together with their buddy, and maybe you have 50,000 and I have 50,000, so we get together and we can run a node together. It's a win and a loss in some ways, pooling services. It's obviously a win because you get more people into your ecosystem, you get more people interested in the project, they can start contributing, they can start thinking about governance, they can start earning fees, and then eventually work their way up to 200,000 Ren. But it's obviously a disadvantage in the sense that it can go too far that way, and you can have pooling services that make up the vast majority of your network, and then in practice your whole network actually only ends up being run by one organization. Because everyone's just delegating their assets there. So to kind of counteract that, we have tried to make the setup process for someone who does have the ability to run a single node as simple as possible. And since if you can cut out the pooling service, you obviously get to cut out the fees that they're going to take from you. And so if the user experience of setting up a node is truly simple and easy and accessible, then we hope that people will favor that when they can.
Got it. And James, what are your thoughts about how to solve this issue, and how are you guys thinking about it, Celo?
I'm not extremely concerned about it. Celo uses pools for voting for the proof of stake system. My general take here is that, as a Bitcoiner, if you're comfortable using Liquid, you should probably be comfortable using Ren or TBTC. This is, we're doing significantly better than Blockstream is here. Yeah. I don't think of this as a problem. I think of it as something to inform users about so that they can make good decisions on their own.
That's a fair point. And also, James, a follow-up question for you, kind of switching gears a little bit here. Again, for someone such as myself who's not as technically oriented as maybe some of the people listening in right now, but I think there's a wide variety of listeners. So I'd love to ask the question, you guys chose to use like the practical, a PBFT, I believe, solution, and it sounds similar to like a Ripple or Stellar. In what way does such a protocol help improve finality and help improve throughput, which are obviously kind of two main issues for any interoperability focused system?
Mm-hmm. Yeah, so specifically Celo uses IBFT, Istanbul Byzantine Fault Tolerance. We use a slight variation on the well-known paper there. It's closer to like the Tendermint than it is to the Ripple or Stellar kind of thing.
Okay.
The main benefit of using proof of stake over proof of work is that you can cut down the block times. I don't really want to get into the technical reasons why, because we'll end up being here for 2 hours. But it's reasonable to take the block times down like 50% or more. downside is that you lose the objectivity of proof of work and some other like really nice properties. I work on both proof of work and proof of stake chains all the time. I'm not a hard partisan either way. I think that they're both useful and have their place.
Got it. Okay, so before we kind of start to wind down, I'd love to take a giant step back here. One issue is, it seems like, continues to evolve is that the more blockchains that proliferate, the more interoperability is needed. At what point does this reach a saturation point? We've all kind of accepted that there's kind of a multiverse world that we've evolved into and will stabilize at some level. But it does feel a little bit like whack-a-mole in the sense that you can't continue to kind of try to scale if you're constantly trying to kind of horizontally bridge. So, if you're trying to kind of think about the eventuality here, I'd love to hear both of your thoughts as to how many chains do you think are needed, and where does interoperability end, and where can it kind of start to scale vertically and develop kind of vertical solutions on top of the existing ecosystem before it kind of hits a point beyond what's necessary? Long, maybe we'll start with you on this one.
Yeah, that's so I think to some extent this comes back to something that James said at the very beginning, which is that this sort of like point-to-point becomes completely unviable, because if you imagine you have 10 chains, point-to-point means you need 100 bridges. But if you have 100 chains, point-to-point means you need 10,000 bridges, and each of these needs to be independently maintained. It has its own costs associated with it. It needs its own economics. It's just not viable. So the best you can do is sort of a hub and spoke style model where you have some standard or some system at the center that everyone interrupts with that. That's certainly made easier by, Ren just went through this thing called blockchain blitz. We added like one chain a week to our protocol, and it was insanely hard. Even considering standardized instruction sets. So, when we were looking at doing this, we said, okay, well, we're going to restrict ourselves to just EVM and Web3 compatible chains, because otherwise there's just no chance. And even then, it was really difficult. We spent a month working on it, and then, we're able to sort of smash out a couple in quick succession. And we were hoping that, we were like, cool, that's all the major chains that are kind of showing a little bit of traction at the moment. And by the time we were done, there were a whole bunch of new chains that were showing traction at the moment. And I think there's going to be, I don't know where that limit is. It's not a technical limit. I think it's not going to be the kind of thing where we hit all the different technical nuances and trade-offs and then we stop getting any more chains, because that's just not how it works. But we will see this natural limit where interoperability standards just can't keep up. And the benefit of being hooked into the ecosystem versus the benefit of being able to go off on your own and be your own chain stops, it sort of starts going the other way, and people stop trying to produce their own L1s. I think we're not getting there yet, though. I think we're still a little while away from that. I would like to be there, but yeah. And I think this is where standards like what James was talking about are really important. Something he said at the beginning was, he wasn't exaggerating. We spent, TBTC spent ages on this, and Ren, we spent 4 years on this, and I'm not going to say it's the ideal solution, right? There's tons of ways we can improve it. So yeah, the standards are going to be crucial for this.
Great. James, anything to add to that?
Yeah. So, you said most of it. I don't think you can ever say that there are enough blockchains. Someone is always going to want to try and build another one. We spent a lot of time building out the ideal way to do this, and Cosmos is doing that very well with IBC. The problem is that for any new chain, building out an IBC connection or building out a light client or relay takes 2 to 3 years minimum, getting it really good and stable and ready for deployment. So I think that the approach that I've taken and Ren has taken is that we want to try to minimize the overhead for adding new chains, so that we can pick and choose which places are worth connecting to the broader ecosystem, given that I have limited hours in my day to work on this.
Fair enough. Well, gentlemen, I think that's a good place to stop. I have a million more questions that I'd love to pick each of your brains on, but we'll have to save that for another time. So it was great meeting both of you, and thanks a lot for your time.
Thanks, guys. Bye.
The ambition to succeed starts with a vision. We have translated that vision into the capacity to create a world that could be very different from the one that is today. A question that we must ask ourselves: what's next for finance? It's only when you question the ordinary that the extraordinary is revealed. Once you catch a glimpse of it, it becomes your reality. A reality that pulsates with sustainability, affordability, and financial innovation. Visit plentydefi.com to get started.
We are back with the Global DeFi Summit. We've had 9 hours of live content bringing you everything that you need to know in the DeFi space. We've had some fantastic speakers, and a huge thank you to our sponsors from today that have made it all possible. Now, don't go anywhere, because our final panel of the day will really shine light whether you're a retail investor or an institutional investor on how to have some DeFi metrics, how to really break them down for some successful investing moving forward. So I'm going to pass it over to Karen, who will introduce the speakers for the next discussion.
Hi, everyone. Welcome. As investment in DeFi has continued to grow, the metrics for identifying successful DeFi projects may differ for retail versus institutional investors. Complicating matters for investors are ongoing regulatory questions, threats, and risks related to security breaches and scams. In the last year, it's been reported that DeFi rug pulls and exit scams formed 99% of all crypto fraud in 2020. DeFi-related hacks now make up more than 60% of the total hack and theft volume in 2021, a large increase from only 25% in 2020. Before we dive into these questions, let's go through a quick round of introductions. I'm Karen, and I founded Blockchain Intel to identify fraud on blockchains through analytics. Earlier this year, we expanded that mission and became part of AppDome. In addition to blockchain-based apps, we are now helping to provide threat intelligence and securing apps. With many investors exclusively using mobile apps to transact, we help cryptocurrency exchanges, banks, wallet providers, and app publishers in financial services and other industries to secure and preempt fraud. Now let's go around and start with Henrik.
Hi, everyone. So my name is Henrik. So I'm the co-founder of DH, and DH is a decentralized asset management protocol that's currently running on Ethereum, and very soon it will launch on multiple chains. I'm also the co-founder of MStable, which is a stablecoin and AMM project. And I'm the CIO of Apollo Capital, which is a leading crypto asset management firm in Australia.
Welcome, Henrik. Barney?
Hi, everyone. I'm Barney. I'm a co-founder of Vega Protocol, which is a protocol and sort of blockchain and sidechain to Ethereum and other chains, which is focused on high-quality, professional-grade, and capital-efficient derivatives trading that's completely decentralized and non-custodial.
Thanks, Barney. John?
Hi, thanks for having me. I'm John Farjo. I'm co-founder of Lunar Crush. As we say, without communities, there's no crypto. We bring transparency to cryptocurrency investing by providing clarity around community activity. That looks something like us tracking a few million social posts a day and trying to understand as best we can what's being talked about.
Thanks, John. And Tom.
Hey, everyone. Tom Shaughnessy here. I help run DeFi Ventures. So we're a venture capital firm. We also have a research division and a labs division. I've invested in 40 or so names. We have a keen focus on helping projects with token econ and strategy and their exposure. Hilariously, I just recorded with Barney yesterday, and he's a portfolio company of ours, so super excited. Thanks for having me.
Great. So for you guys in your retail and institutional hats on, what metrics are most important? Liquidity in terms of total value locked, token balance changes on exchanges, or price to sales ratio, or adoption metrics such as growing unique address count, or inflation rate? Which metrics are what you find important to first retail and then institutional investors?
I'm happy to start, if that's okay. So, I think you really need to dig into the numbers a little bit behind some of those metrics, right? So like a few years ago, we saw some blockchains having very high transaction counts, for example, but some of those blockchains had like 0 or no transaction fees. So those could be easily manipulated. And I think the same goes for some of the metrics in DeFi as well. So TVL, for example, is a very popular metric. Firstly, like a high TVL could mean that the project is actually highly capital inefficient. So, for example, very high collateralization ratio means that the TVL will be high, but that's not necessarily a healthy protocol. In some other cases, you can see a kind of TVL be boosted by deploying non-working capital, if you like, to boost that metric, just like transaction count was boosted on some blockchains. So you really need to look at how the TVL provides value to the protocol. And I think the same goes for other metrics as well. So like trading volume is another popular metric for DEXs, for example. But then you need to keep in mind that order book DEXs are very different from AMMs, for example. So if you have an AMM, the only way to update the price of the AMM is through trading. So that will kind of by pure arbitrage lead to a lot of trading as the prices move in crypto. So it's not really comparable to order book AMMs. So I think you really need to look beyond some of the headline numbers here. And when it comes to early stage DeFi, I guess growth rate will be the most important metrics. So like growth of capital committed, activity, growth of users, and so on.
Yeah, cool. I agree with a lot of that. I think I certainly think it's very easy to have headline metrics that are maybe sort of vanity metrics like TVL, where you can kind of, especially in crypto where we are now, where crypto is kind of serving the needs of crypto people. And one of the things we sort of thought when we started Vega was we were very interested in building things that could be used outside crypto and could be used in the same ways that finance is used in the rest of the world. And so we look a lot at capital efficiency particularly, and we also look a lot at like cost per trade. And so when you look at the TVL and how efficiently that's deployed, but also when people access liquidity, what does it cost to access that liquidity versus what it would cost in alternative systems? We look at optimizing for those things so that the people who are the ultimate end users of this stuff in 2, 3, 4, 5, 10 years time are getting value for money and getting something that's actually a useful product.
Yeah, I jump in there. I definitely agree with Barney. Sorry, John. After you.
Go for it.
Oh, awesome. Thank you. Yeah, no, I definitely agree with the other panelists here. I mean, one thing I would say is past life, I worked on Wall Street, and I kind of miss how we could update our comparables every day and quickly and easily compare metrics that mattered for different sectors, whether it be a certain cloud segment or the carriers. It made life a lot easier, but that was a very mature industry. I think that crypto is nowhere near the spot where we could compare metrics easily or dig into any type of comparable fundamental analysis. I just think it's still too early. What I do think, or what I would point people to, is you really have to find out what is important on a project by project basis. So, I'll throw a couple examples out there, but something like a cross-chain exchange like Thorchain, Disclosure We're Invested. I mean, something like that, the amount bonded on the security side in Rune and value is extremely important because it has to secure the network. And the amount in pools is different. But if you look at something like Uniswap with concentrated liquidity, you might not need as much liquidity as you need on, say, SushiSwap. So if you compare the TVLs there, it's going to look unbalanced, but in reality, you have two very different stories. So I would just say that I would spend the time to figure out what metric is important per project, and then just track the growth there.
Yeah, I think on the TVL side, I think one thing that's really that we look at is the velocity of that. How long has it taken them to achieve a certain amount? And I think there are certain narratives out there. One that's hot on my mind because we just talked to them recently was QuickSwap, which built on Matic, and it took them a whole month to get $1 billion in TVL from zero. So I think that there's things like that to look at. But I mean, from our standpoint, what we love to see is the growth of unique individuals talking about these projects. If we see that it's just a few people talking about these things on social media, it doesn't hold well for a strong growth going forward with TVL, with people using the application or anything like that. So we love to see a very broad-based group of individuals that are frequently talking about these projects organically. And this doesn't mean hiring a few influencers. This means that looking at the actual users that are posting of these applications and watching that velocity increase and expand. So we look for that a lot.
Yeah, and so are you guys seeing a difference between the retail investors and the institutional investors? And I would say even, you might have some traders in there that are not necessarily institutional, but they're certainly taking advantage of the decentralized exchanges and DeFi right now. So what are the differences that you're seeing in these investors, and how does that translate, if at all, to the metrics?
That's a hard question, I think. But I think perhaps institutional investors are a little bit more long-term, perhaps. Maybe they're looking more at the team, if they're able to deliver kind of over time, if they're able to pivot if necessarily. Like we have seen projects like Land, which is now called Aave, and Haven, which is now Synthetics, take off. They didn't take off for some time, right? But then they had to pivot, and now they're very successful. And I think there were some institutional investors that were early into those projects. They saw the potential of the team, and I think maybe that's a differential factor. But I'm sure there are plenty of retail investors that are long-term as well and looking at these metrics. But I think in general, crypto markets are fairly inefficient. So doesn't matter if you're institutional or retail. I think it's possible to outperform if you do the fundamental work and look beyond the memes.
Yeah, I think this first thing I'd say is there's something you have to distinguish between investors in the token and investors as in users of a protocol. So there's a difference between someone who's going to buy the Uni token as an investment because they think that protocol will grow, and someone who thinks they want to use Uni for their day-to-day trading as an institution. And that's quite important because I think you get institutions who would invest in a protocol because they see it growing, but they couldn't actually use that protocol in their day-to-day trading, for instance. And then the other big difference that I see is the scale difference, and that's effective. Like if you're a retail trader and you want to put a trade on that's $1,000, $5,000, something like that, it's relatively small. You can get involved in a protocol which has relatively low TVL. You can get in without moving the book too far. Whereas if you're an institution deploying $50 million of capital or more daily, some of the opportunities that look great are no longer great if you can't actually get in any size that's useful to the institution. So I think one of the things we see is just the time at which you get in as an investment, as an early stage investor, as an institution like a VC, versus the time at which you can actually usefully trade on the protocol as, say, a trading institution. That just depends on when that's ready and when it can offer enough liquidity and enough sort of low enough slippage, and also risk management comes in again. completely new protocol, which is untested. As a retail person, you might be like, yeah, I'll put $500 in there, and if I lose it, I lose it. Whereas as an institution, you've got to talk to your LPs and explain why you got hacked or rug pulled or whatever else and lost this portion of your portfolio. So there are just different forces at play which affect the sort of stage at which you're willing to get in, I think.
The question's on the difference between the institutional and retail investors. I missed the beginning, sorry.
Yes, the question is difference between retail and institutional.
Got it. So I mean, we're basically focused on early stage venture deals, but what I would say is I think there's a pretty big, probably a huge gap in the traditional institutional investors and the on-the-ground crypto investors. I think a lot of the institutional investors, the traditional ones, are just getting smoked, buying these horrible deals that their traditional friends pitch them, and they're just so far from what's important in crypto that I think they're going to lose a lot of money, and the native crypto investors are going to outperform. As for Barney's point, I totally agree. I mean, the other thing I would add there is the big difference between retail and institutions is the retail side is investing their time and their brand and their know-how in these projects, and they're getting rewarded for that through things like retroactive airdrops and yield farming. So retail doesn't even have to invest money. They just have to invest their time and their interests and their, quote, investors. So I think there's a big difference between the retail and the institutional side. And I would just close to, agree again with Barney there. The large investors in the space, the large traditional ones, are going to have to allocate to liquid crypto assets. There's just not enough room on the private side deals, whether it be a private deal or whether it actually just be allocating as an LP or actually using the project itself.
I think, and Barney was kind of getting at this a bit, but like it's early for institutions. It is early. I mean, the amount of liquidity out there with what they're going to require, it's barely there. And they're barely playing in most of these assets. So I think it's really early. I look at that as also a massive opportunity going forwards. But I think, on the retail side, they're looking for user experience. They're looking for trust. They're looking for working with a brand that they understand. Like Uniswap has a brand. I'd say on the centralized exchange side, like there's a reason a lot of people, especially in the United States, start with like a Coinbase because they just recognize it. And I think the space is searching for that leader, that leading brand. And I think we're in the early stages of some of these projects becoming actual brands. And I think, consumers latch onto that. And so I think we're going to see a lot more marketing from a lot of these solutions out there in a crowded space. So I'd say look forward to that.
Okay, so let's switch gears now. I know we've talked a lot about what would make you invest or what would make a institutional investor look at a protocol or a project, but let's talk about the risks, right? We often don't talk about the downsides, and it's important to discuss certainly the recent developments from regulatory bodies. And in a June 8th speech, the commissioner asserted that unregulated platforms, in particular DeFi platforms, raise customer protection concerns because they may not monitor for threats, fraud, prevent money laundering, and safeguard deposits. And as we discussed before, there have been a number of recent DeFi scams, for example, rug pulls, where developers abandon a project and then leave with investors' funds. In addition, we have seen, and I have seen personally, many investors' wallets get compromised by hackers and millions of dollars lost. For example, we've seen wallets where the passphrase screen was easily altered by a hacker, rendering that wallet and all its users vulnerable. Also, malware that is supposedly installed to do contract tracing or things like that. Productivity apps will often be used to harvest credential data that is then used to illegally transfer funds. So the question is, are investors, retail investors, as well as institutional investors, looking to preempt fraud and be proactive? Or are they largely reactive today? And what can they do? What metrics can they look at to address this issue? And as you answer this, would it be helpful for investors to have threat intelligence? Or better yet, preempt or protect from fraud and hackers? And what are examples of that you've seen?
Yeah, I mean, you of course have things like security audits, right? Or smart contracts. You have credibility of team and so on, right? But I think, personally, when I look at the security of something in DeFi, probably the Linde effect is the biggest factor here, and it's been said many times, right? So how long has the protocol been running safely for? How much capital has it protected for how long? So I think on some chains we've seen a lot of hacks recently. Maybe those protocols have been forked from Ethereum, and the developers behind them have not maybe a deep understanding of how the protocols work. And I think that's definitely a big risk. And those have been fairly new protocols on newer chains. But yeah, those are some of the things I'm looking at.
Yeah, and I agree with that totally. Actually, I think that those are all really good points. And I think to echo what Tom said in the answer to the previous question, actually, we're really early, and we're too. And this is another one of those places where we're too early. And what I mean by that is, when you look at traditional finance, I can guarantee you every major bank or fund has a security audit. I can also guarantee you the investors and the people who put the money in don't care what the results of the security audit are. And the regulators will check the results, and the regulators might pull them up on stuff. But actually, the way that the markets in the sort of traditional world work is they work on market-based stuff. So for instance, we have CDS, credit default swaps is a good example. The CDS tells you how likely a company is to go bankrupt. And if you want to know how an asset's going to perform, you don't get someone to write up a 30-page report on the security. You go look at the market and see what the market says about how likely this thing is to default. And I think, especially in crypto, where everything is dependent on code and everything is sort of market driven and everything is decentralized, you cannot have a government that's going to ensure, the FDIC sort of insurance type stuff. You need to rely on a market, because you're not going to get the right stuff out of just kind of people doing some audits and getting some reports. And I think, as Henrik said, the how long a protocol's been alive and not been hacked, and those things are good metrics and useful stuff. But I actually think until we have, and some of the sort of on-chain DeFi insurance protocols are starting to do this, until we basically have a price that you could look at and go, well, this is giving me this yield, but for this yield, I'm taking this much risk because the cost to insure, 100 DAI that's in this protocol locked up is X. Until you have that, and you can say, hey, what's the difference between the yield I'm paying and the risk I'm taking? Until you have a market for both of those things, you're effectively blind as a user of those protocols, unless you're a kind of technical guru, and even then I think you're going to be in trouble.
The credit default swap one is interesting. It's kind of funny, I guess. In our space, that would be like the the cost to get cover on Nexus Mutual, where buying cover for urine is 2 or 3% a year or something, and buying something for like Alchemex is much higher, 20-30%, because it's newer, a little bit riskier, but it's secure. But I think everyone gets my point there. But I think a lot of people lose money on early stage yield farming. I mean, last summer was really DeFi summer, but you gotta weigh the risks on how flashy the website is, who the developers are they anonymous or not anonymous? If they're not anonymous, they actually have a personal brand to ruin if they screw people over. Is there an audit? I mean, most of the protocols that get hacked have audits anyway, so is that really worth it? You change one line of code and that audit is completely outdated. So yeah, to Karen's point, I definitely think threat intelligence is important, but it's all a spectrum. You have to have a different risk reward modeling in your head, depending on, I guess, the stage of where a project is, and getting into institutional security for funds, and having your entire Fort Knox of a system with multi-sigs and that whole thing is a whole nother conversation, I guess, for another time.
I think that there's certain best practices that are being formed, and we don't have best practices yet because it is so early. But I know that there's groups such as like Hackin out of the Ukraine that will audit different applications. A lot of exchanges use them. But I think on the consumer side, I'm going to give a different example. Let's talk about automotive. In the automotive space, you've got organizations like JD Power and Consumer Reports. Those give the consumer at least a head start because they've done an audit on every vehicle. Some of those vehicles get the car of the year, and people rush to the car dealerships to go buy them because they get car of the year because the work was done for them. And then what happens when they buy that car? They apply insurance to that vehicle purchase because they don't want to get a rug pull on buying a car. So I think that's a really good parallel to say, if I was participating in a DeFi platform, bake that into the user experience, make it an option. Companies like Expedia do this. When I book a vacation, I optionally can purchase insurance. Yes, it's going to cost me more, but there's certain protections that go along with it. DeFi is lacking this. And I think these are all opportunities. And I think until these are solved, it's kind of limiting the audience to a much more technical oriented individual versus more mainstream adoption.
Yeah, and just to go drill into that a little bit more on the consumer side, especially as a lot of investors are using their mobile phones, right, their mobile devices to manage their transactions. In addition to this insurance, what about the security of the apps and the security of their private keys? How do you see the industry responding to that? Or is that something still early and is extremely vulnerable right now?
I think it just adds another layer. And if you sort of think about it, where we have these non-custodial protocols where you trust the protocol to hold on to your funds, and your wallet is just another bunch of code you have to trust with your funds. And so effectively what we're doing is we're just creating these different bundles of code that at different points in time are looking after your funds. And the same thing applies to your wallet. You might be using a really cool flashy wallet app that claims to do multi-sig, and you can recover by having like guardians or whatever and people in your network and all this kind of cool stuff. But if the fundamental app can leak your keys to an attacker somehow, then the rest of the security model is broken. And it's exactly the same problem as with a DeFi protocol. It's probably just that there's a slightly more understood problem space and security space because we've been working on it since sort of 2009, 2010 with Bitcoin, rather than sort of the last 2-3 years with DeFi. So we're probably a little more advanced and further on in understanding the space there, but it's the same class of problem, I think.
Okay, great. So to end with, what are key metrics that you think investors aren't looking at and should be, or take it a different way, in the coming year or coming years? What do you think is going to change as the space develops? What is going to become more important for people to track?
Well, one thing I'd like to point out is, like, today you have real economic yield, right? And that will increase over time as projects mature. But today you actually have some of the projects that have been around for a while actually having a real yield that is comparable or exceeding the yield of high dividend yield stock or something like that. And you combine that with a high growth in DeFi, which I think is pretty amazing. So look beyond kind of inflationary rewards and at the real economic yield that some of these projects are generating today. I think it's quite amazing, and we'll see more of that in the coming years.
I might be biased, but I'm going to say community activity. The correlations to adoption of these protocols, various projects built on top of them, price movement, TVL, all of it is talked about on social media, especially Twitter, but on a much more broad scale everywhere. If you're not looking at community activity, you actually have no idea how many people may or may not be coming into a project. All you're looking at is numbers, which are consequential. People that are coming into these protocols, they almost all talk about it. They can't stop talking about it. And a lot of that goes along the lines of, a lot of these individuals in crypto are almost borderline religious. Look no further than Bitcoin, look no further than the Ethereum development community. People don't stop talking in this space. And just as an example, a year ago where there might have been 200,000 posts a day, there's now up to 2 million. The whole space has grown 11 times in the amount of unique individuals talking about crypto over the last year. So we expect that to continue to grow. So it's also why we're very bullish on the space right now, because it has not gone down. So I think that's going to be very important to look at going forwards.
So I think the big one for me is capital efficiency. I think that people are going to start looking at the efficiency of the deployment of their capital. And I think Uniswap with V3 have fired the starting gun there. When you look at the stats for the value locked versus the amount of trading it's facilitated, what you realize is that that's going to become super important. And I think that's just only going to get more and more competitive. So I think that's a big place. And then the other two things I think of, scalability, so kind of the ability to scale up to larger size and more people entering into a given protocol, and the sort of sustainability of yield. And what we're seeing at the moment is, if you can sell a bunch of tokens for loads of money because you've got a sky high valuation, then you can give that money out to people and you can kind of fund things to keep going. But you've got to have a sustainable yield. And so one of the things we're going to start to find out is which protocols are offering a yield that's going to keep going after the money runs out, or after issuing the tokens is more based on the fundamentals than some kind of crazy valuation, and which ones can't. And I think sort of sustainable yield and high capital efficiency alongside that are going to be the things that give you the standout protocols versus the rest.
Yeah, I'd say Barney hit it on the head. Capital efficiency is obviously extremely important. And I do think, kind of echo my earlier answer, just a project by project basis, understanding what metrics are important is really valuable. But also to echo Barney's point, I mean, last summer was insane with yield farming. These projects were obviously in and out of biz in 24 hours or 120 hours, pick your kind of metric there. We're starting to see projects launch and get significant adoption without launching yield farming incentives, which is kind of interesting to kind of see. There's a couple examples of that, but I mean, if you can look at Thorchain, you can look at Zapper, Gitcoin before the airdrop, things like that. Super, super important. So you're starting to see kind of a normalization of that, where products are finding product market fit beyond people just chasing a yield. But we're also trying to keep an eye on any new metrics we can track. Like for NFTs, we want to see them get better pricing through things like fractionalization and things like Upshot, where people can actually price through the will of the crowd. So there's a lot of things we're looking for, but yeah, we just want to see the space mature.
All right. Well, thank you guys. It's been a pleasure talking to you, and thank you for your wisdom and your thoughts here. Hope to speak to you again, and hope you stay for the rest of the conference. Thank you very much.
Awesome. Thanks.
What is the future of decentralized finance? Affordable, decentralized, and sustainable. Experience the power of DeFi in ways you've never experienced before. Plenty allows you to use DeFi tools that you've grown to love and adore, but without the crazy fees associated with proof of work. Enjoy sustainable yield farming programs that are cost-effective, liquid, and built on the powerful Tezos blockchain. Visit plentydefi.com now to get started.
Well, we've had some amazing conversations so far today. What a fantastic array of speakers. We've had 85 people from all over the world, expertise in DeFi. We've covered layer 2 protocols, Ethereum 2.0, future infrastructure and applications, 2022 and beyond, and so much more. So thank you so much for everyone for your participation. I'm now going to turn to the event organizers themselves, the guys that helped make this whole thing happen and put together such a fantastic event. So I'm now going to turn to Alon and Adam to give their final closing remarks for the day.
Boom. Adam loves it when I yell boom at the beginning of every recording, so that I do it extra when Adam's on. Hey, everyone, thank you so much. Oh, you were muted for a second there, Adam. Jessica, you absolutely killed it. Thank you so much for hosting again and being a part of our events. You did an amazing job, and I think you put it all together very well. So thank you, thank you, thank you. Adam, you killed it, dude.
Dude, what is it? Jessica said 9 hours of content, over 80 speakers, 22 sessions of like the who's who in the space, spitting out facts. updates, the most relevant information to date. I don't know, like thousands of viewers, thousands of attendees, and we still have, by the way, 2 more days. Like networking is set up for Saturday and Sunday, right? So,
by the way, in the middle of the day, I jumped to there's the coffee break area, whatever it's called in the system. Go there because you can actually just turn on your camera and hang with people. And I hung with one dude, and in the time zone he was in, it actually turned to be his birthday at midnight his time while we were hanging. It's such like a cool situation being global here, and we had a great time. It was really, really funny. So please, join the networking. What else?
quick plug about DGH. Yeah, we've had people kind of circle in and out. So give the spiel.
That's true. So I gave the boring, the long form 5-minute version this morning. But Draper Goren Holm, we're an early stage blockchain venture studio and fund. So if you are an early stage company or interested in investing in early stage companies in the blockchain space, get in touch with us. We want to write a check to your company before anyone else. So it's never too early. If you're building something, come find us. So drapergorenholm.com.
Yeah, and the next summit we have is the NFT summit, August 11th, also online. Maybe we'll do some in-person gathering depending on what the situation is.
That would be cool. Well, for sure on like Super World or something like that. And we'll do another one-day event like this. And then at the end of the year, the really important and exciting one is the LA Blockchain Summit. It's feeling more and more every day like it's going to be in person. So, knock on wood, really exciting stuff. So LA Blockchain Summit, that's the one to put in your calendar because you'll actually have to travel for it.
And also with that LA Blockchain Week, a week long of events that complement LA Blockchain Summit, independently run by a bunch of different communities and organizations throughout LA and all over the world. So a lot coming up, a lot of exciting stuff. I don't want to bore everyone too long with us on stage. I think the whole point is just for us to say thank you for being here. Thank you for being awesome. Thank you for sticking around. 9 hours is no joke. Thousands of people watching, attending, viewing globally is no joke. So yeah, let's hand it back to Jessica to wrap it up.
That's right. Thank you. Let's jump into that coffee room thing and give each other a virtual high five if you're still online.
Yeah.
So a huge thank you to Draper Goren Holm for putting this whole amazing event together. It was great to be there with everyone virtually from all around the world. And as the guys have said, make sure to check in for the networking as well for the virtual booths as well and expo floor. You can still check those out. And there's 2 more days of networking to be available. I'd also like to thank you all for joining, tuning in and interacting on the chat. And now as a final recap, I'd like to thank the sponsors for today that really made the whole event possible. So we have Plenty DeFi, which is the title sponsor of the show. Gold sponsors are Circle and Ranger Protocol, Scale Swap and Lunar Crush, and everyone else. A huge thank you. I hope you guys enjoyed the good day. You can rewatch some of the sessions on the social media live streams and see you all again next time.
Time is ticking away. Ditch the banks and join the DeFi movement on Tezos blockchain. What if we told you there was an affordable, fast, and sustainable way to leverage the power of decentralized finance, all the while empowering the next generation of finance? A proof-of-stake implementation into decentralized finance, taking up to 2 million times less energy than proof-of-work networks. It's time to start caring about your impact. It's time to care about the future. Visit plentydefi.com to get started. What is the future of decentralized finance? Affordable, decentralized, and sustainable. Experience the power of DeFi in ways you've never experienced before. Plenty allows you to use DeFi tools that you've grown to love and adore, but without the crazy fees associated with proof of work. Enjoy sustainable yield farming programs that are cost-effective, liquid, and built on the powerful Tezos blockchain. Visit plentydefi.com now to get started. The ambition to succeed starts with a vision. We have translated that vision into the capacity to create a world that could be very different from the one that is today. A question that we must ask ourselves: what's next for finance? It's only when you question the ordinary that the extraordinary is revealed. Once you catch a glimpse of it, it becomes your reality. A reality that pulsates with sustainability, affordability, and financial innovation. Visit plentydefi.com to get started. Time is ticking away. Ditch the banks and join the DeFi movement on Tezos blockchain. What if we told you there is an affordable, fast, and sustainable way to leverage the power of decentralized finance, all the while empowering the next generation of finance? A proof-of-stake implementation into decentralized finance, taking up to 2 million times less energy than proof-of-work networks. It's time to start caring about your impact. It's time to care about the future. Visit plentydefi.com to get started.